these companies to make the decisions they want to make?
I think a lot of bank management teams are talking about a holding pattern. So there's more optimism relative to Liberation Day in April, but they're still in a wait and see mode as to how things shake out. There's still a lot of uncertainty, but on the bright side, banks are seeing transactions and credit quality is holding up really well. So blue skies on that front.
Long may that continue. Herman Chan of Bloomberg Intelligence. Herman, thank you, sir. Going into earnings, HSBC downgrading JP Morgan, Goldman and Bank of America opting for a cautious stance after a major rally. HSBC's Sol Martinez joins us now for more. Sol, good morning.
Good morning.
That's quite a downgrade going into earnings season. Yeah. And some of those stocks have now got the equivalent of a sell, I believe. Just help us understand why.
Look, we just think for the universal banks and for the investment banks, valuations are unattractive given this still elevated uncertainty on the macro side. So the money centers in Goldman and Morgan Stanley are up 20 to 40% over the last 3 months. They're trading at anywhere between a 10 and 50% premium on a PE basis to their 10-year historical averages. You sometimes get the point made that they're still trading at pretty big discounts relative to the S&P 500. But they're no longer at outsized discounts relative to their history anymore. They're trading at a fairly narrow discount relative to their 10-year average, or close to the 10-year average discount relative to the S&P 500. And obviously, keep in mind that the S&P 500 is over 20 times. The composition of the S&P 500 is very different than what it was in 5-10 years ago. It's more tech heavy. It's more growth stock heavy. So you do have to factor that into your views as well. The other thing I would mention is the deregulation side is certainly a positive. And one of the manifestations of that is buybacks. Banks are going to ratchet up buybacks. We increased our buyback estimates after the favorable stress test a few weeks ago, but they're buying their stocks back at 30% higher stock prices than they were a few months ago. And in fact, if you look at our estimates, we increased the dollar value of our stock buybacks, considerably going into the results. But our share count estimates didn't really change because it was fully offset by the fact that they're having to buy back stock at much higher prices. Those buybacks are dilutive to book value per share. They're dilutive to tangible book value per share growth, and so we're not actually the number of stocks that they're actually retiring is not different than what we thought they were going to be a few months ago when our share buyback forecasts were much lower than they are today.
A lot to unpack there. I want to just stay on the deregulation theme. And there is this theory out there that for all of those years that you're talking about, a lot of them, these banks were treated as utilities, and they were not able to really generate the same types of pre-2008 profits that really made them more of a growth sector. Why do you reject the idea that some of the deregulation would allow them to behave a little bit more in that risk-taking way that could potentially lead the profitability to be much higher?
Well, I'm not making that argument. I'm not making the argument that deregulation is not good for them. I'm not making the argument that they're going to operate with less excess capital and that there's a potential to grow risk-taking activity, whether that be market making or lending. But they're not under-earning, Lisa. These banks are making returns on tangible common equities in the mid-teen range, high-teen range. They're generating value. They're creating value right now. They're generating. We did a report a few months ago where we looked at the ROTCE evolution or ROE evolution of big banks relative to 10-year Treasury rates to see kind of what the spread is. And they're not historically low anymore. So I do think ROEs are going higher. I do think profitability will go higher. But but in some of these risk-taking activities like market making, they're generating very elevated amounts of sales and trading income as it is. So they're not exactly not allocating a lot of capital there. And loan growth is a function of loan demand as well. So I don't know that you can make the case that they're going to grow lending in a really outsized way anytime soon either.
What about the other side of the balance sheet? John was talking about what kinds of efficiencies could be driven by artificial intelligence and certain technological upgrades. And we certainly have seen JP Morgan at the vanguard of a lot of that. How much could that potentially be a surprise to the upside that hasn't been fully priced?
That's a good question. I do think, and to be clear, we're more cautious on where stocks are trading at relative to the operating fundamentals. We don't have a negative view of operating fundamentals. In fact, we've been pretty positive on the backs until recently. And I do think they will get, especially the big banks, are investing quite a lot. JP Morgan was $16-17 billion annually, to over $10 billion for Bank of America. That does give the big banks a competitive advantage over regional banks and small banks. And I do think that, if they can grow revenues even low single digits, the efficiencies they get from technology and from the benefits of scale will allow them to generate some positive operating leverage. And that's that is part of the bull case of banks, as long as interest rates don't move down dramatically. If interest rates stay here, over the next couple of years, you do get operating leverage, you do get earnings growth, you do get EPS growth in the double-digit range. I think it's priced in, but that is a benefit for these banks.
You effectively undo some of the risk premium incorporated with tariffs, but your note came out July 7th.
Yeah.
That was ahead of this new end date we had timeline for the Trump administration. Now they punted to August 1st.
Yeah.
Do you need to put back in some concern about tariff?
That's a good question. You read the research now.
Page
Yeah, we
4.
did. We did reduce our cost of equity forecast. That's nice. I don't think so at this point. But our call is that valuations are not attractive given still elevated macro concerns, and that is obviously one of them. I can't predict what tariff policies is going to be, but I do think the macro dynamics there is more risk than there typically is. And if you do see tangible evidence that tariffs are going to move higher and that it will affect economic growth, then yeah, you have to factor in that risk premium that we built in early April, then undid, and now you're doing again, right? But so if tangible evidence emerges that it is having a real economic impact, then we'll have to think about what kind of risk, what kind of cost of capital we incorporate for these banks.
So this is Bloomberg. We always read the note. It's good to see you.
That's great.
Great to catch up. Thank you, sir. So confidence there of HSBC. A little bit of news for you. Over the weekend, you saw that full court press. The administration going after Chairman Powell, putting the pressure on him big time, from the president to the vice president to the NEC director, Kevin Hassett, with regards to, of all things, the renovation project at the Federal Reserve's HQ. This from Axios this morning. The Fed Chair Jay Powell has asked the central bank's inspector general to review its $2.5 billion headquarters renovation project, which has become a key focus of Trump administration attacks. This according to a source familiar with the matter speaking to Axios. That's the latest on that front this morning.
Because he's getting a lot of questions about it. He wants to talk to the inspector general, make sure he has the answers for why it is over budget.
Up next on the programme, we'll catch up with Mike Dowda of Roth Capital as investors await key inflation data. Plus, your higher back with your morning movers. Autodesk gaining after dropping. M&A plans.
flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The opening bell about 60 minutes away. Here's a flavour of the stock action so far. We're down about 0.2% on the S&P, down by 1/4 on the Nasdaq 100. In the bond market, yield curve steeper. Yields higher at the long end on 10s and on 30s, up by 2 or 3 basis points on a 10-year and a 30-year. Check out Japan, though. The epicenter for global bond market jitters at the moment. Yields higher across the curve steeper, up 10 on 30s, up 6 on 10s. That 10-year last summer was 80 basis points at one point. We've doubled in the last year.
And it comes on fiscal concerns with politicians promising more spending. The global implications here are significant because the Japanese buyer had nowhere to go but outside of their nation for yield. If they can get yield at home and that flood of cash stays within the boundaries of Japan, what does that do to the rest of the global bond market that has relied on these investors to prop up their own prices at home?
Not just bonds, but foreign exchange as well.
Exactly.
That dollar weakness story we've seen so far this year, that might have legs, particularly against the Japanese yen.
And how much does that really affect the inflation story in the United States? Because anything that we do import would be on the margin more expensive. Is that one venue, one way to offset some of the tariffs and pass the cost along to the ultimate consumer?
Dollar yen this morning, 147.36. With 1 hour to go until the opening bell, let's get away from bonds just for a moment. Let's get back to the equity market and get you some morning movers with Yahira. Hey, Yahira.
Hi, John. We start with shares of Autodesk. They are up nearly 7% here on our reporting that the software provider is no longer pursuing a takeover of its rival PTC. Talks of a deal had weighed on the stock in recent weeks, but no longer. But this deal, well, this merger would have ranked as one of the year's largest deals, not just in the software space, but overall. Next up, we have shares of Kenvue. This is the company behind Tylenol, Neutrogena, and Listerine. Shares are up nearly 6% as the company announces a string of changes as it faces mounting pressure from activist investors. The current CEO will be leaving, replaced by an interim CEO as they begin the search for a permanent replacement. Kenvue is also saying that it is looking for ways to simplify its portfolio. So another consumer goods company announcing some changes. And we end with Stitch Fix also surging up 7.6%. This is the company that gives you a personal stylist and sends you clothes. Well, it got an upgrade by analysts over at William Blair. Now they have the stock at an outperform, saying that they're gaining confidence in the new CEO's turnaround strategy. And I will note that this stock is up nearly 40% since its April lows. John?
Yahira, thank you. Some of the names to watch going into the opening bout. Lots of data to watch through the week ahead as well. Busy week. It includes CPI starting tomorrow. Later in the week, retail sales and jobless claims. With a look ahead, here's Mike McKee. Good morning, Mike.
Good morning, John. It is going to be a very, very busy week and an important one, too, for the Fed because much of the data are going to inform their decision that they have to make at the end of the month, the July meeting at which the president is going to expect them to cut rates. Unfortunately, the data are going to suggest otherwise, probably, at least according to the Bloomberg survey forecast. Tuesday, we get the CPI, and it's expected on a year-over-year basis to rise by a couple of basis points up to 2.6% from 2.4% now. And that would essentially essentially preclude any move at the end of the month. PPI may also show an increase, especially given the increase in equity trading over the last couple of months. The portfolio management category might be something to watch. We get the Beige Book, the anecdotal reports about what people are going to be doing, companies are going to be doing. And then, as you mentioned, retail sales. Retail sales expected to slow. That's a thumb on the scale. On the other side, we'll see. We get jobless claims. Do they start to move or not? And we'll see what Michigan sentiment tells us about people's thinking on inflation. The thing we want to watch for tomorrow is a pass-through of some tariffed goods into inflation. We haven't got much so far because there haven't been that many tariffs, but take a look at some of the categories to look for, even if we don't get a big move on CPI as a whole. Vehicles, parts, apparel, electronics, furniture, and household appliances, all things that come from foreign countries here. And then here's an interesting one, beer and soda. I'd sort of forgotten about this, but the tariff on aluminum raises the costs of the aluminum cans they come in. So those could go up as well.
Mike, the last read going into the next Fed meeting, there are some on the committee that might vote for a rate cut at the end of July. The chairman, based on his communications so far, certainly won't. He came in for a ton of criticism over the weekend, Mike. It looks like a new line of attack. Discussion so far this morning is the price of firing the Fed chair. Not a base case at the moment, still a risk and something we have to explore, Mike. How are you thinking about that at the moment?
Well, my guess is the markets would react quite negatively. The first question is going to be who takes over. And if it's one of the Kevins, as you've heard in a lot of the research, that might provoke a bad reaction from the markets. Now, if the president were to fire Powell, I don't think anything will happen in the short run in terms of the Fed, because the Fed will go to court to try to prevent it. The Supreme Court's already given them something of a carve out. And if you're going to fire somebody for a cause, you have to prove it. And I would just point to everything that's been happening in the courts and with Donald Trump. It takes a very long time. So this could take us into next year or longer for any kind of resolution. But if he were to have to leave, then John Williams would temporarily take over as the chair of the Open Market Committee, which is what's important. And Philip Jefferson would take over as the chair who runs the rest of the Fed. So there are procedures in place to keep the Fed going. It's a question of whether and when it could happen.
Mike McKee on tour. Mike, you enjoy yourself. It's good to see you, as always. Always in a cabin somewhere.
So there are 2,000 people who live in Victor, Idaho. I had no idea. I was looking.
What is he doing in said Victor, Idaho?
I don't know, but it looks really beautiful. It looks like it might still have snow there.
Because he has the fireplace on, and it's very hot right now in New York.
We've said it a few times on this program. This market will get a vote on all of this long before a court decides or the Senate has a confirmation hearing. This market will get its vote.
At this point, though, the market needs to see the whites of the eyes of some reality versus just jawboning, because this market is sort of immune to some of the threats just simply because there have been so many, and they have been fooled so many times that they just really don't want to get faked out again.
Tomorrow, we get some data. Mike Dada of Roth Capital writing this. Given the Fed's wait-and-see approach, prospective CPI readings may take on greater importance for risk assets in the months ahead. Mike joins us now for more. Mike, welcome to the program, sir. What are you expecting tomorrow morning?
Thank you for having me back on. So consensus is expecting a 0.3 rise, both headline and core. So I don't really think that is going to change the mood on the Fed. It's a very divided committee, as you guys were just discussing. I'm not super worried about a big inflation spike here. And the reason I say that is bond market inflation expectations are very low and steady. Some of the higher frequency data actually looks pretty good. There's a gauge called Trueflation, which is based on 80 million prices in blockchain technology. Super high frequency. So we have, year over year readings extending into almost mid-July here, 1.7%. So I don't think we need to worry about a repeat of that 3-year inflation overshoot, which was really an aggregate demand monetary policy story. The tariffs could definitely create some inflationary headwinds, but I think they are temporary, and the Fed probably is best to just look through them.
If that's the case, Mike, do you see this as a time for the Fed to be cutting, especially if this CPI print that we get tomorrow shows that ongoing disinflation, or at least not an inflationary trend?
Yeah, I think so. I think they're getting much closer to that point. Probably September. That's what markets are priced for. Fed funds futures are priced for just under 100 basis points of rate cuts over the next year. That sounds like a lot, but it's really not over a 12-month period if the economy is softening a bit at the margin. And I think, some of the data suggests that's the case. Not falling off a cliff for sure, but we are seeing a little bit of softness at the margin with, the most recent jobs numbers. And also, it looks like GDP underlying growth, real final sales to the private sector probably ran around 1% or so in Q2. So that's much softer than what we've seen over the course of the last, 2+ years. So I don't think it's inappropriate for the Fed to be starting to consider lowering policy rates here. But I will say this, the hectoring from the White House is wholly unhelpful. I mean, even if the administration were to convince Powell to step away from the Fed, and this stuff about the construction project is just a fig leaf. It's pretty obvious what's going on here. It's completely out of line in my view. But even if you were able to convince Powell to step down and someone else takes over, it's a committee. They operate by consensus. So it's really very unlikely to dramatically change the rate path in any event. So
hold on a second, Michael, because this is actually one key question that the market has, right? That people are questioning whether the market is pricing in some sort of firing of Fed Chair Jay Powell, and would it have that big of a reaction at all? Peter Scheer was saying no, that it is a committee and that people would look through that. How much does it complicate a message that actually would go the president's way if he followed the economic data, at least in your opinion? How much does it complicate that kind of messaging from a Fed that wants to appear independent?
Yeah, that's a great point. I think, if anything, this hectoring and the political pressure probably makes it more difficult for the committee to move forward with rate cuts. And because they don't want to be viewed as, a bending to political pressure. So I think, if anything, these kinds of shenanigans are likely to backfire. And it sets a terrible precedent going forward. I mean, the Fed should be an independent institution. We can look back at what happened with President Nixon when he pressured Fed Chair Burns to inappropriately run easy monetary policy, setting off a decade of inflation, which eventually culminated in double-digit interest rates. We saw a situation in Turkey where President Erdogan tampered with the central bank, wanted low rates, easy money policy, a currency collapse, and hyperinflation followed. So let's get back to basics. If you want low market interest rates, what do you need? You need price stability, and I think the Fed is well on their way to achieving that in terms of on-target inflation. And you need budget integrity. And the Fed has nothing to do with that. In the administration, in my judgment, and Congress are certainly not on that path with the so-called big, beautiful bill that was miles and miles away from an optimal outcome.
Jonathan's been talking about this Deutsche Bank note about the risks of, if Powell was to be ousted, are underpriced. What kind of market reaction could we see if we've come to that point?
Well, it's very uncertain. I think it's just a matter of setting a very bad precedent of political tampering, or the attempt to tamper with an independent Federal Reserve. And you look back at history, and politicized central banks don't achieve optimal outcomes. They might do something that helps the sitting administration in the short run. In the long-term, price is paid by the public in terms of higher inflation and lower real income. So it's really not the path you want to be going down. Very hard to say in terms of the very short term. I mean, what happens even if Powell were to step down? I don't think it really changes things dramatically in terms of where the Fed is headed here, given that it's a committee and the administration's not going to be able to completely politicize a majority on the committee anytime soon. That said, it's really a move in the wrong direction. It's totally inappropriate, and they should just stop it.
Mike, just to put a bow on it, given all the risks we've talked about, why are market-based inflation expectations so well anchored?
Well, I think they're well anchored because the Fed has achieved quite a bit of credibility here, right? I mean, they obviously had a big goof in 21-22 where we had inflation shoot up to 40-year highs. But, they ended up correcting that with 550 basis points of rate hikes, and we're somehow able to achieve a soft landing, avoid a recession, and now inflation has come down to much lower levels historically. So the bond market is giving the Fed the benefit of the doubt. The institution has really regained and re-anchored its credibility, and that's another reason not to tamper with the Federal Reserve in a political way, because if that credibility is lost, it could be very difficult to re-achieve. They certainly got very fortunate with this episode a few years ago. You know, why keep playing Russian roulette with credibility? Doesn't make any sense whatsoever.
Mike, appreciate your time. It's been too long. Let's do it again soon. Michael Dowder there of Roth Capital. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Yahira. Hey, Yahira.
Hi, John. We start with the latest on the flood disaster in Texas. The search for victims has resumed along the Guadalupe River after recovery efforts had to be put on hold yesterday following another round of heavy rains. More than 160 people may still be missing after the July 4th floods that left at least 132 people dead. Meanwhile, President Trump will head to the UK for his second state visit of his current term. In September, King Charles III will host the president and the First Lady at Windsor Castle from September 17th to the 19th. Trump called the invitation an honor and said the king was a, quote, beautiful and wonderful man. And 24-year-old Aussie Grace Kim produced one of the most impressive comebacks in golf to win at the Evian Championship in France. The former Youth Olympics champion recovered from 4 shots behind in a dramatic final round to defeat the world's number 2 Gino Thitikul. In Kim's 3rd season on the LPGA, she only had 1 top 10 finish in her previous 11 starts. That's your Bloomberg Brief, John.
Yahira, thank you. Appreciate it. Thanks for this morning. Up next on the program, we'll set you up for the week ahead. Plus, Mark Cabana at Bank of America as the pressure builds on Fed Chair Jay Powell and why they don't think this Fed cuts this year.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
I'm still relatively optimistic we'll land somewhere with the European Union. The Mexico letter was a bit of a surprise to me, given that they weren't negotiating one of these full reciprocal deals. It was really about steel and aluminum. But that said, we've got 2.5 weeks to go, and I expect to see a bunch of deals. And for those countries that don't have them, I expect to see those tariff rates go up.
That was the former senior White House trade advisor, Kellyanne Shaw. Her message this morning: the weekend's news is not for you. It's not for you. It's for trade partners. This is a negotiation. It will continue for the next several weeks and maybe beyond.
And guess what? The markets got the message before she even said it, because they said, look, we've seen this movie before. We're not going to freak out. We're still having a beer on the beach, and that's kind of where we are this morning.
No freak out at all. 41 minutes away from the opening bell. Equity futures negative by just 0.25% on the S&P. Similar move on the Nasdaq. Likewise on the Russell. The Russell, the small caps, down by 0.4%. As we count you down to the opening bell, your week ahead looks like this, and what a week ahead. Later on today, President Trump to make a statement on the Russia-Ukraine war. Tomorrow, CPI plus JP Morgan, Citi, Wells Fargo kicking off bank earnings. Wednesday, PPI, more bank results from B of A, Goldman Sachs and Morgan Stanley. Thursday, retail sales plus another round of jobless claims. And heading into the weekend on Friday, Mitch, consumer sentiment. Fed Chair Jay Powell under increasing pressure from this White House. Mark Cabana of Bank of America writing this: recent soft inflation readings raise questions of whether tariff inflation will emerge. If it doesn't happen by the September FOMC, the Fed may have to give up the tariff inflation ghost and start cutting. Mark joins us now for more. Mark, good morning.
Good morning.
That's not your base case, though, is it?
It is not the base case. The base case is that we will see inflation emerge, and we think we'll see some signs of that tomorrow. We think that what you will see in CPI is that there are a bit of uptick in core goods, especially with used cars. We think that you'll see some core services tick up as well. And we think that that'll give the market a bit of pause and cause the market to really ask itself, can we justify these 15 or so basis points of rate cuts that are priced in September, or almost the 2 full cuts that are priced by the end of this year? And we think the market will realize no. And then furthermore, on Thursday, when we get retail sales, our credit card data is pointing to a rebound in consumer activity. Our economists have core control, I think, at 0.9 month over month. Consensus is 0.4. So if you get both of those things, a bit of an uptick in inflation and signs that the consumer is stabilizing a bit, we think that there are very good cases for a market to start to question whether or not the Fed should be on hold. And let's not forget the fact that the most recent unemployment rate reading that we had was 4.1%. If you look at the full range of outcomes that the Fed has in the summary of economic projections, the lowest unemployment rate reading at the end of this year was 4.3. So we're out of bounds as far as a tight labor market is concerned right now with regards to the Fed's projections. So if you start to see this combination of data, then the market's going to start to pare back more meaningfully the almost 50 basis points of rate cuts by the end of the year. We think that'll result in some modest upward pressure on rates, some modest flattening bias on the curve, and we think it's going to justify our 10-year forecast for the end of the year at 4.5%.
So you believe in tariff inflation, not necessarily the ghost of tariff inflation. You're sort of rejecting the disinflation deity. I have to give you just a round of applause. Really, that was fantastic. Good job. But I'm just curious, at what point, if you do not see the inflation pick up, do you have to rethink your thesis?
Yeah, so as Jonathan noted, that quote that we posted, at some point, if you don't see it, the Fed's got to start to give up the ghost. And there are 3 CPI prints before September. September may well be the time. Now, I do think that we're all looking for tariff-related inflation. No one exactly knows when it's going to show up. There are anecdotes.
Hey, Lady Off, how you doing?
two individuals in the economy. It sounds to me like they're hearing it on a pretty broad-based level.
So in the realm of hypotheticals, of ghosts and deities, there's this question of what happens if the Fed cuts rates by 1 or 2 times this year, and you do see that stickiness in inflation. What happens to the long end of the yield curve?
It should steepen. You should price more inflation risk premium, much more than you're seeing right now. And that's one of the reasons why we like being long intermediate tenor inflation.
I don't see a lot of news today.
Swaps market,
There's just
or
not a lot of
break
news.
evens right now. Much of the inflation is really priced in the first year or so. So the markets believe that inflation is just a one-time impact. It's going to come and go, and then we're going to be back at 2%, no problem. But I think what we're seeing is that you're not getting that one-time shock as cleanly as you thought, right? If you listen to Fed officials and most economists talk about inflation, oh, it's a one-time shock that the Fed should just look through. But we're not seeing it as a one-time shock right now. We're collecting tariff revenue, right? It's over $100 billion that we're collecting this fiscal year. It's a lot more than last year. So the revenue is being collected, but we're not seeing that clean impact straight away. So why should the market think that we're going to see a clean drop-off in 1 year's time? The risk to
I don't know what we're going to do today.
Persistent impact of inflation, less sharp in the near term, but it very much could stick around for a while. And if you look at some of the
You watching the NQ?
we had with COVID, we all looked at the supply chain disruption.
I can move down to the
Fed
NQ.
has one, others have some. It went up quickly and then it faded real fast. But inflation went up and then it stayed somewhat elevated. It came down quite slowly. And we do see risks that you're going to see that with inflation. And businesses are extremely thoughtful and savvy about how they pass this through. So why would we think that it's just going to go up and down nice and neatly? We don't. We think that you want to be long inflation in the belly of the curve. It's not pricing that type of outcome. And we do think that if the inflation sticks, it's going to be around with us for quite some time. It's going to make achieving 2% inflation for the Fed.
Yeah, I think we're in the dog days of
The
summer.
market is likely pricing.
We're
right
just
now.
kind of
45
dredging
seconds on the
along
clock.
here.
You had a word there, the long end of the curve. I want an additional one from you on T-bill auctions versus coupon auctions. How's that going to change in the next 12 months?
Yeah, so we think and our clients believe that the U.S. Treasury is going to rely a lot more on short tenor issuance versus long tenor issuance. we titled our weekly this past week, The Wambulance to the Rescue, because I know
Yeah, I'll move down to the NQ.
Katie Craig, shout out on the team. Great title.
I'm watching both no
market
matter
believes that
what.
the weighted
No matter
average
which one I
maturity or the
show on
WAM
screen.
of the U.S. Treasury debt will be going lower. And if Scott Bessent has been charged with lowering long tenor issuance, he doesn't have a ton of tools, but issuance is a really big one that he has. And so there's all this focus on WAM right now. And there was an extremely elevated amount of focus.
I wish I hadn't asked because I'm running out of time.
Okay, just give me a few more seconds. But
You take any trades this morning?
That's it. Then it goes bang and commercial break begins. Mark, I got to go.
Okay.
I
10.
appreciate it.
WAM, shorter.
Mark Capana, Bank of America.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in.
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock.
41%.
About it that
That's pretty damn good, dude.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far,
What did you catch? Was there a pop at London,
our
or
perfect record? We're like a 4.0
did you catch
student
this
that is gonna
run
get a
up
B for
here?
the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting that. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing.
Looks like we're going to roll over to the View app before open.
I spoke to Jamie Dimon. He says that we should
almost
actually
9
prepare
o'clock
for
Eastern.
stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they sell?
I just need 1,400 to qualify this account.
Both is this uncertain environment
and start on
how long
funded
are the
again.
tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Gotta turn the lead box on.
And futures are down. Trade worries back in focus. 30 minutes until the start of trading. I am Shanali Bassett.
And I'm Danny Berger. Matt Miller and Katie Greifeld are off. Bloomberg Open Interest starts right now.
And coming up, dialing up the pressure. President Trump announces a 30% tariff on imports from the EU and Mexico. Meanwhile, the president and his allies open a new front against Jerome Powell, criticizing his handling of renovations at the Fed headquarters. And the view from corporate America. Wall Street braces for the weakest earnings season in 2 years. Danny, it's crypto, though, that's taking it away today.
It is. If you were looking at risk assets, you'd be surprised to know what crypto is doing today. Trading above 122,000. And all those crypto-linked stocks, they are soaring with that all-time high in Bitcoin. Shanali, Congress currently weighing multiple crypto bills this week.
You know what? We're also looking at M&A. There's a lot going on under the surface, spin-offs and activism. Kenvue is making board director Kirk Perry its interim CEO effective immediately as the company announces a strategic review on the heels of activist interest. But back to this morning's big headline. President Trump threatens that 30% tariff for Mexico and the European Union. However, he's keeping his door open for a deal.
So the European Union is talking to us. They want to open up their country. I would say Japan to a much lesser extent in terms of opening up their country. South Korea wants to make a deal other than tariffs. Right now, as you know, they're paying a substantial tariff, but they want to make a difference. So some of these deals, maybe I'll change them and maybe I won't.
For the latest, we're joined by Bloomberg Washington correspondent Tyler Kendall. Bring us the latest and how this is going to play out through the course of this week.
Yeah, hey, Shanali. Well, now that all of these trade letters have been sent out, we're waiting to see how negotiations are going to evolve from here. And of course, the big news over the weekend was that 30% tariff threat against the European Union. And we heard from the EU's trade chief saying that he will speak with his U.S. counterparts later on today. And the EU is going to hold off on its own retaliation until August 1st to let these negotiations continue. But a really key point here is that he went on to say that there is a new sense of urgency, in his words, for the European Union to engage with other trading partners. And Bloomberg News broke the story this morning that contact with other nations, including Japan and Canada, could be used for potential coordination between the nations against the U.S. We know that the EU Commission President Ursula von der Leyen, for example, today is meeting with Canadian Prime Minister Mark Carney. And it's also worth pointing out the EU did reach a tentative trade framework with Indonesia over the weekend, as we expect them to start to sort of shift focus here to perhaps Southeast Asia countries as well as the Pacific. Now, the 30% tariff is, of course, much lower than the 50% tariff that the Trump administration had been threatening. But still, our understanding has been that there was progress progress in these talks when it came to the European Union. Shonali and Danny, as you well know, the sector-specific tariffs enacted under Section 232 on the grounds of national security concerns really are a big sticking point here. The EU wants to see movement on autos, but I would also point you to the fact that some of these tariffs that haven't even come into play yet, like pharmaceuticals, are still hanging over these negotiations.
Meanwhile, in Washington, D.C. over the weekend, Tyler, it was a White House that continued to step up its criticism of the Eccles building, of the renovations happening there for the Fed. Is this a White House trying to lay the groundwork in order to oust Powell?
So this does seem to be a new argument that the White House has added to their list of criticism that goes beyond the idea of economic stewardship or the demand to lower interest rates. And the president and other members of his administration, including the NEC director Kevin Hassett, as recently as this morning, are elevating this accusation that you're discussing, that the head of the Federal Housing Finance Agency, Bill Pulte, is alleging without details that Powell misled Congress during testimony about recent renovations to the Fed's headquarters here in Washington. This would appear to be setting perhaps the legal basis for a case to remove Powell, which would, of course, have to reach a very high standard. But now you have administration officials calling on Congress to investigate this particular instance. Now, we should say that Powell has said that the renovations were not extravagant, and a Fed official says that all of Powell's testimony has been truthful. In fact, the Fed is actually saying that the renovations are going to help lower costs because it will consolidate their operations. But we do have the latest figures, with critics pointing to rising costs. The Fed's budget documents show estimates for the projects have risen to $2.5 billion this year, up from an estimated $1.9 billion in 2023. These are the sort of arguments that the administration is now focusing on.
Tyler, really appreciate that update. That is Bloomberg's Tyler Kendall out of Washington. Now, elsewhere, U.S. markets, they will be facing a tough test. Corporate America is gearing up for the unofficial start of the second quarter earnings this week. Big banks will be leading the way. J.P. Morgan, Wells Fargo, Citi, all of them report tomorrow. Joining us with some of the themes to look out for is Bloomberg's equity reporter, Alex Semenova. Alex, what are you looking out for?
Hey, Danny, with stocks trading near record highs, investors will be glued to corporate America's report cards when they begin firing them out this week. Wall Street is actually bracing for the weakest earnings season since mid-2023. Analysts see second quarter profit growth of 2.5%. This is according to Bloomberg Intelligence data. The good news is that low bar gives scope for companies to surprise to the upside. Tariffs, of course, will be a key focal point. Analysts don't expect a material impact on company profits just yet, but they will be monitoring guidance to see how executives have handled sporadic tariff announcements. Margins will also be key. BI analysts expect S&P 500 net income margins to hit their lowest level since the first quarter of 2024. The good news is that impact is supposed to be fleeting, with margins expanding again next quarter into 2026. And of course, big tech will be a key focal point among investors. That group is still in the driver's seat. The so-called Magnificent Seven stocks are expected to post a 14% rise in profits in the second quarter. If you take out that group, S&P 500 profits are expected to slightly contract by 0.1% in the April through June period. That, of course, shows the influence that this group has on this equity rally. And AI spending has also kept up, even despite all the uncertainty around trade and macroeconomic conditions. One more important point is a weaker dollar is a welcome development for U.S. exporters. Morgan Stanley strategist David Adams called the weaker dollar a substantial and underappreciated tailwind for U.S. earnings, particularly for the large cap companies. Guys.
Alex Semenova, thank you so very much for keeping an eye on earnings season for us. We'll get more from you throughout the week. Let's dive into earnings more now with Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams. When you look at the divergence between big tech and the rest of the S&P 500, how should investors be thinking about what will be hard hit so far in the tariff strategy that we see that keeps changing?
Yeah, it's a really, really tough call at this moment. I think it's been very tough for analysts in particular, where you saw analyst expectations just get crushed over the last 3 months. Most of that was in April and May, and they have yet to really rebound. We've not seen analyst expectations really come back. So there's a really great chance that expectations are very, very low for the second quarter, in particular for the banks, which really kicked things off. There was an assumption in the analyst estimates that you'd see some pretty significant loan loss provisions emerge with the second quarter earnings season. Analysts did not take that back. So the banks are expected to post 9% decline year over year in earnings. A really rough earnings season relative to the rest of the index, which is expected to post about a 3% gain.
So a very low bar, something like a 3% gain. We're looking at the most expected weakness from earnings since mid-2023. But Gina, does that even matter if a bar is low, if we're trading at something like 24 times forward earnings?
I think that's a really good point, because you also have this conundrum of a divergence in what's trading so expensively. It really is mostly tech that is trading so expensively in the index, but financials is right there with tech as well. So you've got very expensive valuations, at least compared to recent averages. Some embedded assumption that financials is going to move into sort of a less regulated, more growthy kind of phase over the course of the next 12 months. That combated with a likely beat in the second quarter creates a little bit of a mix. When we get later into the season, tech earnings are going to be fascinating, because this is a space that is expected to basically hold up the index. Outside of tech, expectations are for a decline in the index earnings on a year-ago basis on the second quarter. But tech is expected to really carry a heavy burden. That is also embedded in valuations. The expectations are very high for tech. Unlike the rest of the index, this is a very big outlier. So I think you're going to see a really big sea change as the season progresses, as you move from one industry to the next. Extremely low expectations for reporters in the early part, but much higher expectations as you get closer to the tech reporting.
Speaking of industries that have run up, if we look at the S&P 500, pull up the industries that have been rising throughout the course of the year, you can see industrials, yes, still info, tech, utilities, also materials, getting big run-ups as well.
Yeah.
How will they fare, given that they've already been given such a big bid by investors?
Yeah, I think it's been, if you decompose that into what's actually happened in the index, you've got a tale of two worlds. You've got pre-tariff announcements in March and April, post-tariff pause, and now we're moving into the pause is ending. So there's really several phases that have occurred in the markets. If you were to look at that chart back in April, you'd find that tech was a material underperformer in the first part of the year. Then we have pause, the tariffs emerge, the pauses emerge of those tariffs, and that's created a surge back into tech stocks, which have been basically the market's safety play in the pause era. If we go back to a post-pause era, you're going to see a disruption in trends as well emerge again. And I think that that's what we face in the third quarter is now we have tariffs reemerging. No one believes they're permanent. That's very clear in prices. If they become permanent, even for a short period of time, that's a big disruptor into the second half, where expectations are for recovery to emerge for the index at large.
Yeah, you really feel those warnings of maybe it's a market complacence starting to crop up. Gina, thank you so much for joining. Really wonderful to get your take this morning. That is, of course, Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams. And a quick look on futures. Yes, we might be concerned. Yes, we might have gotten more tariff letter bombshells over the weekend. But maybe you'd be surprised to know that futures are only down 1/3%. They've been hovering around these levels all morning, Shonali. The NASDAQ down 1/3%, maybe Russell 2000 futures a little bit weaker. It has been Peter Scheer writing a note over the weekend saying that this isn't complacency that tariffs won't hurt equities. Instead, it is a market that is just looking for some de-escalation.
Yeah, and we should remember that the index actually ended last week 0.3% lower as well. So now we are extending some of that negative attitude. Listen, some movers this morning. Really interesting movements under the hood. We're looking at Boeing shares. They are climbing after a preliminary report of last month's Air India crash found no recommended actions to take against the company. Boeing up about 1.4%. And I promised you some deals. This one's a Bloomberg scoop. Kraft Heinz, big news in the consumer sector constantly over the last couple of weeks. Kraft Heinz is preparing to break itself up to combat shifting consumer sentiment, according to people familiar with the matter. And Kraft Heinz only up about 0.8%. Autodesk is another one, Danny. This one's really interesting, up 6% because it's no longer pursuing an acquisition of PTC, also according to sources familiar with the matter. Really fascinating. Sometimes the deals you don't do are worth as much as the deals you do.
And the bankers will still get paid for at least having investigated it. So good news for them. All right, coming up on the show, Elon Musk says Tesla shareholders will vote if it will invest in xAI. We're going to bring you the details next on Bloomberg Open Interest.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing.
First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Bringing you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
And now to high interest, a look at what's making headlines around the world. NVIDIA CEO Jensen Huang said the U.S. does not need to be concerned that the Chinese military will use his company's products to their advantage because they know the risks. Huang says the strategy of restricting technology exports to China will backfire and spur domestic chip growth in China instead. And Tesla shareholders will vote on whether to invest in Elon Musk's xAI. He made the statement in response to an account on X that said the car maker must be able to invest in xAI to be fair to Tesla's retail investors. Musk didn't say when the vote will take place or offer other details. And Google will pay about $2.4 billion for top talent and licensing rights from the artificial intelligence startup Windsurf. This is after the collapse of Windsurf's agreement to be bought by Google rival OpenAI. That deal fell apart because of tension with Microsoft, a major OpenAI investor, Danny.
You know what that says to me? If you're looking at investing in an AI startup, why would you ever do it? If it's really good, Google or someone else is going to come swoop in and take all of your top talent and probably just collapse the company, more or less. Now, we also have some other movers on our radar this morning. And it is all about crypto, Shanali. Look at some of these moves. Coinbase up 1.5%, Marathon Holdings up 3.6%. Bitcoin crossing over the $120 mark for the first time. The House will debate and possibly vote this week on the Clarity and Genius Acts. Just more things to really solidify the use of crypto. But you already seen some people this morning basically saying, look, it shows that crypto is a great hedge. When stocks go down, you can buy crypto. I'm not sure you can make that argument if it's Congress that seems to be moving crypto and Bitcoin this morning.
A lot could move forward this week and in the coming months, but also a really interesting statistic about just how much Bitcoin has run up. At the market value that it is breaking into the world's most valuable assets. So that's the top 5: gold, Nvidia, Microsoft, Apple, then Bitcoin. So there you have it, Danny. Hard to ignore.
It's hard to ignore, but the problem is if this thing is volatile, you need shelter from what has been an extremely volatile market. Silver also trading at an all-time high. This is a market that is desperate for hedges. If a dollar isn't working for you, if it's a bond market more volatile, what can you turn to? So it gets this real desire for the crypto bulls to say, hey, we're part of this. But again, history would tell you that the volatility is something that's very difficult to touch.
It's linking closer and closer to the stock market when you have all of these Bitcoin treasury companies listing as well. And so there you have it. We're watching the crypto stocks, but also it's kind of the hot trade in terms of SPACs, mergers, and IPOs. So let's see how long that lasts. We saw the last SPAC boom come and go pretty fast. We're going to talk about high valuations next. Stick with us. We're going to talk about shrinking margins. We're going to talk about normal way companies, not Bitcoin ones, with this earnings season coming up right around the corner. Citi's Stuart Kaiser is joining us next. This is Bloomberg Open Interest.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Wall Street is bracing for its weakest earnings season since mid-2023. Strategists say that this is a stock picker's market. Morgan Stanley strategists say that investors should be more selective as views become more divergent. They prefer financial and industrial sectors due to strong earnings upgrades in recent weeks. At the same time, RBC lifted its S&P 500 year-end target to 6250 from 5730, though it remains neutral on stocks for the second half, expecting choppy conditions. Let's now bring in Citi head of U.S. equity trading strategy, Stuart Kaiser, to talk about all these views. But first, I want to show you something we were talking about in the commercial break, just how divergent stocks have been, the ones that are least exposed to tariffs and the ones that are most exposed. Because the ones that are least exposed, you see them soaring, right? And certainly since the April lows, but all year long, almost 20%, while the ones that have been lagging are still down almost 5%. Do you expect earnings season to pick this stock further apart, that the best will do better and the worst will do worse based on the tariff implications?
It's a good question. I mean, last earnings season, about 2/3 of companies said we don't know and kind of left guidance unchanged. So I think, that chart is frankly going to really be driven by what clients say, what companies say. Do they give us more insight into potential impact on revenue and margins, or do they kind of punt again, and do investors sort of tolerate that? So it's a tough one because you just extended the deadline out to August. So most companies are going to say, they just don't know. In my opinion, I don't think Wall Street should tolerate that again. I mean, I think if you're running an S&P 500 company, you should be able to give guidance on the outlook, and you would expect companies that punt to kind of be punished a bit this quarter. But again, they weren't last quarter. So a little bit of a wait and see. To be fair, I do think tariffs are at this point being treated as a buy the dip opportunity. And I would not expect that really to change at the macro level unless China-U.S. negotiations really break down.
Yeah, even some hard-hit sectors. You had Delta come out with guidance. It kind of makes it tough for everybody else, doesn't it?
Well, it's not only Delta, it's Amazon talking about how successful of a Prime Day they had, Stuart, there's been some real resilience among these companies, especially those exposed to the consumer. Is there any reason to believe that that would change this quarter?
I mean, not necessarily. Unemployment rate remains pretty low. Job growth remains pretty strong. So it doesn't look like that low-end consumer is being hit that hard at this point. So in that sense, yeah, it should work. But if you go back to Walmart a couple quarters ago, they basically said, in a post-tariff environment, we think our cost advantage is at least as large. So to Shonali's point, there may be winners and losers at the stock level, but that doesn't necessarily mean the low-end consumer is under as much pressure as I think people fear that they might be.
So what does this mean for surprises? What's not being baked into the market today that could come up during earnings season?
You know, it's interesting going into the earnings season. Like, the earnings bar is actually relatively low. You're at like kind of mid-single-digit EPS growth, which on both quarter-on-quarter and year-on-year. That said, that bar is actually higher than last quarter. So, you know, there's a lot of moving parts here. What's not baked in? I think what's not baked in probably is companies coming out and saying, we're good. You know, a 10 to 15% effective tariff is manageable for us, and we're leaving guidance where it is, and the consumer is maybe behaving better than expected. So it could be that the right tail is not effectively priced this time, whereas last quarter, I think you might have thought that the left tail wasn't.
But it's interesting, to your point, you had more companies punting than actually giving any sort of guidance or scenario analysis. But Stuart, it wasn't that they weren't only not punished for punting. They were punished if they gave some sort of outlook that suggested that they could be hit by tariffs. If companies don't know right now, what would be even the incentive to give a view into that lens, to say we will be hurt by X amount, if this is a market that is very willing to punish them for saying so?
I think it really boils down to, you know, how much confidence do analysts and investors have in their own ability to forecast. So I think last quarter, people gave companies a pass because they also didn't know, right? Well, people have spent the last three or 4 months trying to figure out, right? So if analysts feel like they have a very good view on the impact on a company's sales and margins, and the companies themselves say, oh, we're gonna keep guidance where it is, I think those companies will kind of be under a little bit of pressure. So I think the risk here is, last earnings season, analysts, the Fed, economists, policy makers, I think all had a tremendous amount of uncertainty, and for that reason you were given a pass. That level of uncertainty is kind of squeezed in tighter now, and I'd be surprised if you were kind of quote given a pass at this point if you don't give a better update.
Stuart, you're going to stick with us. That is Citigroup's Stuart Kaiser. We are about to head into the open. Of course, we are looking at a down day in the S&P 500. Danny, really interesting here. You have the S&P 500 futures not as low as they were a little earlier, but still 0.2% lower. Of course, yields are higher as well today. You have the 10-year well above 4.4%. You're at 443. Risk appetite is not showing up in the market, at least today, ahead of earnings season with sky-high expectations.
Yeah, and those higher yields may very well be the reason why it is small caps that are under pressure this morning that are underperforming. Bonds have a lot going against it, be it some of the concerns out in Japan of fiscal issues, of more spending, something we know is happening throughout the world, and threats coming from Chair Powell.
And I want to clarify, sky-high valuations, but very, very low expectations.
Correct.
So interesting for this setup into earnings season. We have the big banks tomorrow, but to your point here also, the bond market digesting that Powell news will be pretty interesting because higher yields floating into the market. We've seen this story earlier in the year.
It feels like, though everyone believes for equities, it is just a melt up into the summer. We'll see if any of that changes. We'll continue the conversation with Stuart Kaiser ahead.
Hey Snooze, how you doing, man? All right, we're on the rise. I don't know what's pushing it up today, guys.
Well, David, let me just say, I think the deficit is probably the most important issue today in terms of the long-term impact on the economy. And just to put this in perspective, in the first term,
Shorts beware, because I have no idea what's going on.
And with the tax cuts and economic growth before COVID, we were growing the economy faster than we were growing the debt. So that ratio would have come down. And I think we were trying to get it down to 90 to 95. The big focus on the first term was military spending. We unfortunately had to increase non-military spending to get it through the House and Senate. But what really impacted us was COVID. And I think, as you know, firsthand, we had to spend a lot of money in COVID or we would have had a worldwide depression, not recession. I think the problem was, the first $2 trillion was well spent. The next $2 trillion we never should have spent. And then the Biden administration kept on spending. So, we have debt to GDP of close to 105%
let's check the news
today. That's a gigantic problem. Secretary Bessent has talked about getting.
Did we even hit the VWAP for the starters?
To 3% of GDP, and that's got to be a major focus.
It's no news.
What is going to be the
What are you guys thinking?
for U.S. markets?
No news.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
And we are moments away from the start of trading.
What's
This
going
is
on
Bloomberg
today?
Open Interest. I'm Sonali Basak. You are looking at futures lower on the morning as we head into the open. And of course, we are looking then reverse some of those losses. So we can actually open higher potentially.
Take any trades on Friday snooze?
Morning here, markets digesting, of course, the tariff strategy on the EU and Mexico, EU's potential retaliation. And we are also watching how markets are going to be digesting.
Hey, Ladia, did you see the long coming? What were you thinking before the open?
The Nasdaq biotechnology being a very hot sector this year. A lot of M&A.
This is crazy.
As well as listings. So keeping an eye on.
I have no information
over here, over at the New York Stock Exchange,
on why it should be doing this.
Block, and as we open as well, let's take a look
Yeah,
at some of the stocks
me too.
you're keeping an eye on, Danny.
Also, does H&R Block
You're gonna short? You're a brave man.
a tax accountant? They could think of something more.
I have no idea where to take the short.
Could belong in Disneyland. That exciting. I don't know.
H&R Block Disneyland. What's the difference? All right, as you mentioned, Sonali, some really interesting movers. You've been talking about some of the changes happening at consumer companies. Kenvue. It is made board director Kirk
Look at
Perry,
this.
its interim
Holy
CEO
shit.
that is effective immediately. Shares are up 4.3%. The company has been announcing a strategic review. Again, a lot to watch, a lot of very interesting company news, Sonali. We've been talking about the first half of the year, companies sitting on their hands. Some big changes happening, though, or potentially with what you're looking at, a lack of change and a decision to go against what they originally thought.
You're short now?
Activism,
Why are you going short
and
now?
It's not happening. We're watching Autodesk rise almost 6% at the market open. It is no longer
Shit, dude.
pursuing an acquisition of PTC. People familiar with
So you think this is a fake out?
It would have ranked as one of the
Maybe
year's
that was
most
liquidation.
PTC down almost 4.5%.
Yeah, I see what you're
as
thinking.
well. We are back now with Citi head of U.S. equity trading.
Those candles were
strategy,
liquidation.
Stuart Kaiser, on how to think about this earnings season, but also how to think about positioning heading into it. Really interesting. Liz Ann Saunders of Schwab this morning sharing the CFTC positioning data. I'm wondering
could
what
never-
your own positioning data
You could never
is
take a
saying
trade
about
on a
how
prop
funds
firm
are
right now.
positioned.
It's
She says she's seeing mostly
your stop loss
net
will get
short, actually
snapped.
closer
Just
to
the
Matt's
chop
net short
will
positioning
kill you.
Seen in 2022, the bear market. So pretty tough in some places. How are you feeling?
Yeah, I don't know. I mean, I think like CTAs and those types that tend to trade futures, those are all max long in most of our models. So we think there's some length there. The way we measure
tell
futures
it's-
flows, at
it's
least for
ranging
the last
hard.
month or so, you had about 10 consecutive days of pretty solid inflows. Last week was a little wobbly. I don't know. We would put positioning as kind of, a modest positive for markets at this point. I think, retail is largely re-risked. I think institutions have largely re-risked. That said, some of the more macro discretionary tactical investors we talk to, when the market's up 50 basis points, they're calling and saying, why is the market up so much? And that suggests that potentially they don't have as much kind of that upside on as they would potentially like to have. So I would never, the pain trade is always lower, don't get me wrong, but it does feel like even a modest move lower will put some pressure on people to get some more risk put in.
I'm sure people are freaking out when the S&P or markets are up 0.5%.
Yeah.
That feels like nothing, Stuart. I mean, what does that say about the event risk that we might have and potentially people unprepared for big moves? We've been talking about earnings, bank earnings starting. You have CPI
Where are you short at, Laudia?
tomorrow too. You also have increased continued trade talks. Is there really big event risk for this week? What are you watching out for?
I mean, there's a lot of stuff on the calendar. Whether that stuff is risk, I think, is open to debate. CPI tomorrow.
Stochastics look good for the short.
Positive catalyst for markets. Our economists are about 30 basis points. I think consensus is just below that. If you get core CPI around 30 basis points, we do think markets will move higher on that. That'll probably really firm up a rate cut in September. The markets will like that. We actually like small cap stocks going into that. If that's the case, then the FOMC meeting is largely going to be about them messaging the fact that they're going to cut. So that will be sort of a neutral to slightly positive event. And then you get into payrolls and earnings. Earnings, as Shonali mentioned, I think will be a little bit more of a single stock idiosyncratic event. That payrolls report is going to be, very, very important. We're coming off a better than expected payrolls print. If you get another one of those, if you have the unemployment rate at 4.1% and you're cutting rates, I mean, this is a market where equities are going higher, and that's why people feel the pressure to the upside, I think.
So I want to pull up WIRP on the Bloomberg terminal because that's where you have the interest rate probability pricing, and that September rate cut currently has only a roughly 65% chance right now. So for the bold bettors out there, keeping an eye on that CPI to get to that 1% chance of that, or 100% chance of that September rate cut. What does this all mean in context of the pressure that the administration is putting on Fed Chair Powell? How does the market read through that type of uncertainty?
Well, first off, that pressure is not going away. I mean, even if they cut rates, I'm sure the White House is going to pressure them to cut rates further. I was a little surprised by the reaction to the headlines last week. I mean, Chair Powell's been very, very clear that he's not resigning and is not leaving early. I think, the White House putting pressure on him to cut rates is, I mean, we could go back to 2018 and they probably would have had the same conversation. So I don't think there's a ton of new news here. The initial reaction on Friday to some of the headlines does show you that the market is not going to like it if that happens. So, that's important. I think Secretary Bessent is very well aware of how the market would react to that stuff. So to me, a lot of this is just more, I don't want to call it stale headlines, but this is headlines that we've heard before. And unless they kind of ratchet up to a new level, I would consider there's just kind of more noise into the market than anything else.
Well, if we were to play scenario analysis, if it does ratchet up to a new level, George Serravelos of Deutsche Bank has talked about the price of firing Jay Powell. He said 3 to 4% sell-off in the dollar, accompanied by a 30 to 40 basis point sell-off in U.S. fixed income led by the back end. What would the impact on equities be if that's what unfolds?
Well, he's braver than me to put a specific number on it.
I'll be brave, Stuart.
Well, look, the bottom line is the Supreme Court basically said he can't fire Powell, right? So what he can do is pressure Powell to just say this isn't worth it. Chair Powell has said that's not the case. So again, I think this is much more noise than it is signal. We do view that long end of the yield curve as a massively important risk to U.S. equity markets. So I think if you were to dislocate the long end of the curve, and by dislocate, I mean you're getting above 5.25 or above on the 30-year. Yes, that's going to be negative to U.S. equity markets. From these valuation and positioning levels, you might get a bigger pullback than you might imagine. This is probably like a 1 to 3%, 2 to 4% type event if it were to happen. But again, I think those are relatively low probability, and given the resilience of the market, the move might even be smaller than that.
Before we let you go, Stu, big message for earnings season for investors right now.
Our big message? I think it's an idiosyncratic risk story. The beginning of the season, obviously this week's going to be banks. To me, that's really a discussion about M&A for a lot of investors. Middle of the season, it's the hyperscalers and what you get from CapEx. It's going to be very hard for them to beat what they did last quarter. So in that case, I think you're just hoping for a neutral, non-disruptive impact. And then third or fourth week, we focus on retailers and what are we seeing kind of from the low end of the consumer. And frankly, I think that third part is really the more important part for equity markets in terms of how much play there is. I think the banks is pretty well understood. I think the hyperscaler spend is pretty well understood. There's a lot of uncertainty about high-end versus low-end consumers. So I would say be patient because you're going to have to wait 3 or 4 weeks to get what is probably the most important part of the earnings season done.
It's a good reminder. It's almost like earnings season never ends. Citigroup's
Joy.
U.S. equity trading head, Stuart Kaiser. Thank you so much for joining us. We're going to get a talk on the stock market right now. Of course, we do have a lot of movement under the surface here. We do have, on a points basis, Tesla leading the gains, but we do have still a fair bit of red on the screen here. Remember, we have been fluctuating into the open, now still down on the morning. We have the big tech companies. NVIDIA is the biggest points drag on the day. Apple, Microsoft as well, right behind it. But you do still have Alphabet higher on the day, as well as Palantir. Let's flip up the screen here and look at the sectors as well to see what's happening. Remember, rates are a little higher on the morning. The 10-year is well over 4.4%. So you are not seeing, interestingly, though, that feed into the market. The real estate sector, financials are actually higher on the morning. They're helping keep this near level as we head into the trading day. We're not seeing major declines in the S&P 500. Communication services is your biggest gainer on the day, Danny, up about 0.6%. Energy is a drag, though, about 0.7%.
All right, guys.
I gotta say, if you were to
9 minutes after the open, got a huge run up. That must have been a liquidation. We're starting to pull back now. So we'll see where we go from here. I'm not going to be looking for an entry until about 10:30, 11 o'clock at least. Vladiyov got in, called the liquidation candle and got short, so his trade's got to be looking pretty good right now. I don't know. There's just no news. There's no news today, so I guess we got to see where we trend. So 10 o'clock, Trump and NATO. Trump's visiting NATO, I suppose. I don't know what kind of effect that'll have. Got Treasury bill, 6-month and 3-month information throughout the morning.
And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
I mean, unless
the theme of this season, on the road.
You still holding short, Vladiyov? Oh, hey, Snooze, he got out of that short too the other day.
More behind-the-scenes conversations
or that
with the
long,
biggest names
or
in
what
sports,
was it? A
business,
short
and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad
What's your target, Vladiyov?
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
You're looking really good right now.
Asia is at the forefront of some of the world's biggest stories. I'm Sherian in Tokyo.
22,887.
Here in Sydney with a trading day
3.51%. 22.8 right down here. 8.8.
The demand is
Oh, right out the VWAP.
The opportunity of a century.
Exit at the VWAP. I think a stop loss above the VWAP would be great.
Changes everything.
U.S. jobs numbers are released.
Oh, you closed?
Bloomberg has the report under surveillance with crucial data and
nice trade, man.
At terminal speed. Nobody covers jobs day like Bloomberg. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
There's the VWAP. 2887 just got crushed.
You are watching Bloomberg Open Interest on this Monday morning.
Holy shit, now they're free fall.
Trading day.
Oh, this is getting intense. What's going on?
Equity market, despite the fact that we got letters to the EU,
the hell?
Mexico of higher tariffs,
Price action's going crazy on the
NQ.
NQ.
Risk from CPI tomorrow to bank earnings and continued discussions about those tariffs. S&P, Nasdaq, not as bad as the future session, down only 0.2%. And check out what's happening with the Russell. Small caps fighting back unchanged, but trying their darndest to go into the green. We also have some top calls for you this morning, some of the analyst action that we are focusing on. First up, CrowdStrike. That gets a downgrade at Morgan Stanley. Concerns about valuation. The firm says it's still a compelling long-term story, but growth is well priced into the stock. Those shares down just below 2%. Next up, we have the personal styling company Stitch Fix. That gets an upgrade at William Blair. That's all thanks to the confidence in the CEO's turnaround strategy. Those shares up a whopping 11% this morning. Finally, wrapping things up with PayPal. That gets a raise.
You did. You did say short.
Tariff-related impacts like slower consumer spending, but they've all turned
out
better than expected.
You were right.
Shares move higher by 3 1/3%, Shanali.
Now, Tesla
Thing is I can't short like that on a prop firm account. I'll get crushed.
That the EV maker shareholders will be polled on whether to invest in XAI. From
Just the chop.
Bloomberg's Global Autos editor Craig Trudell. And isn't this always the thesis behind Tesla, that it will integrate more and more to the broader ventures that Elon Musk has going on, that AI will be a bigger part of the story? But I think when this initially happened, the shareholders wouldn't expect that would also give them exposure to a large social media company. How is the story more complicated now?
Yeah, it's a messy one, Shanali. I mean, this is a company that we shouldn't forget has sort of been
This shit's
in
bipolar.
Of
I don't know what's going on.
Musk universe in the past. You think back to Solar City and how controversial a deal that was, where back then the plan was to turn Tesla into more than just.
We're right on top of the VWAP on the ES, so
that isn't really something that sort of panned out in a meaningful way. The solar
ES hasn't crossed below the VWAP yet,
but
so that could pull us back up a little bit on the NQ.
Years of Musk trying to really emphasize Tesla's work on artificial.
I don't know if I had to guess, I would say that we're probably going to break down, but I can't really tell until after.
Just how much
after the open the volatility from the open, all the volume settles in, and then I can kind of read the chart a little better and make a decision.
Appreciation in valuation for.
I mean, I have no bias either way.
This idea that Musk would be distracted, it wasn't that long ago.
I feel like that run up was just a market manipulation to liquidate people, so people could get good short entries. So if I was to,
I think it is, and this is.
If I was to pick a direction, it would be to the short side, but I don't have any information saying that yet.
In terms of just how many companies he runs, that was made, I guess slightly uncomplicated, less complicated.
I'm a perma bear anyway. I'll always pick short. The world's always ending, as far as I'm concerned.
Much longer already, but Linda Yaccarino stepping back from X and leaving that company, the amount of sort of emphasis on advertising and trying to keep that company generating revenue. And meanwhile, I should also just note that we at Bloomberg have reported just in the last month or so that XAI is burning through roughly $1 billion a month. And so while Tesla investors, some of them are eager to get in on XAI, this is, by no means a company that's generating a lot of revenue and sort of covering its costs as it really tries to catch up.
Okay, so stochastics are way oversold. The fast is way oversold. plus the ES is still above the VWAP. So for me, this is a no trade zone for sure. If you didn't catch the move down the way Ladioff did, I'm waiting, because this is the classic VWAP chop situation where we oscillate in a range.
Yeah, I mean, I think it depends on the investor, right? Where, you know, I would say that you think about sort of holding companies and, you know, the old school, like sort of GEs of the world have really fallen out of favor, right? Investors have wanted to sort of place specific bets on specific companies and make sort of cleaner plays. Musk is really sort of going, you know, very emphatically in the sort of opposite direction of the rest of the world, where we've seen a lot of, you know, breakups. But in his case, I think, you know, the fact that he has been so successful in building these fast-growing companies, and also in being, you know, such a sort of, you know, capital raiser, there's no sort of shortage or lack of interest in sort of getting behind this guy and backing him with more, you know, billions of dollars. And I think, you know, some Tesla investors absolutely see that as, you know, as these other companies are you know, generating, you know, higher and higher, you know, valuations in these private rounds, they want in on some of that appreciation.
Craig, excellent as always. Thank you so much for joining us. That is Bloomberg's Craig Trudell. Now, coming up, big shakeups in the consumer sectors, the very, very exciting world of Band-Aids to baloney. We'll give you a roundup. That's coming up next. This is Bloomberg Open Interest.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. Let's get a check on what stocks are doing today, because, of course, we have a choppy trade underway. We have the S&P 500 still down about 0.1%. The NASDAQ 100 still down more than 0.1%. But the Russell is actually where you see some love today, which is a little surprising, because even though you see the 2-year yield marginally lower, about 1 basis point, the 10-year yield is higher, about 4.4%. The dollar is rising just a little bit. We have some stocks with some interesting moves. Of course, we are watching crypto with Bitcoin passing that $120,000 mark. You have Coinbase up about 1.8% on the day. MicroStrategy, a little bit more of a levered play, as you know, up about 3.6%. Autodesk leaving its deal to buy PTC. Autodesk still higher, almost 4%, Danny. PTC, though, down about 1.4%.
Gotta say, a lot of deal news coming in today, Shonali. A lot of it coming from the consumer sector, too. Brands really trying to win over a consumer that, let's say, is being more picky these days. Tylenol maker Kenvue, for example, ousting its CEO in a win for activists. Meanwhile, Kraft Heinz, they're preparing to break itself up, possibly spinning off a large part of its grocery business. Let's get the latest. Shelley Banjo, Bloomberg's managing editor for Global Business.
Oh, look at this. We're coming
Shelley,
right back.
What begins with financial engineering also seems to end with financial engineering. Kraft Heinz, if I'm not mistaken, this seems like a breakup to exactly what they were before.
I don't know. This
the
is
two of them united.
Yeah, it's all comes
we had
full
another
circle.
short Lottie off, or
So
we got
this is what they're
we
trying to
running
do
up
now,
this
is
time.
to create a good co and a bad co, essentially. So put all the brands that are doing really well in one company and all the brands that are not doing as well in another, or spit it off and sort of dole it out. We're still not sure yet on which strategy they're going to go after.
On Kraft Heinz, it's kind of interesting because you do see the Kellogg deal just a week ago. We see Kenvue, which was a spinoff, now kind of struggling through the latest strategy. What's going on in the sector that's forcing so much change?
Yeah, I think people want to spend money on things that they really want, and the things that they don't want, they're not going to spend money on. And so they're really trying to fight for that sort of market share. So Kenvue was, to your point, a spinoff and has been basically fighting for its life or its existence ever since the moment that it was spun off. So they had activists involved there from the get-go saying, even though you spun this off, there's still, within a bad company, there's still a whole bunch of, good and bad within there, underneath, when you look underneath the hood there.
How many of these companies are just kind of looking at what's happening with the global economic picture and blaming that and saying it is not our fault, it is a consumer that is starting to pull back, it's a consumer that's not picky, and we are simply victims to that environment?
Yeah, I think that's, goes without saying that these companies are going to blame the macro environment. But if you look at some of these individual brands, some are doing better than others. So you've got something like a Tylenol still, doing well. You've got something like Band-Aid that they're actually innovating on making better Band-Aids, but then
How do you improve a Band-Aid? Pretty
That's
classic.
I talk to the Kenvue people and they'll go on and on about how they've been improving the Band-Aids and it seems to actually be working. But look at a company or a brand like Neutrogena, which is one of Kenvue's brands. They've completely lost the market there as other skincare products go in and take all of that market share from them inside the CVS, Walgreens, pharmacies. So there is work to be done there, and
one more big green candle.
They seem to have a plan.
Then we move to the downside. Hey, Luther, how are you doing?
Point on performance, Kenvue slumping along since spinning off, but relatively flat. Kraft Heinz, on the other hand, has had a very tough 3 years. It's down almost 30%.
I don't know, to be honest with you.
This year alone, what would spinning off certain
I've got no news. I don't know of any catalysts.
For example, how would that help
Crazy.
them?
Yeah, it is a crazy Monday.
Kraft Heinz, you've got a bunch of businesses.
I've just
that,
learned to stay out of
go
this
against the grain
until
of the trends. So
until we're in a rhythm
like that. People are trying to get healthy
where
over
the
time,
strategy
stuff
can
with
pick,
less
you know,
additives, less
a
chemicals, that
decent
kind of thing.
entry.
And so that's sort of where Kraft is looking at now.
Shelley, we thank you
I
so
mean,
much
for
joining
me,
us, of
it
course,
could,
covering
you know,
all things global business. That is Bloomberg's Shelley Banjo, and of course, a lot
we're
going
on the
on
north side of the
in terms of
VWAP on
M&A
ES and
activism
NQ.
changes at the very, very top.
Stochastics
look
are
at
rolling
what's ahead
over
this
on the
week, because It's a
ES.
really busy week. We're going to get the latest inflation print.
I mean, I don't know.
CPI data tomorrow. Plus, big bank earnings kicking off with JP
Yeah.
Morgan, Wells Fargo, and Citigroup. And remember, the valuations have run up as of late as M&A has been coming
Yesterday
back.
at the open,
Bank
they
earnings
gap
continue
up.
Wednesday with Goldman and Morgan Stanley and Bank of America. On Thursday, we get more economic data with U.S. retail sales, and we also
gap
get
down.
a read on the media industry when we get earnings from Netflix. And Danny, have you been watching Netflix? Because there's a lot of great content on lately, but people have seemingly been too busy to keep an eye on it.
I would
Gap
love
down.
to kick back and relax on the weekend and
On
watch
the 13th,
Netflix, but then we get
gap
letters
down.
sent to countries about tariffs, and that
Okay,
kind of
so
ruins
gap-
that
you
ruins
gap
our
down,
viewing, but
right?
That's okay. Hopefully, we'll get to that at some point.
Yeah,
Generally, quick
right
check
here.
on stocks. Here's a good reason why you maybe should just be watching Netflix today and not doing a lot. Look at this
So,
equity market, Shanali.
we got to fill
It is
that
impervious
and then
to the
decide
latest
where we're
machinations
going, maybe,
coming
huh?
out of Washington, D.C., down just about 0.1% for the Nasdaq, and it is a Russell
gap
2000s
down,
index
let's see.
that is moving higher.
22.9.
So interesting. Russell moving higher on a day like today while the others are down. But I will say something
Yeah, it
interesting
did
about
fill it.
all this is that Stuart Kaiser saying that investors are sneezing
filled it.
at a 0.5% move in the S&P 500. So maybe that 1/10
All
of
right.
1% matters a little bit like today.
So we went up. So that's what that spike was for at the beginning, was to fill that gap. And then it liquidated everyone out. We got a drop. Now we're grinding back up. So you're short. Lottie off is short. I don't like this way this chart looks, to be honest with you. It looks unorganized to me. Looks like a bunch of women are in charge of the market. It's chaotic. All right, Laudioff is short. Are you getting out at the VWAP? We're at the 20 EMA. Cruising through the 50.
A cidade estava sitiada.
Nisso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né?
Oh shit, that actually worked. I was playing with my Twitch on Friday, and I like Star Trek. I'm into like sci-fi stuff, and I see there's a Star Trek game they were offering me to advertise or whatever, or promote. What is it? They're
I am a winner.
what do they
I didn't
call
know
it?
how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Sponsorship. So I just clicked on it to do it. Yeah, it's sponsorship. Yeah. So I clicked on it to do it, but I had no friggin' idea how to set it up so it would work. I had no idea. I was gonna watch a video later today when I had some time and try and figure out how to make stream elements set up properly. But then it just I like connected to stream elements.
The epicenter of a global realignment on a scale
Yeah,
not seen.
like, but how does it work though?
Intersection between markets, economics, and geopolitics. A forum for sophisticated.
It wants me to put a banner in OBS and stuff, and I gotta watch it. I gotta go to YouTube and watch a video on how to set it up.
Whenever and wherever it happens. I'm Giovanna Versace, and
I didn't really have time to play with it this weekend. I haven't even gone to this link yet. Star Trek Fleet Command. Oh, this is what it is. That's the first time I seen that link. That's kind of cool the way they did that.
On the hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez, a heartbreaker in Fall River, Massachusetts, where 9 people died, about 30 were injured when fire tore through an assisted living facility.
Firefighters arrived at the Gabriel house just before 10.
Maybe
last
tonight
night
I'll
and
play
found
it.
a
I'll pay for
chaotic
it, play it, see what it's
Fire
like.
Chief Jeffrey Bacon.
We had an unspeakable
You usually have a folder of all the resources you download and add those elements to your stream.
About 50 firefighters responded to the facility.
So it shows it during the stream, like a box or something in the corner.
Couldn't walk. Some of those who died were in the building, others at the hospital. Wendy Gillette, CBS News.
Sunday morning services at a Baptist church in Lexington, Kentucky turned deadly. Police say a man who'd shot and wounded a state trooper during a traffic stop went on to carjack a vehicle.
I've got all those sites up. I started playing with it, and I just, by the time I could sit down yesterday, I didn't feel like spending a couple hours on it,
The
figuring
church
it
there
out.
are related biologically some way or another. If not, they've been.
They got a dashboard right through Stream Elements, and it wanted me to create a panel, but it wouldn't let me create it.
Shot and killed the
I didn't know
suspect.
why I was getting
President
an
Trump
error.
is scheduled to meet NATO Secretary General Mark Rutte at the White House this hour.
Like it wanted you.
Topping the agenda, new U.S. Patriot missile shipments that NATO will
Oh.
distribute to Ukraine to help fend off
Well, I
Russian
gotta figure that out.
airstrikes.
We basically are going to
Yeah.
send them various
pieces of
I'll play with it later today.
military. They're going to pay us 100% for them.
Mr. Trump is facing calls from congressional.
If it's not really
Democrats
affecting
and
us watching the
Republicans
market, I
to
don't mind
support a
having
bill
it
that will
there. I
sanction
like Star
countries
Trek,
that
so
continue to purchase oil from Moscow. Today,
nobody's going
European
to sign up
Union
for it
ministers
anyway.
agreed to step
Well,
up
I don't know.
negotiations with the U.S. over
I just thought it was cool
President
to play with.
Trump's 30% tariff threats, which the EU's trade chief says could wreck transatlantic trade. Denmark's foreign minister, Lars Løkke Rasmussen.
We don't want any kind of trade war. It is in no one's
Let's
interest.
complete your
We want
Star
a fair
Trek
deal.
Fleet Command
But
setup.
of course, if we are met with
setup.
tariffs, which is unfair, we should be ready to
Enable
countermeasure this.
chatbot command
They're
and timer.
celebrating Bastille Day in France, the storming of the prison
So that was
marked
the
the
chat
beginning
bot that-
of the French Revolution. CBS's Elaine Cobb has details from Paris.
Parisians and tourists lined the
Okay, so
Champs-Elysees.
that's what-
Others were still in bed
Add
after
goal
a night
widget
of
to your
dancing at
ODS.
fire stations around the country. Another July 14th tradition. Tonight there will be fireworks at the Eiffel Tower and a drone light show.
Dow futures reversing. They're up
Add
59
Twitch
now.
banner.
This is CBS News.
Twitch banner. It wants me to update my category to Star Trek Fleet Command. Add, hashtag sponsorship. Exclamation star in your string title. I'm gonna watch the markets instead of play with that. All right, so are you out of your short? Are you out of your short, Ladioff?
Dow actually down 50 now. One of the most populous countries in the world could be lowering the temperature soon. Here's CBS's Cami McCormick.
The government in India
Okay,
wants to
cool.
require the lowest thermostat setting on all
Starting
new
to
air
look like we're
conditioners
building
to be
a-
68 degrees. It's part of an effort
We're starting to
save on
consolidate, it
electricity.
looks like.
India is dealing
Oh,
with
okay.
increasingly hotter.
Oh, I
and
thought he said he
longer
got in a
summers.
second time.
Current air conditioners can cool to as low as 62 degrees.
short.
India is one of the world's largest air conditioner markets. 1.4 billion people live in the country, and 10 to 15 million air conditioners are sold each year.
An alarming number of young kids, even babies, are swallowing popular nicotine pouches. New study in the journal Pediatrics shows calls
Oh,
to
so
poison
you're still
control
in your
centers
second,
skyrocketed
right?
763%.
Shit, be careful,
From
dude.
2020 to 2030.
You get caught
These
again.
Pouches are stuffed with nicotine powder. Deborah
Well, we're
Rodriguez,
10:05,
CBS
so
News.
maybe we're starting to calm down. See, the volume is starting to level out now.
This is
At a
Bloomberg
reasonable level.
Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube as well.
What's your entry, dude?
Paul Sweeney with you this morning in the Bloomberg Intelligence Program. Coming up, we're going to check in with Chris Anstey, Bloomberg Senior Economics Editor, to get the latest on the tariffs. This August 1st date seems to be one that
See,
we
the
should be paying
ES
attention
is
to.
looking
Mike
like it's
McGlone,
building
Bloomberg
a short.
Intelligence Senior Commodity Strategist, Bitcoin. I'm talking let's call it $122,000 for Bitcoin. Let's get the latest call there from Mike McGlone. Christina Hooper.
But the
Chief
NQ
Market
looks
Strategist at
looks like
the
it's
Demand Group. She's gonna be
found
in
support
our
on
studio
top
to
of
hear
the
thoughts
20.
on these markets. And Allison
That's
Williams,
usually
we're gonna
pretty
get to
strong
hearing
right
a
there.
lot from Allison Williams over the next several days. She's Bloomberg Intelligence Senior Banks Analyst. We got a lot of the banks kicking off earnings tomorrow, including JP Morgan. So we'll get a little preview there. So we got a lot coming up in the next couple of hours. let's kick it all off with Charlie Pell.
Yeah. Yep. That's kind of what I'm thinking. You see, when the candle opens on top of the 20, that usually means we got a nice little run coming. Stochastics are facing the right direction. You know, this could be a grind up back to that trend line.
Learn more at ivkr.com/around-the-clock. Equities lower right now with the S&P 500 index down 11, a drop of 0.2%. We've got the Dow down 0.1%, down 39.
Yeah,
and Nasdaq down 28. A drop
ES is following.
0.1%. Stocks are falling as President Trump escalates his tariff threats against the European Union and Mexico. The 10-year 4.40.
Plus, you got the fair value gap
0.87%.
holding it up.
A little changed on the day. 33,054 on the precious metal. And West
So I guess we'll see.
Crude 68.17 a barrel, down 0.4%. Bitcoin, what a story there. 121,708 right now.
Shit, is that gonna do that all day like that?
121,000 closing in on 122,000. More from our Michael McGlone coming up in a moment. We've got Bitcoin up now by 2.2%. Bottom line, Monday morning tariffs front and center. Ahead of bank earnings tomorrow. Amanda Agati is Chief Investment Officer for Asset Management at PNC Bank.
It's hard to argue with an S&P at an all-time high and the next 12 months earnings earnings per share at an all-time high and valuations effectively back there too. So I don't think equities are particularly bothered. But if August 1st is a really hard line in the sand, I think the market is going to struggle mightily.
Amanda Agati of PNC interviewed this morning on Surveillance. By the way, you can hear more of that conversation on the Surveillance podcast. Download it wherever you get your podcasts. Bank earnings tomorrow morning. JP Morgan Chase, Citigroup, Wells Fargo right out of the gate. JPM right now down 0.1%. Citigroup lower by 0.5%. Wells Fargo swinging between gains and losses up right now by under
Crayon rules
1%.
to
I'm
get
Charlie
in
Pelleton. That is a Bloomberg Business.
I gotta play that game tonight.
Charlie Pell, thank you so much. We appreciate that. Lisa Mateo, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube here. As Charlie was just mentioning, a little bit of red on the screen here. Let's take a look at how some of the stocks are moving.
All right, I got about 6 minutes till my trade box turns on, and then
Isabel, what do you got?
if the volume stays pretty steady, we'll start trying to hunt an entry here, but I'm not really sure what we're doing right now.
Initiating coverage of the stock with a recommendation of buy and a $400 price target. So Coinbase is now close to 400.
I got no leads coming in at work, so I can hang out on the mic right now.
Inching closer to that target. Argus said that over the past year, the shares have outperformed, and they note that majority of the outperformance has occurred post the passage of the Genius Act in June. So Argus also said that it's noteworthy because Coin is the first crypto native member to be included in the S&P. That happened back in May, and the stock has around 20 analysts buy, 16 hold, and 14 sell. Another thing, of course, Coinbase is influenced by Bitcoin, which is now around $121,000, which is a huge record. So now Strategy, MSTR, and Galaxy GLXY are also edging higher because as Bitcoin rises, so do crypto-linked stocks.
There they go, hand in hand. Let's move on to Autodesk. They're stepping back from an acquisition. Is that right?
That's right. And shares are edging higher, 4%. So investors are definitely liking that. Autodesk is ADSK. So they rose after reports that it's dropping its pursuit of PTC, which would have ranked it as one of the largest deals this year. So Autodesk is a software provider, and it decided to shelve the potential cash and stock deal for PTC. So Autodesk is bigger. It has a market cap of around $60 billion. PTC is a little smaller at around $23 billion. So in a regulatory filing Monday, Autodesk said it will remain focused on executing strategic priorities. It said it will allocate capital to organic investment, targeted and tuck-in acquisitions. Paul will know a lot of those. It didn't mention PTC, though, so that's what investors are implying.
K-View? What is that? That's the spin-off,
K-View,
right?
it's the maker of Tylenol, Neutrogena, and Listerine. So they said that its CEO, Thibaut Mongon, will leave the company, and board of director Craig Perry will take over as interim CEO. So they also said that they will continue an ongoing comprehensive review of strategic alternatives. So this is a consumer goods company. It really has faced a lot of pushback from activist investors. And for now, the company is really kind of heeding to that call. And you're right, they were spun off from Johnson & Johnson in 2023. So now Kenvue appears to be kicking off a number of changes to appease investors. And part of that is a new CEO search.
Johnson & Johnson, New Brunswick, New Jersey. We note that. All right, Isabel Lee, cross-asset reporter for Bloomberg News. Thank you so much for that. And for more conversations like this, subscribe to our new Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Tariffs front and center again here, really taking out all the oxygen out of the room. President Trump just upping the game yet again, singling out certain countries, certain regions of the world for tariffs. August 1 is a date that seems to be the drop-dead date. Let's get the latest reporting there. Chris Anstey, Senior Economics Editor for Bloomberg News. Chris, where are we here? It seems like President Trump is not backing down.
Okay, we're at 10:12 Eastern New York time.
In. What do we know?
Well, what we know is that uncertainty.
Let's see if it holds to 20 and respects that fair value gap again.
You just referred to August 1st.
I think if we clear out this fair value gap and confirm underneath the VWAP, then that's our indication we're going to push down. So that's kind of what I'm looking for, I think. I think I'm going to see what it does with this fair value gap.
April 2nd, reciprocal tariff rates were going to be the ceiling.
On the ES, the fair value gap is over the VWAP, like it's completely on top of the VWAP.
Brazil now facing
but on the NQ, it's split halfway through.
Facing 30% tariffs, much higher than the 20% that were assigned on April 2nd.
Yeah, we need to clear the VWAP and pick a direction. We're kind of.
Visibility here.
We need to clear these fair value gaps and pick a direction, one side or the other of the VWAP, and then I think maybe that's where we'll grind. So I'm on hold, guys. I'm not going to do nothing.
On a number of key trading partners mean that the effective tariff rate that
I'm on a hold.
Eventually end up with is going to be
what's above this?
Than, what we thought.
Can't be a whole lot above it.
At the start of last week. But where exactly we
one
end up
trend line and then all-time highs.
Well, Chris,
so this big thick red line, this is all-time highs on the NQ futures.
Will we see this coordinated response? I mean, what does this mean for the U.S.?
Yeah, that's very interesting.
So that's no man's land out there.
The new dynamic
and then
play, where a number of trading partners of the U.S. are kind of getting frustrated at the inability to close.
Anyone think we're going to all-time highs today?
And are increasing.
Is there even a reason to do that?
Cooperation between themselves in ways that we haven't seen before. You mentioned Canada and
corporate America got their quarterly bonus.
Talks about
that's why we're going to all-time highs.
Either coordinate with regard to Washington or potentially deepen their own economic links. Also over the weekend, very interesting, after 10 years of talks between Indonesia, remember the world's fourth most populous nation, biggest Southeast Asian economy, 10 years of talks between Indonesia and the European Union, they have finally reached a strategic economic agreement. So these kind of, the pressure that Trump is putting on everybody else is encouraging them to talk together. Another one to keep an eye on is South Korea and Japan. They have had, ever since, Japan invaded Korea, in the early 1900s, those two neighbors have been at loggerheads. And what's very interesting to me is the new president of South Korea, President Lee, who was no big friend of Japan in the past, all of a sudden, met with Prime Minister Ishiba of Japan last month, is hoping for a visit there to Japan later this year. So all kinds of things are happening that might not otherwise have occurred because of the tariff salvos coming from Washington.
Chris, President Trump has not really concluded any major trade deals to date. Are some of our trading partners saying maybe we don't have to worry about this because we can just wait this guy out? I mean, how are they thinking about? We haven't gotten many deals done.
Yeah, that's a good point. We of course we have the UK framework was one, and then some sort of a framework or truce at least with China. We keep on hearing from Trump's aides that a deal is close. we expect a deal to be reached with name that country very soon. India seemed likely as recently as last week. National Economic Council Director Kevin Hassett, in a televised interview this morning, was pressed on this and asked, Kevin, you keep on saying that deals are almost done, that the U.S. trade negotiating staff had never seen offers like have been the ones that have been made, and Hassett said, candidly, that at the final step, we present these these documents to the president, and it's his call. So and they don't get done. Again, we just don't know where we're heading here, and it's
tag the 50. Look, it's holding the 50. I'll tagged it 3 times.
Chris Anstey, thank you so much for joining us. Appreciate the
Back
reporting.
to the highs.
As always, Chris Anstey, senior economics editor for Bloomberg News, joining us there again. Tariffs front and center once again here on global trade. Again, August 1st seems to be a date in the Trump administration that they would like to see some things done. So we'll see if that date holds, but more uncertainty there. That'll be, I think, eclipsed a little bit starting tomorrow by earnings when we get some of the big banks starting to report earnings and maybe investors focus. We'll go back on the earnings out there. S&P 500 -4, Dow +6, NASDAQ +3. Whole lot of nothing going on out there. This is Bloomberg.
62.98. Is that your exit? Your take profit? Are you trying to go short there? Just going through my chat rooms, looking for stocks to look at, because hey, there you go. You're in a short. Well, you should be in it now.
Bloomberg Television and the Bloomberg Business app.
6298. You should be in your short now, Luther.
It's 10:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are now fluctuating. We do have the Dow Jones Industrial Average in the green, advancing now by 24 points. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. S&P little change, down 1 point at 6258, drop of less than 0.1%. We've got the Dow up 24,
You're
as I
in?
mentioned, up by
All
about
right.
0.1%. NASDAQ in the green
A
as
market.
well, up 16, a gain there of 0.1%. All of this as President Trump escalates his tariff threats against the European Union and Mexico. And of course, bank earnings coming in tomorrow morning. Right now, we've got the 10-year 4.41%, the 2-year 3.88%. Gold down $8 the ounce, down 0.2%. West Texas Intermediate crude down 0.6%, just above $68 a barrel. Bitcoin, what a story there. 121,500 was flirting with 122,000 moments ago. For Bitcoin, a jump today of just about 2%. So again, recapping, looking at a mixed market now. With
What's
the
your
Dow and
target?
NASDAQ, they are both higher. We've got the S&P 500 index trading down by 1 point. Word of a new destination for Southwest Airlines. Early next year, Southwest will be adding flights to St. Thomas in the Virgin Islands to its network. Service expected to begin in early 2026. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that.
94.
Paul Sweeney, we're
All
live
right,
here
let's
in
see
our
if we
Bloomberg
get it.
Interactive Broker Studio. We're streaming live on YouTube
You may get it.
as well. Tom from the Upper East Side writes in and says, what's going
That was a
on
nice
with
call,
Bitcoin?
dude.
As Charlie mentioned, 121,500. Let's get right to it. Mike McGlone, Senior Commodity Strategist for Bloomberg Intelligence, down in the self-proclaimed crypto capital of the world, Miami Beach, Florida. Mike, what is going on with crypto? That was a heck of a weekend for Bitcoin.
Well, hello, Paul. I'm actually coming to you from that great state of Indiana
There
today.
we
doing my
go.
own crop tour, visiting
Farm
the
country.
family. But what's happening? Yeah, there you
Snooze
go.
is
What's
short
happening- I saw
also.
a farm right by here. What's happening in Bitcoin is a pile-on trade, and in a good way, it's working. But remember, Bitcoin I view as it's a risk-on asset. Risks.
How you
are
doing?
earned.
How you
Down
doing,
record
Ladioff? Are you still in your
highs,
short?
record highs in March, and Bitcoin's just taking off, and it's becoming a lot of it is ETF inflows. But also, you see what's happening with headlines. We have the Trump
94
administration
is
very favorable.
down
We have
here.
the Bitcoin, the stablecoin bill, and the key thing I want to
So
mention
we got
about
Snooze and
stablecoins,
Luther
I like to call them crypto dollars.
in a short.
This asset and this tokenization of dollars.
Everyone's in a short, except for me.
And the first
I'm the
time,
only
but
one
now
not in a short. I'm not doing
putting all
anything.
assets on chain,
I'm
which means
waiting.
Things like Dogecoin worth 30 billion.
Oh shit, this might take you out. You might get it,
Right now,
Luther.
it's quite the risk-on asset, and Bitcoin's leading the way.
Saying all
Ladioff's
that, I mean,
taking
the House of
heat,
Representatives got ready for
5%.
Crypto week. I mean, it kicks off today.
It's fine.
What
Yeah, because you're
exactly
already up
happens at
like
Crypto
3 or
Week? I'm
4
sure
this
there's a lot of
morning
crypto
already, so you're
legislation
not,
going
you
on.
know,
Can
you're all
break that
right.
down for us?
Well, that's the key thing, Lisa. What's exactly going to happen? For me, it's more the macro compared to
You out,
the first
Luther?
Trump administration, where they
Target
really
filled.
pulled back on this
Luther's
awesome
successful.
technology that was adopting the dollar of its base layer, and all these dollars are going in treasuries.
You still
Now
in,
they figured
Snooze?
it out. All this stable coins, this means investment in U.S. treasuries. And at least our government's figured out. A lot of it means that the stable coins are going to have hold one-to-one.
We got some
versus
work to do to get
standard assets
Ladioff back in the
fractional
green.
reserves, which means an issue with the banks, but I'll let them figure out. But the bottom line for me is it means this technology on a global basis is being adopted, and the dollar is the base layer. That means you can get dollars and transmit transaction dollars in your stable coin, and we'll be able to any place on the planet, including places you're not
Okay.
supposed to be.
We'll give us some time.
Which means one key thing is remember
We'll give us
one
some
of the
time.
original reasons
Needs to
Bitcoin was
percolate.
pure cash. What's proving it's not.
Where'd you get in?
That way. I would use Bitcoin like gold to buy.
Luther's
anything,
out.
but it's proving that it's much more digital gold for that space. But in this area, I call them crypto dollars. It's just, I think it's nice to see it's acknowledging this technology and how it's really beneficial for the U.S. because the whole world has been able to And we don't see a lot of stable coins in euros.
I only need 1,400 more and I qualify this account and I can get back in a funded.
Country, Indiana, talk to us about corn.
22,974.
What are you seeing from your farmer friends out there?
Oh, you're on the
unfortunately,
NQ.
very much bear markets.
All right,
Corn
let's
and
go back to the
soybeans have
NQ.
dropped key supports. Corn's
We're
right
gonna
around
watch
$4 a bushel. To put that in context, it first traded that price in
22.
1974 when we had the great grain robbery. I'll touch that later. The peak last in
You're looking
2022
good.
was about 8. Major pressure, great conditions. More supply is a problem. Same with soybeans. The thing about soybeans is less supply from the U.S., but massive supply out of Brazil. And the key reason was that big pump in prices to 2022, Russia's invasion of Ukraine, incentivized more supply. It did the same thing in crude oil. So now we're in the downward trajectory. The key thing is, where is that low price cure? Unless you get some kind of drought to get a spike, we just don't have to figure out how prices, how low they go.
Like one can be a leading indicator of the other.
Demand.
And the biggest thing I watch both on is the VWAP. When they get around the VWAP, it's dangerous because it'll be unpredictable if they're on opposite sides of the VWAP.
For big bank earnings. How does this all affect the markets? Well, here to tell us more about it, Christina Hooper. She's Chief Market Strategist at the Man Group. Christina, thank you for joining us here in the studio. Lovely to have you. I want to point out stocks starting to kind of register.
All right, there's Snooze's short entry.
We saw something a little bit different last week. Were you surprised by that?
Yeah, I think that markets have been surprisingly, shall I say, naively optimistic when it comes to the tariff situation. I think there's not a recognition on the part of markets that even if we see cans continuing to be kicked down the road, it's impacting business decisions. In general, I think what we've seen historically and what we're seeing now is that it's having a chilling effect on business investment and hiring. It hasn't necessarily showed up very much in the data yet, but it will. And I think we have to worry that there are going to continue to be threats made and perhaps at some point actually implemented.
I paper-handed my take profit.
You
did. But you know what? You got profit.
We could certainly get a significantly higher number.
You got profit though, so you don't get FOMO or try and get back in. Don't do that.
CPI is tracking at about 3% year over year. So we have to be concerned, and I think certainly it may not show.
Yeah, just hang loose. Take your profit and just watch for a while. Let's root for Snooze.
But it will show up because tariffs are.
Snooze has got a hell of a short going.
They definitely are. What about for earnings season? You know, of course, kicking up. But data from Bloomberg and
yeah, that's what I do.
Because they say Wall Street
I try not to double dip because if I double dip, it's because it came back to my entry and you're closed already. Shit, dude. Would you get like 30 points? You crushed that shit.
If we look back at March 31st, earnings growth was expected to be about 9% for the S&P 500. We're down below, slightly below 5% now. And I would imagine when all is
I haven't had a lead come in all morning.
Lower than that. So it is somewhat disappointing, but this is these are parts of the cracks I'm seeing appearing
at real work
in the U.S. economy. We can't apply so much pressure and expect it to remain as resilient.
Last quarter, during earnings series,
let's see what happens.
It was just the beginning of all the tariff discussion, and companies, rightfully so, really didn't have any visibility. A lot of companies pulled their guidance. How do you think the guidance outlook will be this quarter? Do you think companies will have a little bit more confidence, or is it still too much unknown?
I think there's still too much unknown. It's going to be hard to provide much in the way of guidance. What they can, though, give us is a sense of where the consumer is now. For example, I'm thinking about the big banks and what we might hear this week. So
you think that we might get the short move down?
Some cohorts of consumers. We saw a few of the big banks.
The forward, you're talking about the control EMAs, right?
See more of that as well.
So you mentioned big banks. Mag 7 earnings kicks off next week, so we have that to follow.
Luther's watching the ES or the NQ?
As much cash into AI?
I would expect that we're going to
Strategy's
continue to
crashing
see a
on the
pretty
ES.
significant stream of money going into AI. I think what we've heard resoundingly from most companies is that the risk
See, volume, I think
investing is greater
my trade box is not on, so volume must be too low to enter a trade.
In terms of valuation here, we've had this sharp rebound coming off that.
Let me check it here in a second. Get this back up.
yet I'm not seeing earnings necessarily going up. Do I need to really be concerned about valuation here?
Absolutely. Valuations are rarely predictive in the short term, but we have to keep our eye on them because at some point it does become the short term and we actually have an impact. And what we know is that historically, when cyclically adjusted PE ratio of the S&P 500 reached levels around where we are today, we've seen significant sell-offs, and I think that's what's likely to happen. There could be a number of triggers. We know stocks are vulnerable at these prices because they're priced at or near perfection, and a trigger could easily come from, for example, earnings disappointment, or in fact, we actually do get some significant tariffs on August 1st.
Now, you talked about this a little bit when you were getting into earnings. You said about how companies are going to approach it. What kind of tone do you think the executives are going to set? Because a lot of people just waiting to see what those top leaders are going to say.
I think they're going to be cautious. I don't know if I can characterize it as cautiously optimistic. I think they're going to be cautious because there are so many unknowns, and we're clearly seeing some signs of weakness for U.S. consumers. I mean, if we just look at
So I usually like to see the forecast cloud closing, like at an angle when it's closing.
Nowhere near what we saw during the pandemic.
And I like to see the stochastics running my way
One of the things Chair Powell has talked about
to do the front run.
Is how we're seeing a match between job creation and job losses. Both are on the low side. But if we see a situation where
I think you got all that trade, Snooze. I think you got it all.
Where there are more and more long-term unemployed, people can't find jobs. I think that creates an environment in which we get closer to a possible recession.
30 seconds. What do we do in the bond market here? Do I take credit risk?
So I think investment grade credit risk.
You got 50 ticks or 50 points?
I am concerned, though, that we are going to see more cracks. And in fact, I'm still
that would be.
That there's
You're right about that.
Probability we go
points,
into recession this year. So
one ES,
very discerning in the
or I'm sorry, one mini,
certainly
33 points.
Long duration.
All right, Christina Hooper, thank you so much. We appreciate it. As
Ladioff is in the profit.
Chief Global Market Strategist for the Mann Group, joining us live here in our Bloomberg.
Everybody's making it happen today.
Coming up, we're going to check in with Jen Bartasha. She's got Kraft Heinz maybe breaking up, and I said, Kraft Heinz, didn't we just put this company together? So then I go and I look at the 5-year performance, Kraft Heinz stock, compounded annual over the last 5 years, basically zero, nothing. Whereas the S&P's risen about 16% compounded over the last 5 years, and even the S&P Consumer Index is up 10%. So breaking up this company, maybe it makes sense, and at least my bankers and my lawyers will get paid here. So we're going to talk with Jen Bartasha coming up. Looking at the markets here, a little bit of red on this screen here as we get ready for earnings to kick off tomorrow. The S&P is off 13 points, the Dow's off 60, and NASDAQ is off 30. Bitcoin up 1.5%, $121,000. For Matt Miller out there, if he could just find the code to his Bitcoin account, then he'd be all set. The euro stronger, 117. I need parity for my trip to Italy in the fall. Can we get parity? Can somebody work on that for me? This is Bloomberg. Good morning.
Yeah, the control is a solid green. When it crosses below the solid red, that's usually the move to go lower, but you need your stochastics with you also. So you would want the stochastics facing your way. And you want the forecast cloud to be almost closed up. See, the forecast cloud, there's still a lot more buying than selling, and it's above the price. So if it's at right, what do you mean the bottom? Like, you wouldn't want to go in at the bottom of this candle. You would want, if you're going to go in, you want to go in from the 20 EMA and take your short down. The stochastic, yes, it's at the bottom. It's kind of acting weird right now. Let me try and fix this. What's going on with this? I must have messed that up. Hold on. I think I clicked down there when I was. There we go. Yeah, so you see really the like the A plus setup is with the stochastics. The slow stochastic is up above the 80, ready to roll over. You've got your green cloud changing to the red, meaning that there's more buying than selling. And then you're going to front run the cross. So you don't really have everything yet. Probably maybe one more rotation up. Maybe one more rotation up, and maybe on the next one that would be like the A plus setup. You know what I'm saying? Maybe we come up and visit and test this fair value gap. Yeah, possibly. I'm kind of looking for a rotation up into this fair value gap, test it, bring that down. See, our forecast cloud is almost closed up. You see that? We're almost ready to go red, so we're getting close. See, forecast cloud went red. We're below the 20. So if we get one more little pop-up and a rollover, that's probably the short. Yeah, I think so. I think we're consolidating for the drop lower. I really do. So let's wait and see if the stochastics pull up. The next time the stochastics roll over, that might be the front run on the EMA cross to go short. That's kind of what I'm thinking. Can I stream the gaming in the evening? You know what? I can try. You know what? Let me, yeah. Once I'm done with work today, I'll try and figure it out. I'll keep the stream up and I'll try and figure it out. And I'll play it. All I got is a keyboard though, so hopefully I can play it on a keyboard and mouse. You know what? I'll try that. Just for fun. It looks pretty cool, but I don't even know what it looks like. I just like Star Trek, so I'm like, oh, well, I'll play with that to figure out how it works. I'm surprised I even got the chat to come up, like advertising it. Okay, cool. I haven't played video games in years and years and years, but I'll try this one out.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red. Choppy start to the new trading week, but the stock market is moving lower. S&P down 8, holding close to a record, though, down 0.1% right now, 62.51. The Dow down 24, lower by 0.1%. We've got NASDAQ reversing earlier gains, down 13, now down by 0.1%. 10-year 4.43% with a 2-year 3.88%. Gold down $11 the ounce, down 0.4%, 33.43 the ounce on the precious metal. West Texas Intermediate crude down 0.4%, 68.18 a barrel, and Bitcoin just below $121,000 right now, 120,890 on Bitcoin. It is showing a gain now of 1.9%. Bottom line here, stocks lower as President Trump escalates his tariff threats against the European Union and Mexico. Christina Hooper is chief market strategist at Man Group. Moments ago, right here on Bloomberg Intelligence, she told us the markets have been acting, quote, naively optimistic.
I think there's not a recognition on the part of markets that even if we see cans continuing to be kicked down the road, it's impacting business decisions. In general, I think what we've seen historically and what we're seeing now is that it's having a chilling effect on business investment and hiring.
Christina Hooper of Man Group. By the way, you can hear more of that conversation on the Intelligence Podcast. You can download it wherever you get your podcasts. Kenvue says CEO Thibaut Mongon will be leaving the company as it continues to revamp the maker of Tylenol, Neutrogena, and Listerine brands.
They're still spinning the narrative that tariffs.
They're gaining on that word. Actually turning lower now. They have been higher.
That's what I'm afraid of, Luther. I think we still got to drop.
Recapping.
Once the reality of the tariffs hit, but I have no idea, man. Honestly, I thought all the people working against Trump would have pushed the market into the 3,000s by now on the ES.
This is Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney.
And then that would have been the base for everybody to push their money in, but it just hasn't happened yet.
Oscar Mayer, no question.
Go. Yes.
Yeah, absolutely.
Okay. See, I'm a Brooklyn girl.
I don't know if the tariffs are going to be good, long term, bad short term. I really don't even know.
Sources saying Kraft Heinz could break itself up.
All right, I'm going to give this another couple candles. I'll be right back, guys. I got to go to the bathroom.
What is this all about? Let's bring in someone who knows about it. Jennifer Bartashis, she's Bloomberg Intelligence Senior Analyst, Retail Staples and Packaged Food. Jennifer, I know sources are saying a lot of things. What's the latest that you're hearing about this breakup?
Yeah, good morning. So this is an interesting breakup because it's 10 years after they merged together, and it seems that the main portions of that initial merger will go their separate ways. The way we look at it, it looks like there's a core group of what they consider their Taste Elevation platform, which is the sauces and the seasonings. Taste Elevation.
Oh, please. That's got McKinsey written all over it. Is that just spices and condiments?
That's spices and condiments.
There you go.
Yeah, exactly. And then they have, that's kind of been their growth area for the last couple of years. So we think that that's really going to be what will be the residual part of Heinz. And then it's undetermined yet exactly what will go into the rest of the business, but it'll be largely those grocery categories where they've invested a lot to try to revitalize brands, and it just hasn't worked in terms of really rejuvenating sales.
You know, when I think about brands in the shop, going to the supermarket, boy, those house brands, private label. Talk to us about the growth of private label in general. Boy, and if you're a brand like an Oscar Mayer or something that you spent gajillions of dollars over 100 years, it seems to kind of go by the wayside almost.
It's true. You've got a good point, Paul. Private label has been consistently growing and got a huge bump since the pandemic.
Yep.
And part of that is that the retailers have really invested in the quality and the differentiation of those private label brands. So where consumers now really consider them not just a replacement for national brands, but in some instances just regular brands of their own right. And so, Kraft Heinz actually had reduced some of its exposure to private label when they sold off the Planters business, when they sold off the cheese, like the shredded cheese business with Kraft. But the core grocery business, they do still have a lot of exposure to private label.
So is this a lot of competition from, let's say, startup food companies appealing to younger consumers? I mean, what kind of sparked this?
Well, there's really been a shift in the way consumers are looking at brands. And unless you own a long legacy brand that you can reinvent and really, drive interest from younger generations, it's really hard to keep that going. And so what we've seen is that they've done a good job with revitalizing things like Philly cream cheese. But despite a lot of investment, brands like Capri Sun, Oscar Mayer, Maxwell House, these brands just aren't resonating with younger consumers. And that means that the growth prospects for those brands are a lot lower. And that makes it hard to really bill yourself as a growth type oriented company.
So I know, as I think back to my M&A memory banks 10 years ago, Kraft and Heinz, Berkshire Hathaway had a big hand in putting these two companies together. And look now, they're still the largest shareholder with just under 28% of the stock. I assume Berkshire Hathaway, Warren Buffett, has kind of signed off on this deal, or is open to it at least?
I would assume that they're open to it. Over time, Berkshire Hathaway has actually done quite well out of this deal, even though Kraft Heinz as an overall entity is probably disappointed in the overall analysis. But the merger was in 2015. It's been 10 years. The value of the deal at the time in 2015 was $45 billion. Today's market cap, it's $32 billion. So and yes, they've sold off a couple of brands, but it just hasn't materialized to be the type of growth that I think Berkshire Hathaway initially envisioned it would happen.
Jennifer, can you dig more into some of the advantages, but also the risks associated with breaking up the company?
Obviously some of the advantages, seems very similar to what Kellogg did when they spun Kellanova and WK Kellogg out into two separate companies. They separated the growth prospects and then those from the slow growth areas. That's very similar to what Kraft Heinz seems to be doing. Obviously, if you can focus on
all right, I'm back.
That gives you undivided attention to really expand and grow. That would be an advantage. I think one of the disadvantages, and this is something that's kind of a broader question to consider, is whether there's
maybe I'll hook the game up around 4 o'clock.
Because we've seen companies like Kellanova split.
Trying to figure it out.
Unilever
I just
spinning
wish
off their
I
ice cream business.
spent more time on figuring out
how those new entities are now being bought up by others. So you've got Mars.
Or not Streamlabs, Stream Elements.
Ferrero acquiring WK Kellogg, but those, in order to get regulatory approval, you have to have categories that aren't overlapping, and so you're seeing a new birth of new kind of conglomerates of dissimilar portfolios, and so it makes me wonder if we're setting up another cycle where in another 5 years, 10 years, we're going to see these companies that have been buying up the underperforming brands going through a similar type of activity.
What's driving all this? It doesn't feel like this M&A activity, whether you're buying or divesting, is out of position of strength. It always feels like, I don't know, I'm doing it because I don't have any growth and I got to do something. I got pressure from shareholders to do something, so I'm either buying or selling. Because your business doesn't have a lot of growth.
No, it's true, Paul. And I think one of the crises that we've sort of seen in packaged food, at least as the North American companies, is a lack of real true innovation. So what's happened is a lot of companies have fallen into this pattern of innovation being a new flavor or a new extension, a new size of the product. And that's not really what gets consumers excited.
10 minutes
till
till I got to make a phone call.
Products to market, and that's an expensive endeavor. And
I would prefer the stochastics be above the 80. They're starting to roll over now.
We just haven't seen a lot of home runs coming out since the pandemic, and so I think when you've got that,
I'm gonna give it another couple candles. I'm not in a hurry.
And say, how do we focus on the strengths that we have, and can someone else do better with the categories where we're not doing as well?
All right, Jen, thanks so much for joining us. Jen Bartashes, Senior Retail Analyst, Bloomberg Intelligence.
ES is moving down
Nathan's Hot Dogs.
harder.
Ketchup or mustard?
Oh, mustard with sauerkraut and red onions.
Okay.
I also don't like. I don't like making a move straight into the VWAP because the VWAP will smack it around.
Well, here's the thing. I just came back.
See, look at this. This is a really good move on the ES.
On your hot dog? No, that's a big no-no. They do not do that in Chicago.
In Chicago.
But I mean, it's only 4 or 5 points away from the VWAP.
I'm definitely a mustard person, but again, you throw a hot dog in front of me with ketchup, I'll probably eat it as well. So there you go. S&P 500 down 11 points here today. This is Bloomberg.
Right, if I can get in here.
Filled.
All right, I'm not going to stay in this too long. I'm in the ES on a short. All right, taking some heat. Let's see what happens here. I might be in one rotation too early. I don't know, short order block, just fire.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
Welcome back to Bloomberg Intelligence. I'm Lisa Mateo alongside Paul Sweeney. Weight loss drugs, right? All the rage. I always want to know what is the latest
fake out.
with it. So here with that and much more is Sam Fazeli, Bloomberg Intelligence Director of Research for Global Industries and Senior Pharmaceuticals. Sam, thank you for joining us this morning. Just want to ask, what is the latest? Because we hear so much about weight loss drugs and different companies. What's the latest you've been hearing so far?
Yeah, hi, Lisa. So in terms of what's happening in the market, we're still waiting to see whether the prescription counts for Novo Nordisk's US Wegovy numbers are up or not.
The stochastics roll over. I may add to it and then get out.
Scripts that doctors are writing for their Wegovy. And the opposite is the case for Lilly Zepbound. It continues to keep going up. And it's a pretty interesting battle, which seems to be currently being won by Lilly, and time will tell. What is interesting is that my colleague Aude Gerspacher just finished a deep patent analysis for that's right, exactly, Paul, for Wegovy. And I mean, the dates in terms of patent expiry, of course, they're important because that's when generics can come in and compete with you. Here we go from
Oh, this is the danger of the front run. The front run looked good, and then it rejected the 50.
I mean, look, that's an amazing outcome, and she puts a decent probability on it in terms
so
of
let's see
the
if
ways that they could protect
it rotates out,
could mean
and then
a lot for a product that could be selling $5 or $10 billion
maybe we just got in one
All right,
rotation
we gotta
early.
get to the elephant in the room here. I mean, Jesus, for our listeners on radio, Sam is in some kind of contraption, like he. I'm guessing he fell off a bar stool and hurt his arm or shoulder here. What happened, Sam?
It's that cheap drink you guys sell in the U.S. You know, it just doesn't work for me. What I need is classified both red wines and white wines, right, Paul?
So what? I mean, I'm assuming there's something
All
going on
right.
there. So, all right.
So that's, you know, we tried to do the front run. It was too early, and it came back against us. So I should have waited. It's all right.
So talk to us about what's the latest on the cancer field, Sam? I know you go to a lot of conferences and you're on top of the latest research. What should we as consumers?
Yeah, it was really a continuation.
And investors in healthcare stocks and biotechs, what should we be thinking about as the next frontier on the cancer front?
Yeah, I mean, we have a bunch of conferences coming up very soon. So the myeloma conference, the International Myeloma Society in September, the World Lung Cancer Congress, then there's the big European Society for Medical Oncology conference in October. During these, we're going to hear about whether there's going to be big step changes again in the treatment of some diseases, particularly lung cancer. So we got Summit Therapeutics with possibly some data coming up, maybe at the World Lung Cancer, we'll see, or at ESMO. And we've just done a survey of U.S. physicians, which came
we got
back
the
with
forecast cloud
very
heading
interesting
back
comments,
green.
which you're going to write
So
about tomorrow. about some other trials that are ongoing. So obviously,
So we should have waited for the stochastics to be up here instead of getting in a little too early.
But there is stuff still happening in cancer where we're seeing
should have
potential
waited
for
for them to
paradigm
be up
shift,
here.
and that's some of the things that we'll be referring to tomorrow. Of course, in the middle of all this,
Like
we
I
have
had said.
pharma companies continue looking for products to expand their pipelines through M&A.
Now, Sam,
They look
we've
good,
been
though.
talking a lot about tariffs lately. How is the biotech sector, even pharmaceuticals, if you can dig more into how they're being affected by tariffs?
Yeah, so that's one area. If you look at the performance of the pharma stocks relative to the rest of the market, I mean, Mag 7, I mean, I don't know where they're going, but Paul, I'm sure, knows more because of the background he has in analyzing tech. But they just keep going up. I mean, there's nowhere else for them to go. If you put them aside, okay, the S&P 500 maybe hasn't been as magical as when it includes the Mag 7, but pharma has been a little even less, a bit more lackluster, partly because of this continuing conversation about tariffs. That 200% is something that President Trump mentioned just very recently, although it's delayed till next year. You've got your most favored nation pricing that's coming up. You've got your possibility that the regulators are going to be, we don't know where the regulators are going at the minute, to be honest with you. Positive, negative, favorable, not favorable for the evolution of regulatory framework in the US. So there's a lot of questions, and I know this is Paul's favorite word, uncertainty, that still dogs the pharma sector.
Yep, that's certainly the case. And maybe, August 1 might be a date. We get some more clarity there. Sam Fazeli, Director of Research for Global Industries and is Senior Pharmaceutical Analyst for Bloomberg Intelligence. He's convalescing there in London in our London studios. But he makes it into the studio, folks, even with one arm in a sling. So we appreciate that. He's playing hurt out there for us. That's what happens when you get old, Lisa. Things happen. They just kind of go out.
Are we going to see you in a sling?
I hope not.
I hope not.
I hope not. Exactly. So, Sam Fazeli there. So, and M&A. You mentioned M&A. I'm just so far in the first quarter. This is according to Sam's notes. So far in the first half, $32 billion of M&A in pharma, 13 deals. Last year it was $16 billion for 16 deals. So dollar amounts certainly bigger this year. And we had the $10 billion deal for healthcare company.
Are you still holding that short?
Just last week. So again, I always joke that in my next life, I'm coming back as a healthcare M&A banker because they get paid every.
I don't know when it ends
these
right
companies,
now.
if they can't, it seems like if they can't come up with a drug, develop a drug in their own R&D labs, they just go out and buy the best promising prospect out there, and that's kind of how it works.
I know.
So you get these biotech
A lot of
companies,
F doesn't close.
if it hits, boom, it's a double, triple. If it misses,
That's
it's
the
a
advantage
zero.
of having a
It's such
huge
tough
cash account,
business out there.
is
That's why I
you
think
can let it
investors
ride.
love the biotech business so much because it is a hit or miss business. So we got all that coming. All right, let's take a look what's happening out there. For more conversations like that's not.
If I wasn't on a prop firm, I
We can talk
probably
about
would
the
have added
market
and
coming
then
up
kept
in
holding
just a moment.
until the
S&P
next
500
rotation.
Off
Then I
3.5
would've got
points.
out.
This is Bloomberg. Good morning.
Yeah, yeah.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a debt
I
spiral.
gotta make a phone call. I'll be back, guys.
Are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
All right, coming up in this hour, we are waiting potential comments from President Trump. If he does issue those, we will bring them to you live. Courtney McBride, Bloomberg national security reporter, is going to report to us on President Trump is talking about a, quote, major Russian statement today. She'll have some preview of that. Michael McKee, Bloomberg international economics and policy correspondent, talking about the trade situation out there. We look at a lot of countries talking about banding together to trade amongst themselves and maybe defend themselves against some of the U.S. trade practices are out there. We'll get the economic impact there. Walter Todd, President and Chief Investment Officer and Managing Director at Greenwood Capital. We'll get his thoughts on the markets here. Craig Trudell, Bloomberg Global Autos Editor, give us the latest on Tesla and Mr. Musk. Always in the news. But right now, let's kick it off. Charlie Pelham.
Very much, and here's what's going on. Right now, looking at a mixed market, we got NASDAQ higher. The Dow, the S&P, they are both in the red. Stocks are falling as President Trump escalates his tariff threats against the European and Mexico. Keep it locked in to Bloomberg Radio for the latest on any tariff developments. Here's where we stand. The S&P lower, little change right now, down by 1 point. The Dow is down 14, drop there of less than 0.1%. Choppy session, NASDAQ up 35, now up by about 0.2%. The Bloomberg Mag 7 index up 0.1%, with the 10-year currently yielding 4.43%, the 2-year 3.89%. Gold down $10 the ounce, down 0.3%, 33.44 on the precious metal. West Texas Intermediate crude down 0.5%, 68.07 a barrel, and Bitcoin at 121,000 right now. It is up by 1.6%. So tariffs front and center. As for the economic backdrop, Julie Beal is portfolio manager at Kayne Anderson Rudnick.
The U.S. economy is still the most dynamic. It has the most stability to it. It has the most innovation. Our universities are bar none the best in the world. There's so much in this market that is really attractive and creates everyone to want to stay in relations with. But I think there's also this recognition of diversification being good, not just for our portfolios, but for the rest of the world in terms of the stability of their trading partners.
Julie Beal of Kayne Anderson Rudnick. Bank stocks now higher after earlier losses. America's biggest banks heading into earnings season with tailwinds from trading and lending as they benefit from market volatility and steady borrowing costs. JP Morgan Chase reporting tomorrow morning up by 0.2%. Citigroup little changed, up just under 0.1%. Wells Fargo up 0.3%. By the way, all three report tomorrow morning, and yes, Bloomberg Radio is going to be all over those numbers as they cross the tape. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. As Charlie's just reporting, got some red and green on the screen here. Let's take a look at some of the stocks on the move today. I'm Paul Cini with Lisa Mateo, and we're joined by Bloomberg's Denisa Sekova. Denisa, what are you looking at today?
Everyone's talking about crypto, so let's look at the cryptocurrency exposed stocks. Of course, Coinbase, a major one, up about 2% year to today, and then 60% year to date. This is really one of the biggest winners. Bitcoin itself obviously is rallying past 120,000. It's up 30% year to date. And we're in Crypto Week. Recently, the Congressional Committee declared this week as Crypto Week. We have major legislation moving through the U.S. House of Representatives. It's coming at a time where we have a lot of institutional demands. We have retail demand. We have ETF flows going wild in that space, going back to almost as high as they were in the beginning when those funds were launched. And really everything is up. Riot Platforms, Mara, Circle, there are so many companies benefiting from that. There is stablecoin legislation going forward. So really, as markets are seeing mixed start of the week, crypto is emerging as one of the winners here.
Boeing also got some good news from investigators. So is that helping shares at all?
Yeah, we're not seeing a big spike. In earlier trading was a little bit stronger, but Boeing indeed is up. The ticker is BA. It comes after a preliminary report that the Air India crash, and they found no evidence so far that would require them to take actions over Boeing 787 aircraft and the General Electric engines. General Electric is up on the news as well. The accident doesn't appear to have anything to do with the aircraft design, which is important for Boeing. Obviously, it had a very rough year last year. It was down 30%. There were investigations, and there were a lot
this
of
is what the stochastic should look
aircraft.
like.
What we're seeing this year is
Instead of going for the half one. I got tricked out by the
half
half one.
CD boosted its target. Bernstein boosted
This
its
whole
target.
I got faked out here. This was really a continuation to go higher. It didn't follow through. But that can be the risk of trying to front run it also, you know.
The investigations.
And a 52-week high for the stock. So it seems like it shed some of its concerns that a lot of investors had. And out of that Air India crash, I just kind of was looking at a lot of the
now
news.
We're up here. It's a little stronger.
Like error.
But I don't have anything else to go with it.
You have to physically flip those switches, and they don't make.
I would only be taking a trade based off these stochastics crossing down
The preliminary investigation finds that
with nothing else to support it.
We have Best Buy down on the day. It's coming off a Piper Sandler downgrade. It's currently neutral. They say they don't see meaningful catalysts in the coming quarters when it comes to earnings growth. Obviously, that was a big beneficiary from the pandemic boom. A lot of people were splurging and buying so much. And, you know, it's definitely been a slowdown. The company is down 18% year to date. The company has been trying to reduce its exposure to China, but last earnings season, it reduced its sales and profit outlook. So it's definitely been one of those retail names where we see a lot of pressure. We saw Prime Day doing great, but clearly it has rising competition for Best Buy, and that's putting a lot of pressure there.
All right, Denitza, thank you so much. We appreciate that, as always. Denitza
We'll get the next
Sekova,
one.
She is a Bloomberg reporter.
I'm not going to
for
overtrade.
us in our studio here. Let's switch gears.
Can't take a win on all of them,
get
but you
back
sure
down to
can blow up your
Washington,
account
D.C.
losing your mind when you take a
Joins us
loss.
here. She's a national security reporter for Bloomberg News. President Trump plans, quote, major Russia statement Monday. Mulls some sanctions, I guess. Courtney McBride, national security reporter in D.C., joins us. Courtney, what do you expect to hear from President Trump today?
Well, I mean, it's anyone's guess. The president did say last night that he is planning to send more Patriot anti-missile batteries to Ukraine. He made clear that the U.S. wouldn't pay for those, but allies would do so. But, you know, it remains to be seen exactly what he means about this major statement. He's going to be meeting imminently with NATO Secretary General Mark Rutte. And so, you know, potentially we'll make that statement alongside him. There is also legislation moving in Congress that would give the president a little bit more power and some discretion on additional sanctions on Russia. But it's really unclear exactly what this major announcement will entail.
So why the turnout? I mean, hasn't the Trump administration kind of held back on providing weapons to Ukraine?
Well, I mean, the administration was, aside from a few pauses, the administration was continuing to deliver weapons to Ukraine that had been previously purchased by the Biden administration. So it was continuing to run down those supplies, but had not approved additional supplies for Ukraine. But the president has been very clear that he wants to help secure a lasting peace between Russia and Ukraine, and resisted a lot of additional pressure on Putin, as he thought that may derail those efforts. Now, after conversations with Vladimir Putin, he's signaled that he's frustrated with Russia's intransigence, and that this may be the way that he moves forward.
Yeah, following up on that, Courtney, President Trump always has prided himself on deal making. Doesn't seem to be working too well with President Putin. Where does that all stand? What do we hear from the White House?
Right. Well, you know, Secretary of State Marco Rubio, who is, of course, also serving as National Security Advisor, met with the Russian Foreign Minister Sergei Lavrov last week in Kuala Lumpur. And, you know, the president and President Putin have had these conversations. And, you know, President Trump has indicated that Russia is not willing to make the sort of concessions that he thinks are necessary to actually move forward toward peace. And so this is a way potentially to exert more pressure and more leverage on Russia to come to the table.
Courtney, I want to go back to something you were talking about earlier, tougher Russia sanctions bill. This was an interview with NBC where the president also says that he expects the Senate to pass those tougher sanctions on Russia. But it's sponsored by Senator Lindsey Graham of South Carolina. So what is all of this together telling you?
Sure. Well, you know, Senator Graham's bill does have some waiver authority for the president. So the idea is to give President Trump, you know, the greatest possible latitude. But this would allow some, you know, more financial restrictions on Russia that ostensibly could bring Putin to the negotiating table in a way that he has not been willing to come. And I think many supporters of Ukraine think that the combination of additional weapons for Ukraine and additional sanctions, you know, could be potentially game-changing.
It's, you know, call me a skeptic, but we've been putting sanctions on people for decades to seemingly little to no effects here, including Russia. And I thought I heard that from President Trump during the campaign, that he was looking for a quick end to this war. Is that still the policy or the expectation of this administration, do you think?
Well, there's, there's been a shift, I would say, rhetorically from the president and from others in the administration that obviously the 24-hour deal is not in the offing, that it's a much more complex situation than that. But he does still seem confident that with the right levers in place that he can secure a deal and an end to the war.
Courtney, President Trump, he's been really critical of Russian President Vladimir Putin over Russia's continued attack on Ukraine. Have we heard? Oh,
well, I think we may have President Trump, so we're going to go to that right now down in Washington. Courtney McBride, national security reporter, thank you so much. Right now, let's go to Washington, D.C., President Trump in the Oval Office.
Secretary General of NATO, highly respected by everybody that knows him, but in particular the European countries. They have great reliance on him, and he's done a fantastic job. And we had a tremendous meeting, I guess it's about a month ago, and I think Mark will tell you that it was really perhaps more important the date of November 5th. That was the election day. Maybe that was the most important because we've made tremendous progress together. And one of the reasons that you're here today is to hear that we are very unhappy, I am, with Russia. But we'll discuss that maybe a different day. But we're very, very unhappy with them, and we're going to be doing very severe tariffs if we don't have a deal in 50 days. Tariffs at about 100%. You'd call them secondary tariffs. You know what that means. But today we're going to talk about something else. And as you know, we've spent $350 billion approximately on this war with Russia and Ukraine, and would like to see it end. It wasn't my war, it was Biden's war. It's not my war. I'm trying to get you out of it. And we want to see it end. And I'm disappointed in President Putin because I thought we would have had a deal 2 months ago, but it doesn't seem to get there. So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%. And that's the way it is. It can be more simple. It's just the way it is. I hope we don't have to do it. But regardless, we are going to be, we make the greatest military equipment in the world, whether it's missiles. You saw that recently in Iran, the way those planes flew in. They had every single, 14 bombs hit every target. Then you had the helicopters shoot a total of 30 bombs, 30 missiles, and they hit every single, Marco, is that right? Every single piece, every single target. And it was, I guess, on a scale of 0 to 10, they say it was about a 15. That's how successful it was. That's how lethal it was, a word they like to use nowadays. But it was an amazing, well-organized attack that people in this country wanted to do for 24 years. You know, when we had the pilots in last week, they were saying, sir, we've been practicing this for 24 years, meaning people, not them, but other people that are a little older now. But they too, and you were the one that let us do it. But we've been practicing it 3 to 4 times a year for 22, 24 years, because they always knew they had to stop Iran from doing what they were doing, which is trying to come up with a nuclear weapon, a nuclear bomb. And we did it very successfully. And we make the best equipment, the best missiles, the best of everything. The European nations know that. And we've made a deal today, and I'm going to have Mark speak about it, but we've made a deal today where we are going to be sending them weapons and they're going to be paying for them. The United States will not be having any payment made. We're not buying it, but we will manufacture it and they're going to be paying for it. Our last meeting of a month ago was very successful in that they agreed to 5%, which is more than $1 trillion a year, so they have a lot of money. And these are wealthy nations. They have a lot of money, and they want to do it. They feel very strongly about it, and we feel strongly about it, too. But we're in for a lot of money, and we don't want to do anymore, and we can't. But we make the best, and we're going to be sending the best to NATO, and in some cases to maybe, at Mark's suggestion, if we go to Germany, where they're going to send early on missiles, and they'll be replaced, and NATO is going to take care of it. It's going to be coordinated by NATO, and they're going to work very much with Matt Whitaker, who's right here, who's a great ambassador, and Matt's going to be coordinating. You better do a good job, Matt.
I will.
but Matt's going to coordinate. He's a very talented guy. He's going to coordinate everything. So in a nutshell, we're going to make top-of-the-line weapons, and they'll be sent to NATO. NATO may choose to have certain of them sent to other countries where we can get a little additional speed, where the country will release something and it'll be mostly in the form of a replacement. And I'd like to have Mark, and again, just a highly respected, pretty young guy for having had the career that he's had, because he had an amazing career before going to NATO. So and we spent a lot of time together over the last couple of months. And if you could say a few words.
Absolutely. No, Mr. President, dear Donald, this is really big. This is really big. You called me on Thursday that you had taken a decision. And the decision is that you want Ukraine what it needs to have to maintain, to be able to defend itself against Russia, but you do want Europeans to pay for it, which is totally logical. And this is building on the tremendous success of the NATO summit. The 5%, but also the decision to keep Ukraine strong, and the decision to increase our defense industrial production. So based on that, that was Europe stepping up. This is again Europeans stepping up. So I've been in contact with many countries. I can tell you that at this moment, Germany massively, but also Finland and Denmark and Sweden and Norway, the United Kingdom, the Netherlands, Canada, they all want to be part of this. And this is only the first wave. There will be more. So what we will do is work through the NATO systems to make sure that we know what Ukrainians need, so that we can make packages. Of course, in a way, we discussed it this morning with Pete Hegseth at the Pentagon, in a way that, of course, the US will put on its stockpiles necessary to defend this country. That's absolutely clear. But it will mean that Ukraine can get its hands on really massive numbers of military equipment, both for air defense, but also missiles, ammunition, etc., etc. So if I was Vladimir Putin today and hear you speaking about what you were planning to do in 50 days and this announcement, I would reconsider whether I should not take negotiations about Ukraine more seriously than I was doing at the moment, if I was Vladimir Putin. But when I'm Ukraine, I think this is really great news for them. So I really want to thank you for that. And it means the Europeans paying for it. And again, I mentioned all these countries, we will deal with that. And exactly as you said, it might also mean that countries will move equipment fast into Ukraine, and then the US later backfilling it, because speed is of the essence here. So really, thank you. This is important.
You did a great job. That's a really great job. We've been very successful in settling wars. You have India, Pakistan, you have Rwanda and the Congo. That was going on for 30 years. India, by the way, and Pakistan would have been a nuclear war within another week, the way that was going. That was going very badly. And we did that through trade. I said, we're not going to talk to you about trade unless you get this thing settled, and they did. And they were both great leaders, and they were great. But Rwanda and the Congo, that was going on for 30 years, and at least 7 million people killed, and killed with a lot of pretty rough weapons like machetes, heads chopped off, going on for many years. You couldn't even get near the countries. Nobody wanted to get near it, so frightening. And we got that one solved. Serbia, Kosovo, got that solved. That was going to be one that was going to happen. And again, that was something I use. I use trade for a lot of things, but it's great for settling wars. That was really very important. We're working, Marco is working very hard with everybody here on the Strip, the Gaza Strip. I call it the Gaza Strip, one of the worst real estate deals ever made. They gave up the oceanfront property, one of the worst deals ever made. But it was supposed to bring peace, and it didn't bring peace. It brought the opposite. But we're doing pretty well on Gaza. Steve Witkoff is here, and I think we could have something fairly soon to talk about. And we solved another one, that we just seem to have, Armenia and Azerbaijan. It looks like that's going to come to a conclusion, successful conclusion. We worked on Egypt with a next-door neighbor who is a good neighbor. They're friends of mine, but they happened to build a dam which closed up water going into a thing called the Nile. I think if I'm Egypt, I want to have water in the Nile, and we're working on that one. It's a problem, but it's going to get solved. They built one of the biggest dams in the world, a little bit outside of Egypt. You know about that? You've been hearing about that one. And that turned out to be a big problem. I don't know. I think the United States funded the dam. I don't know why they didn't solve the problem before they built the dam. But it's nice when the Nile River has water. It's a very important source of income and life. It's the life of Egypt. And to take that away is pretty incredible. But we think we're going to have that solved very quickly. So we do good. The only one we haven't been able to get to yet is Russia. I'm not happy, and I will tell you that Ukraine wants to do something. Again, it's a war that should have never started. If I were president, it never would have happened. I used to speak to President Putin about it a lot. It was the apple of his eye. But once I saw what was going on, I said, they're gonna have a war here. I was outside. Election was rigged. I was outside looking in, and I said, that thing's going to be a war. Couldn't believe it, because what Biden said was the exact opposite of what should have been said. And it started, and it's a real mess. We're losing, I guess they're losing 5,000 or 6,000 people a day. It's actually now more. I was saying 5,000 a day. It's actually more now. Mostly soldiers, but a lot of people in cities and towns that are getting blown up too. It's a horrible war, and it should be stopped. And so if it's not done, if we don't have an agreement in 50 days, that's what we're doing. Secondary tariffs, and they're biting. And I hope we don't get to the point where we do, but I've been hearing so much talk. It's all talk. It's all talk, and then missiles go into Kiev and kill 60 people. It's got to stop. It's got to stop. But the purpose of this is to say that this is a very big deal we've made. This is billions of dollars worth of military equipment is going to be purchased from the United States, going to NATO, etc. And that's going to be quickly distributed to the battlefield. Ukraine will take it up. And, say what you want about Ukraine. When the war started, they had no chance. And they still would have had no chance if the equipment, they had the best equipment. Because we do make the best planes and missiles, and we make the best military equipment in the world by far. We have new things coming out that are beyond belief. And I'm very excited about the Golden Dome. It's going to give us very strong protection. We've already started that. But they had courage, because somebody has to use that equipment. And they fought with tremendous courage, and they continue to fight with tremendous courage. But they don't have, they're losing on equipment, and Russia's really taken a very positive, very strong, what they've done the last couple of weeks.
Without military reasons. So what they are doing is 700 drones a day, missiles, bombing cities. This is not because of military goals. It is just creating panic, keeping people out of their sleeps, hitting towns. It's really terrible, and it is meaning a lot of people lose their lives, but also the infrastructure, whole cities being
they're wiping out the electric. It's going to take years to rebuild it. That's going to be the next problem. Because, but that's going to take a long time. Many of the cities are knocked down to the ground. Many of the people have left, but many have stayed. I don't know. They actually stay. Most have stayed. Actually, it's incredible that they stay, and knowing that a missile could be hitting your apartment house, and your apartment house that you're sitting in could collapse on top of you. And they do very heavy construction. They don't use rebar. They do very thick concrete construction. Those are heavy buildings, big buildings. And heavy buildings, and they collapse like they're made out of paper. It's unbelievable to see this happening with so many people being killed. So we think we're going to make progress, and we hope we're going to make progress. In the meantime, we're going to get you good service on what you need. And we really became friendly with NATO this last meeting. We went from 2% to 5%, which everyone said was not even a possibility. They weren't paying 2%. Many of them were paying much less than 2%.
But even those, since you became president, all committed to the 2% before the summit. And now collectively we committed to the 5%.
That's right, they did. And they've been very good. And I think I made a lot of friends over there. We had a couple of days of very intensive talks. And they're great people. They're leaders of countries. Many of them great countries, some of them smaller countries, but for the most part, I'd say very solid, strong countries, and very successful. Some of them are among the most successful countries in the world. So that's the story. We hope that's going to have an impact on Vladimir Putin, and we hope it's going to have an impact on Ukraine also. We want to make sure that Ukraine does what they have to do. All of a sudden they may feel emboldened, or maybe they don't want. This is a very difficult situation.
Ukraine wants a peace deal.
I think so.
And they will stay committed to that. There's no doubt. They want it. But the Russians have to become
They have to continue to want it, though.
Yeah, I agree. But you and I will make sure of that.
All of a sudden they get no.
You and I will make sure of that.
We'll make sure. I feel confident that they will do what has to be done. Plus, we have certain parameters that both sides know, and we already know what should be done. So I think that's going to be it's going to be very strong. We want everlasting peace. Any questions, France? Yes.
Thank you, Mr. President. What was the tipping point for you in making this decision? Was it a conversation with President Putin? Was it a piece of intelligence? And why are you giving 50 more days?
I think I think it's a very short period of time. I think, don't forget, I've just really been involved in this for not very long. And it wasn't initial focus. This is a Biden war. This is a Democrat war, not a Republican or Trump war. This is a war that would have never happened. It shouldn't have happened. A lot of people being killed. When the final numbers come in, you're going to see a lot more people are being killed in this war than you think, than you've been writing about. It's a very deadly war. They're all bad, but this is a very deadly war. The numbers are going to be far greater. When an apartment house comes down, and they say 2 people were slightly injured. No, many people were killed. And those numbers will be at some point accurately reported. So far, they're not. It's a deadly war. I think that you're just going to see. I think you're going to see strong movement. I hope so. I hope so.
And what about
the secondary tariffs are very, very powerful.
What about the tariffs that the Republicans in the House and the Senate have ready? Those were 500%.
Sure.
Why are you doing 100%?
Well, the Republicans are moving very strongly in the Senate, giving us total control of it. But I'm not sure we need it, but it's certainly good that they're doing it. And Lindsey Graham's working hard. The whole John Thune, all of them, they're all working hard. And they're in coordination with Mike Johnson, Speaker in the House. And I think they've actually crafted a pretty good piece of legislation. It's probably going to pass very easily. And that includes Democrats. And there's some little tweaks. But I don't want to say I don't need it because I don't want them to waste their time. It could be very useful. We'll have to see. But we can do secondary. We're probably talking about 100% or something like that.
So can you clarify
we can do secondary tariffs without the Senate, without the House. But what they're crafting also could be very good.
So are you suggesting then that the Congress should move forward with those sanctions, the 500%, and that your 100 would be a separate additional package?
Yeah, I mean, the 500 is, sort of meaningless after a while because at a certain point it doesn't matter. It's not going to be, 100. 100 is going to serve the same function. But, I have it at 100%. They may have it, I don't know what they're going to end up with. They may have it at 100 too. They may have it at 500. But they're doing some good work in the House, and I think in the House and the Senate. And as you know, they're coordinated, and they can have it done quickly. They said they'll have it as quickly as I need it. So we'll see. We're talking to him. In fact, John Thune's coming over later on to talk.
Did you call for it yet?
Yeah, he's gonna come over.
Thank you, Mr. President. Is it your view that Vladimir Putin mischaracterized his dedication to? Is it your view that Vladimir Putin did not clarify his intention to a peace deal?
Well,
and what happens now in the next phase? Is there?
You're going to see. I mean, we're going to go for a period of time. Maybe he'll start negotiating. I think I felt. I don't know about you, Mark, but I felt that we had a deal about 4 times.
Mm-hmm.
And here we are, still talking about.
And he didn't send serious people to the negotiations. So I remember that you were able with Marco Rubio.
Hey, there's a way to make a little box that you can put in the corner, right? Like for a camera or another screen.
And we really put pressure on the Ukrainians to send a senior team into Istanbul, and they did. But then the Russians came up with this historian explaining history of Russia since 1250.
We thought, and I thought, we should have had a deal done a long time ago. But it just keeps going on and on and on. Every night people are dying. A lot of people, a lot of Russian soldiers are dying, by the way. And a lot of Ukrainian soldiers too. But a lot of Russian soldiers are dying.
100,000 Russian soldiers since 1st of January. Since January. 100,000 Russian soldiers dead since January. So if anybody in Moscow is listening to this, again, 100,000 dead Russians since January. This is what President Putin is doing at the moment.
Yeah, please.
Will these be Patriot missiles specifically, or Patriot batteries that you're planning? And
Everything.
when do you
everything? It's
everything?
Patriots. It's all of them. It's a full complement with the
that.
batteries.
And when do you expect them to arrive in Ukraine, sir?
Well, we're going to have some come very soon, within days actually, because a couple of the countries that have Patriots are going to swap over, and will replace the Patriots with the ones they have, and Matt will coordinate with NATO. But so it's going to be, they're going to start arriving very soon.
And this afternoon, Boris Pistorius, the German defense minister, is visiting Pete Hegseth, the Secretary of Defense, and we'll discuss also, I think, on this whole Patriot thing. Norway is involved, so that's on the Patriots, but this whole deal is also about missiles or ammunition, so it's broader than Patriots.
We have one country that has 17 Patriots getting ready to be shipped. They're not going to need them for them. So we're going to work a deal where the 17 will go, or a big portion of the 17 will go to the war site.
Mr. President.
That could be done very quickly.
Mr. President.
Yeah, please.
Could this transaction with NATO be viewed as a step towards achieving peace, letting Putin know that now Zelensky has a little bit more powerful tools in his tool chest, and maybe that brings him to the table to achieve peace? I know that you wanted to do that.
Brian, that's what we've been saying. I think you might have expressed it better if you wanted to.
Is that totally annoying, or is that okay?
That was a nice summary. I think he's done better than us. He's a very good guy.
I was just playing around.
But no, it's well said. Yeah,
I don't know if there's a way to move it around.
A chance at getting peace, or it's just going to be the same thing. And I have to tell you, Europe has a lot of spirit for this war. A lot of people, you know, when I first got involved, I really didn't think they did, but they do. And I saw that a month ago, and you were there, most of you, many of you were there. The level of esprit de corps, spirit that they have is amazing. They really think it's a very, very important thing to do, or they wouldn't be doing it. Look, they're agreeing to, just, you know, they're paying for everything. We're not paying anymore. We have an ocean separating us. I said, we have a problem. We make the best stuff, but we can't keep doing this. And Biden should have done this years ago. He should have done it from the beginning, but he didn't. He didn't know he was there. This guy, what a horrible job they did for this country. And I just hope between the border and this and so many other, inflation, what a horrible administration. The worst administration in history, in my opinion. It's not my opinion. I think it's everybody's opinion. But this is something that shouldn't have happened, and we're going to see if we can end it. I do want to make one statement. Again, I said it before. This is not Trump's war. We're here to try and get it finished and settled and whatever. Because nobody wins with this. This is a loser from every standpoint.
From day
this
one.
was Biden, and this was other people. And it's very sad. It's a very sad situation. This gentleman's doing a great job. He's going to. I think he's going to get it, and Matt and everybody else that's working on it. I think he'll get this thing over with, hopefully.
Mr. President, you've praised European countries today as standing up for Ukraine, as being strong. Will you allow them to continue to negotiate tariffs lower than 30% before August 1st, or is the deal set at this point?
What does that mean? You mean you're talking about the tariffs?
On trade, on tariffs.
You're back on tariffs. You're on a more friendly tariff, right? A little bit more friendly tariff.
Perhaps.
No, we're going to be talking to people. We have, you know, I watched the show this morning. They were talking about, well, when's he going to make the deal? The deals are already made. The letters are the deals. The deals are made. There are no deals to make. They would like to do a different kind of a deal, and we're always open to talk. We are open to talk, including to Europe. In fact, they're coming over. They'd like to talk to us.
Mr. President, is there any concern about the U.S. stockpiles? There was a pause in delivery of weaponry to Ukraine in order to evaluate, apparently, the U.S. stockpiles. What came out of that?
Evaluation. I mean, this was a very big, what we're talking about today is a very, very big day. And what Pete was doing, and me too, I knew what Pete was doing, was evaluation, because we knew this was going to happen. And now we actually announced it. They voted on it. It's all been done. So obviously that has a big impact on, you know, when you say pause, obviously you're not going to be doing things if you don't know what's going to happen here. But we were pretty sure this was going to happen, so we did a little bit of a pause. But this is a very big event today. This is something very...
Mr. President, if Putin escalates further, how far are you willing to go in response?
In what?
How far are you willing to go if Putin were to escalate, send more bombs in the coming days?
Don't ask me a question like that. How far? I want to get the war settled. They're not Americans that are dying in it, and you know I have a problem, and JD has a problem. It's a stance that he's had for a long time. They're not Americans dying, but there are a lot of people dying, and on something that should be able to be settled. And we all agree with that. This group of people, you know, we want to defend our country, but you know, ultimately, having a strong Europe is a very good thing. It's a very good thing. So I'm okay with that. Yeah, please, in the back.
Yeah, is there a ceiling on what the Europeans are willing to pay for? And it sounds like, well, are you ruling out the U.S. paying for some from additional weapons through drawdown authority?
Shall I try to answer that? Because basically what the president is saying, that he is willing, of course, taking consideration what the U.S. needs itself. So it's not that you can have a shopping list and you can order whatever you want, because the U.S. has to make sure that the U.S. keeps its hand on what the U.S. needs also to keep the whole world safe, because in the end you are the police agent of the whole world. You're the most powerful nation on earth, the most powerful military on earth. But given that, the US has decided to indeed massively supply Ukraine with what is necessary through NATO. Europeans 100% paying for that. And what we have been doing over the last couple of days is talking with countries, and I just mentioned the ones who in the first wave immediately said, we want to chip in. And then you're really talking about big numbers. Take Germany visiting today. They're really talking about big numbers.
Can we get some clarity?
I will say that I spoke with Germany, spoke with most of the larger countries, and they are really enthusiastic about this. They want to, and you know, they're willing to go very far. I will tell you, you know, as per your question, how far would I go? They want to go very far. They don't want this to happen. That's why I think from Putin's standpoint, it would really be good. He gets the country's economy is doing very poorly, and he's got to get his economy back. He's got to save his economy. He could save his country in a sense, but the economy can destroyed a lot of countries over the years. He wants to get that economy back. And you know, he's got a great country for trading and other things. If they could use the assets instead of war, he's got some tremendous potential. That's what I would say.
How did you deliver this news to Putin, sir?
Say it?
How did you tell Putin this was coming?
I speak to him a lot about getting this thing done. And I always hang up and say, well, that was a nice phone call. And then missiles are launched into Kiev or some other city. And I said, it's strange. And after that happens 3 or 4 times, you say, the talk doesn't mean anything. My conversations with him are always very pleasant. I say, isn't that a very lovely conversation? And then the missiles go off that night. I go home, I tell the First Lady, you know, I spoke to Vladimir today. We had a wonderful conversation. She said, oh, really? Another city was just hit. So it's like, look, he's, I don't want to say he's an assassin, but he's a tough guy. It's been proven over the years. He's fooled a lot of people. He fooled Bush. He fooled a lot of people. He fooled Clinton, Bush, Obama, Biden. He didn't fool me. But what I do say is that at a certain point, you know, ultimately talk doesn't talk. It's got to be action. It's got to be results. And I hope he does it. It's potentially such a great country to be wasting so many people on this and the money. And look at what's happened to his economy. Look at what's happened. So,
and with the threat in 50 days,
yeah,
the economy will be hit very hard.
I mean, look, I hope he's going to do it. He knows the deal. He knows what a fair deal is. If there is such a thing as a fair deal, there's no winners here. This is a loser. This is a loser. And I dealt with him from the beginning. It wouldn't have happened, but I will say Ukraine was the apple of his eye. We talk about it. It was the apple of his eye, but it wasn't going to happen. And he understood that. It wasn't going to happen. And then I noticed, after I was out, I noticed soldiers forming at the border. Yeah. And then I heard horrible, stupid things being said from the other side. And I said, they're really handling handling it very, very wrong. It's a shame. Yeah.
Can I add one thing, and that is about President Trump, because you came in office in January. On the 12th of February, you had your first phone call with Putin. I think you did exactly what I hope you would do. That is breaking the deadlock, starting the conversation, because you have to test him. I know Putin very well from the days when I was Prime Minister in the Netherlands. You have to test him. And you did this, and you really gave him a chance to be serious, to get to the table, to start negotiations. Steve Witkoff, Marco Rubio, we all try to help you. But you've now come to a point where you say, well, hey...
We actually thought we had probably 4 times the deal.
Yeah.
I mean, you would have called and you said, this looks good. Yeah. And then the deal wouldn't happen because bombs would be thrown out that night, and you'd say, we're not making any deals. It was like...
But you breaking the deadlock was crucial because you had to start that process, and you were the only one who was able to do that.
I think we'll get it done.
Do you think he's reasonable enough to negotiate an end to this?
I think we're going to get it done. I think, look, this is a very powerful situation. You have very wealthy countries buying the best equipment in the world. And we have the best equipment in the world. We make equipment like no other. You know, our submarines, nuclear submarines, are so powerful. They're the most powerful weapon ever built. And we have the best in the world by, they're 20 years behind, 25 years behind us. We have the greatest equipment anywhere in the world. I just hope we don't have to use it. Yeah, please.
Thank you, Mr. President. On a separate topic here, President Biden, of all people, spoke to the New York Times over the weekend. He did not speak to them on the record during his time in office at all, but he spoke to them recently. And he defended his use of the auto pen and said that he signed off on every decision. But at the same time, the Times reports that he did not individually approve each name for the categorical pardons that applied to large numbers of people. What are your take on that? Any new revelations from that?
Well, I mean, you're talking about the auto pen. Look, the auto pen, I think, is maybe one of the biggest scandals that we've had in 50 to 100 years. This is a tremendous scandal. And I know the people on the other side of the, see that desk, that Resolute desk? Unfortunately, he used it before me. But, you know, we have our choice of 7 desks. They're all beautiful. But I chose the Resolute, and so did he, unfortunately. But the people on the other side of the Resolute desk, I know them. Lisa, the whole group, and they're no good. They're sick people. And I guarantee you he knew nothing about what he was signing. I guarantee it. So they're going to figure it out, and we'll see what happens. But to me, the auto pen, you know, you elected president. You know what the auto pen is supposed to do? Sign thousands of letters from young people that write. We get thousands of letters a week, Susie, right? Thousands. I mean, tens of thousands sometimes. I look at a room, there's a room where we have many, many people working, responding and sending letters back. That's what an auto pen's supposed to be. To write to a young 7-year-old boy that writes to the president, and he wants to be president someday, and he loves America. That's what the auto pen's supposed to be. It's not supposed to be for signing major legislation and all the things. No, the auto pen, and I doubt he knew. I doubt they even spoke to him about it. I think they had, it's called a freewheeling auto pen. Like, Biden was never for open borders. Biden was never for transgender for everyone. So I don't think I think the radical left people that took over the White House, and if I didn't win, our country was finished. You know, when I was in, and I said this a couple of times, I hope I don't bore you with it, but when I was in Saudi Arabia, I was in Qatar, I was in UAE, and then I met with all of your leaders, yes, including you, a great leader. He's now the leader of many countries, not just one. No. But I met with a lot of leaders over the last 2 months in the Middle East and all of the NATO countries. And I will tell you, they had one common phrase. They thought America was dead 1 year ago. And today they say, and they all say it, and I hope you'll back me up on this, but they say now it's the hottest country anywhere in the world. It is. Look at our numbers. Look at the numbers we made. You see, we made $25 billion last month. We didn't make that for years. The tariffs are kicking in. The economy is very strong. Even though we have a Fed person who's terrible, he doesn't know what the hell he's doing, but that's all right. We blow through interest rates. We're doing so well, we blow through it. Be nice because people would be able to buy housing a lot easier. But think of it. We thought your country was dead. And they were dealing with China because they were really going to China, but not anymore. But we thought your country was dead, and now you have the hottest country anywhere in the world. So we've done a really good job, and it's an honor to have this man. This man is a star, and he's going to be dealing with another one of my stars, Matt, and you're going to do a great job, Matt Whitaker. Okay? Thank you very much, everybody.
All right, that was President Trump in the White House speaking to the press and speaking to the NATO Secretary General, talking about some significant news as it relates to Russia. Trump threatens Russia with Trump threatens secondary Russia tariffs on 100% if no deal is achieved in the next 50 days, and also promises more weapons for Ukraine paid for by Europe. Let's talk to Roz Matheson right now. She's a Bloomberg News director for Europe, the Middle East, and Africa. Roz, what did you take of those comments by President Trump in the following Q&A session?
Well, it certainly shows the level of frustration that Donald Trump is feeling. I mean, he came into office saying he was going to get a very fast ceasefire between Russia and Ukraine, and months in, we don't seem to be making any progress towards that. He says he's had repeated phone calls with the Russian president. He thinks the phone call's gone well. He gets off the phone and he says Russia starts bombing Ukraine again. He says Russian President Vladimir Putin has fooled many people. It's unclear if he's including himself in that, but certainly you can see some frustration creeping in there. So two things that stand out from what he was saying. The first one is that he's talking about penalizing Russia economically. It's unclear what he means by secondary tariffs. Does he mean direct tariffs on Russia? The US and Russia don't do a lot of direct trade, so tariffs may not have a massive impact. Does he mean secondary sanctions on countries that are taking Russian products, particularly, again, China and India, who import a lot of Russian energy? So is he threatening to put penalties on countries that are doing business with Russia, particularly around the energy space? He says he'll give Russia 50 days for a deal. It's unclear exactly what he means by a deal, or he may impose some penalties. So there's a lot that's unclear from that, but certainly a sense that he's now dangling the idea of economic penalties on the government, the regime in Russia. And secondly, he's confirming that he will indeed provide Ukraine with what seem to be defensive weapons, primarily Patriot battery systems, to allow Kiev to better defend itself. And those would be paid for, though. They're not going to be given to Ukraine. Europe will be paying the US to provide those weapons, and Europe will send them on into Ukraine. So seeming sense of frustration there on all those sides with the progress or lack of progress he's making with Russia.
Okay, so that kind of gets into how he said the tariffs are not going to cost the U.S. anything. But he also didn't get much detail into the weapons itself. What type of weapons that the U.S. would send to Ukraine? Is that correct? Or maybe even when they would be delivered?
Well, he said they'd be coming soon, and the NATO Secretary General, he was with him, said that these could move quite quickly because there are Patriot batteries, it seems, in Europe that could be purchased and sent on relatively quickly. He talked about billions of dollars worth of equipment. But as you say, the key thing was he didn't really clarify if this would be just defensive weapons, again, that allow Ukraine to withstand Russian missiles and drone attacks, or whether it would be offensive weapons, which would allow Ukraine to keep taking some of the fight into Russian territory directly. We know Ukraine's been firing drones at Russia and looking to attack Russia on its own territory, and it's running out of those kinds of weapons, long-range missiles and so on. And would those be provided? Very unclear on that front, but it does seem it's at this stage likely more on the defensive side than anything else.
What type of tariffs, Roz, could this administration impose upon Russia? It seems like the wave after wave after wave of tariffs that have been put on Mr. Putin over the last several years haven't had much of an impact.
Well, that's right. So Russia is already heavily sanctioned by the US and by other countries, and looking to squeeze Russia economically and to squeeze their access to the global financial system. But that hasn't stopped Vladimir Putin in his war in Ukraine. His economy is on a war footing. We know there are weaknesses in the Russian economy, but equally for now, he's been able to keep going. The question is for how long, given those cracks that we're starting to see in his economy. So further sanctions or tariffs or whatever you want to call it on Russian exports to the US, that's unlikely to have a major impact because there's not much that Russia is sending directly to the US. The real impact would be to come at countries, again, China and India primarily, who are buying a lot of energy from Russia, and that's giving Russia access to hard currency to fund their war in Ukraine. And if you penalize China and India for buying oil, for example, from Russia, that could have an impact. But that's the question of where we're unsure if that's how far Donald Trump is prepared to go. For now, he's threatening this. He's not actually saying he's going to impose it, but he's putting it out there in the conversation.
All right, Roz, thank you so much for joining us. Roz Matheson, Bloomberg News Director for Europe, the Middle East, and Africa. Let's get a little bit of a reset right here of these markets. We'll go to Charlie Pella with the Bloomberg Business Flash.
Hi, thank you very much. Paul Sweeney recapping, resetting here. President Trump says the U.S. will send more weapons to Ukraine, describing them as, quote, top-of-the-line weapons and replacements. Trump also says the U.S. will impose 100% secondary tariffs on Russia if there's no deal in 50 days, and that the tariffs would not cost the U.S. anything. Markets, meanwhile, looking past the latest Trump threats, with the Dow, the S&P, NASDAQ all turning around since our last update. They are higher. S&P right now up 2. That is a gain of just under 0.1%. The S&P at 62.61. The Dow up 23, up under 0.1%. NASDAQ up 37, up 0.2%. 10-year 4.43%, with a 2-year 3.89%. Gold, little change, down 0.2%. 33.47 the ounce. West Texas Intermediate crude down 1.6%, 67.36 a barrel on WTI. So key takeaway at this are both gold and crude oil moving lower. Bitcoin, meanwhile, up by 0.5% at 119,760. Have been flirting with 122,000. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie. Tesla shares, they are higher this morning. They're up about 0.3%. But there was some news. Elon Musk said the company plans to poll Tesla shareholders on whether to invest in his other company, that's XAI. So here to break it all down for us is Craig Trudell. He's Bloomberg Global Auto editor. Craig, I have to ask you, this is something that came out. I mean, what kind of message is this sending?
It's sending that Elon's business empire is becoming all the more intertwined. So this has been sort of a case on and off for years. We can think back to say the Tesla Solar City acquisition, and that's going back quite a ways. But in this case, it would be Tesla. His most valuable company in investing in sort of his up-and-comer, and one where he's spent an awful lot of time and energy focused on lately, as Tesla's electric vehicle sales have been slowing. He's been really sort of dead set on taking on OpenAI and sort of standing up a competitor to ChatGPT. And as with all the companies in this space, spending an awful lot of money to try and compete in that realm.
So where do we stand here in terms of kind of how investors are viewing their investment in Tesla? Are they invested in a auto company? Are they invested in an AI company? Are they invested just in Elon Inc.? How do they think about it these days?
Yeah, I mean, I think Musk has been trying for several years now to sell and position Tesla as much more than just a car company, right? And it's definitely in the energy space and has a battery business to show for that. And in AI, he's talked a big game about developing self-driving technology. He's not gotten there yet. As we've seen with the company, starting to offer rides in Teslas around Austin, Texas. They still have, Tesla employees in the front passenger seat to sort of take over in events where, the cars have not been able to handle, navigating the streets on their own. And yet with SpaceX, I think interestingly, for them to have just pumped $2 billion into XAI, I think there's a little bit of FOMO on the part of some in the Tesla shareholder base where they've seen, xAI go from, not all that valuable a startup to suddenly, an extremely valuable startup, and they feel like they've missed out on some of this appreciation and want in on that.
So with all that said, Craig, I mean, does Musk support a merger between xAI and Tesla, or maybe xAI and SpaceX? You mentioned SpaceX too.
He says he does not, and I think there's been talk about this for years, right? That and on and off again, there's been questions as to whether or not Musk is sort of stretched too thin and doing too much. Would it make more sense to turn his companies into one and sort of sort of think about it as sort of the General Electric of the new age, right? Which is kind of fascinating because, of course, that didn't work out too well for GE, and yet even some of Musk's own allies have sort of alluded to viewing him and his empire as sort of a modern day General Electric. So. He did take pains to say on X that he does not support a full-blown merger of Tesla and xAI, but he has, signaled on there multiple times now that he would be in favor of Tesla putting money in, and that's of course a proposition that could be helpful if xAI continues to grow its valuation. We should note, however, that our colleagues have reported just in the last month or so that xAI has been burning through about $1 billion a month. So this is a company that is really sort of cash hungry and needy as it's trying to stand up a business, with all of this capability.
Yeah, and Craig, it's been, I don't know, a month or two since Elon Musk left the U.S. government, Doge. Is there any evidence that he is meaningfully engaging with Tesla?
I think he's messaging more about, sort of what Tesla's up to than he was while he was in Washington. He did also post just within the last day that, he was in Tesla's design studio and sort of hyped up how excited he was about what he saw. But, the company is sort of in this really sort of challenging state from a sales perspective. And you've sort of gotten indications that, well, maybe he doesn't necessarily fully have his finger on the pulse, in the sense that he told us just within the last few months that sales have turned around. A couple months later, the company reports that its vehicle deliveries had fallen 13% in the second quarter. So either he was, not necessarily up to speed on the state of sales, or perhaps he was more optimistic that they were going to be able to turn things around than they ultimately were able to last quarter.
Okay, Craig. Thanks so much for your reporting. Appreciate it. Craig Trudell is a global autos editor for Bloomberg News. He's based in London, joining us via Zoom here. And look at Tesla. The stock is down 22% year to date, but on a trailing 12-month basis, it's up 26%. So again, depends upon when you got into the stock, I guess, but clearly an issue. So for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business headlines are coming up in just a moment. S&P 500 up 1 point, the Dow up 7, the NASDAQ up 40. That's about it. The VIX, 17.13. For Elise Mateo, I'm Paul Sweeney. This is Bloomberg.
CBS News on the Hour, sponsored by ZipRecruiter.
I'm Cammie McCormick. President Trump is threatening tariffs to end the war in Ukraine.
The secondary tariffs are very, very powerful.
Trump has set a deadline of 50 days for a deal to end the war.
We hope that's going to have an impact on Vladimir Putin, and we hope it's going to have an impact on Ukraine also. We want to make sure that Ukraine does what they have to do. All of a sudden they may feel emboldened, or maybe they don't want. This is a very difficult situation.
Trump also announced more U.S. weapons to Ukraine, which NATO allies will pay for. CBS News correspondent Charlie D'Agata at the Pentagon.
By doing this from Europe, obviously, just look at the geography. It's much quicker, and that was pointed out in that meeting. They can move those weapon systems from European partners and then backfill those European NATO partners with U.S. systems.
Flames tore through an assisted living facility in Fall River, Massachusetts Sunday, killing 9 people. Wildfires continue to rage along the Grand Canyon's North Rim. CBS's Ian Lee reports.
Melinda Rich Marshall, who works at nearby Jacob Lake Inn, had to evacuate quickly after a deputy called.
There is a door jam that catalogs all of the heights, right? Like your parents do. Well, it was my granddad that did that. So I just went and I took a video of it.
Roaring through another part of the North Rim, the Dragon Bravo fire destroyed the historic Grand Canyon Lodge.
New research shows cancer deaths linked to obesity have tripled over the past 2 decades. Wendy Gillette reports.
The study shows the increases in cancer deaths are particularly steep for women, older adults, Native Americans, and Black Americans. It evaluated more than 33,000 deaths from obesity-associated cancers, finding the highest rates were in Vermont, Minnesota, and Oklahoma, and the lowest rates in Utah, Alabama, and Virginia.
While layoffs are still relatively low in this country, Business Insider reporter Juliana Kaplan says there's plenty of paranoia.
There's this idea of, oh my gosh, the boss didn't stop to say hi to me. The office snacks are getting worse. Is a layoff coming? And we're seeing a lot of that tension coming from a few different forces. Obviously, dread of AI hanging over everybody's heads. Am I going to get replaced by that?
That's especially true, she says, of white-collar jobs. Checking the numbers on Wall Street, investors have been following the tariff trade talks in the European Union. The Dow currently up 25 points. This is CBS News.
Order canceled.
Special delivery in the Southwest, as Deborah Rodriguez reports.
A couple of police officers in Tempe, Arizona didn't want to leave someone waiting in vain for dinner. So after they arrested a Grubhub driver on a pizza delivery run, they showed up at the doorstep themselves, pie in hand.
How are you doing? Good, how are you?
The department posted the video showing the woman thanking the officers profusely.
Still delivering your pizza. I really appreciate the pizza.
And it was still warm. Tempe police say they're committed to serving the community 24/7, whether it's safety or pizza delivery. Deborah Rodriguez, CBS News.
A new AP poll finds most American teenagers prioritize graduating from college. 70% of girls and 54% of boys consider it important. Teens also see college as a key for good jobs and life skills. I'm Cammie McCormick, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
More American weapons are heading for Ukraine, and NATO is going to pay for it. Welcome to the Monday edition of Balance of Power. As President Trump makes the announcement alongside NATO's Secretary General, it just happened in the Oval, and we're going to get into this, along with the status of Russia sanctions on Capitol Hill with Bloomberg's Laura Davison. Insights on the way. from Max Bergman at the Center for Strategic and International Studies on exactly how this plan is going to work. The DOJ's handling of the Jeffrey Epstein case splits MAGA down the middle, as Joe Biden now gives Republicans a whole new reason to question the auto pen and the pardons. We're going to get into both with our political panel. Bloomberg Politics contributor Jeannie Shanzano is with us alongside Republican strategist Brittany Martinez. And we start, as always, on Wall Street. Let's get to the markets. The Monday trade with Charlie Pellet at World Headquarters in New York. Charlie, how's it going?
And right now we are hitting the ground running on this Back to Work Monday. Joe Matthew with the Dow. The S&P NASDAQ higher for now. Has been a choppy morning, but green on the screen right now. Stock traders are unfazed by President Trump's latest tariff threats. The S&P higher by 3 right now. Little changed at 62.63, a gain of just under 0.1%. The Dow up 47, up 0.1%. NASDAQ higher by 0.2%. 10-year 4.44%. The 2-year 3.90%. Spot gold down $11 the ounce, 33.44, down 0.3%. West Texas Intermediate crude is slumping 1.6%, 67.37 a barrel, and Bitcoin is now up 0.5% at 119,700 on Bitcoin. Fed Chair Jay Powell has reportedly asked the central bank's inspector general to review its $2.5 billion headquarters renovation. That's according to a report from Axios, as White House officials keep up the pressure on Powell to resign. Michael Darda is chief economist and macro strategist at Roth Capital Partners.
The hectoring from the White House is wholly unhelpful. I mean, even if the administration were to convince Powell to step away from the Fed, and this stuff about the construction project is just a fig leaf. It's pretty obvious what's going on here. It's completely out of line in my view. But even if you were able to convince Powell to step down and someone else takes over, it's a committee. They operate by consensus.
Michael Darda of Roth Capital Partners, and you can hear the full conversation on Bloomberg Surveillance. Sources tell Bloomberg Autodesk is no longer pursuing an acquisition of PTC, which would have ranked as one of the year's largest deals. Autodesk up 5.6%, PTC down 2%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, great to see you. Hope you had a great weekend, and welcome indeed to the Monday edition, and more specifically, the early edition of Balance of Power here on Bloomberg Radio, Satellite Radio, Channel 121, Bloomberg Originals, and YouTube. Search Bloomberg Business News Live to find us on YouTube. We keep the stream up all day for our programming from Washington to New York and back again, with the president not wasting time in making some news today. And I'll let you know, lawmakers are coming back to town. There's going to be a lot of talk about sanctions on Capitol Hill as well as rescissions. And we'll get to all of that in a moment with Laura Davison. Today, it's about Ukraine, and the president told you this was coming, right? We sat here Friday knowing that the president was planning a major announcement, as it was termed, on Monday. There were great questions about this, what this might include, and whether it would be offensive weapons. The answer is kind of yes. The news here really is more not just American weapons reaching Ukraine, but the fact that NATO is going to pay for them. This answers the question we were asking about whether there'd be a major emergency supplemental request coming from this administration, something we couldn't imagine, right? The idea of spending more money on Ukraine would go against the grain for this president. But he's clearly upset with Vladimir Putin, and he's found a new way to get American weapons in the hands of Volodymyr Zelensky. Here's Donald Trump from the Oval Office a short time ago, sitting next to the NATO Secretary General, Mark Rutte.
But we're very, very unhappy with them, and we're going to be doing very severe tariffs if we don't have a deal in 50 days. Tariffs at about 100%. I'm disappointed in President Putin because I thought we would have had a deal 2 months ago, but it doesn't seem to get there. So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%. And that's the way it is.
Is there more gold in there than there was on Friday? Are you seeing this on YouTube? The gilding never stops in the Trump White House. Was that big gold eagle there on Friday? Laura Davison is our deputy bureau chief here at Bloomberg in Washington, D.C., and is, of course, helping to man all of our coverage here from the White House to the Capitol and back, and she's with us right now. Great to see you. They're adding to the gold as we go here, are they not?
There was a certain glow in that clip in particular.
My God, that was like Liberace's office. He did, by the way, mention the Resolute desk, which I guess has been cleaned
All right,
up
got
and
my
returned.
long.
I've been waiting for the update on this. Remember when Elon Musk
So
was on X?
the basic continuation off the 20,
brought the desk out of the
and
Oval.
I
They
used
were
the
gonna have
ES
it
to front
refinished,
run it.
and I never heard that it came
So
back.
the ES was way ahead,
Clear, even at the cabinet meeting on Friday, Trump was talking about the decor.
and I followed on the NQ.
Picking different frames, picking different clocks, including stealing some apparently.
Okay, so I need about 400 more to
This is, of
qualify.
course, not why you're here.
Take it
We're
easy,
talking
little by
about
little.
Ukraine, and this is really interesting watching the evolution here when it comes to Donald Trump, Vladimir Putin, and this war, because it was just weeks ago he was talking about his great relationship with Putin. It was weeks before that he was yelling at Volodymyr Zelensky in the Oval, and it was weeks before that he predicted that he could finish this war on day one. What does he think at this point?
This is a total reversal, and even go back, even further. A year ago, he was talking about abandoning NATO partners. That really caused a stir on the campaign trail. Now you have a meeting in the Oval, a very cordial meeting with the Secretary General of NATO. He even mentioned that he's really become very friendly with this organization, especially at the NATO meeting a couple weeks ago. Part of this is that Mark Rutte has been very strategic in how he's courted this relationship with Donald Trump, and he's arranged this deal that Trump very much likes, that the U.S. won't be giving weapons, that they're going to be purchased through NATO and then given to Ukraine. This is very much the way he has always wanted to structure.
All right, guys, how you out there? How you guys doing out there?
He didn't want some sort of aid. He wanted some sort of financial deal. Remember, there was the rare earths deal that he was trying to cut, and this is very much kind of where he sees kind of the role he wants to play of making these financial deals, these business deals, versus sort of a diplomatic solution.
It's like the military version of we're going to build a wall and have Mexico pay for it, right? He gets to do something that is maybe controversial, giving weapons to Ukraine, at least with his own base, but as long as we're not paying for it,
I'm going to wait for the next setup and just try and get my 300 or 400. I'll see which the ES or NQ
Get them to approve additional money. It's not clear
are lining up the
Congress is
best.
going to approve this Russia sanctions package that has been debated for several weeks. These various versions of this bill have sanctions of 500%. Those are massive. Lindsey Graham has been talking about scaling that back, but the bill right now has pretty significant support, and it's possible, as Trump mentioned in the Oval Office earlier, that it could pass, in the coming weeks.
Even with the help of Democrats. It's interesting. I'm glad you mentioned that. In that sound cut we just heard of the president, he's talking about tariffs. He's 100% tariffs. He means sanctions. That's what this bill is.
Yes, this is, and Trump seems to really be talking about two things. One, perhaps some sanctions that he would impose unilaterally in addition to whatever Congress decides to do. So he's talking about these 100% secondary tariffs, which we understand to be sanctions. These would be essentially levies on trading partners that buy Russian goods, so especially Russian oil. So this would be hitting other countries, essentially trying to further isolate Russia and further dampen any demand for their goods.
We've got a great conversation coming up a little bit later in the hour with Max Bergman at the Center for Strategic and International Studies, who's looking at what the effect would be here. And if you're a country like India, that could be a real problem if that's passed, right?
Yes, there's especially if it's 100% or even forget 500%.
Right.
Those are tariff levels that just completely cut off, or sanction levels that cut off trade entirely.
So we're speaking about tariffs, and the president actually made news about tariffs over the weekend. He was asked about this, and I'm not sure it's even top of mind with the Ukraine stuff here, but he threatened another 30% on Mexico, USMCA excluded. We spoke to Peter Navarro here on Friday talking about Canada, 35%. That also is USMCA goods excluded. So these aren't terribly meaningful at the moment, are they? Doesn't that cover the vast amount of imports from both countries?
That really does. So it really lessens the scope there. And of course, Canada and Mexico are the U.S.'s largest trading partners. Though not far down the line is the EU, which has a 30% tariff rate, much to the surprise.
So that's the real news this weekend, right? Keep going. Don't
Yes,
let me stop.
and that really came as a surprise because the U.S. has been in talks with the EU for weeks, if not months, about cutting a deal. The EU leaders at one point thought they were going to be able to keep that tariff level at 10%. Which, while wasn't their preferred outcome, would be a level that could support much of the trade that is ongoing. But at 30%, you have a lot of companies in the EU saying, "Look, this just doesn't. The math of these trade deals don't make sense anymore, and we're going to have to suddenly find other countries to export our goods."
Wow, the idea not to retaliate is pretty interesting here as well. Is this don't poke the bear or just give us time to cut deals with other countries?
I think the next 3 weeks will really be a key sign here. You know, do they get to August 1?
Yes.
And are they able to either, you know, stave off that implementation, push it back a couple weeks, get a lower deal, or, you know, is it August 1 and suddenly 30%? That's when you could really see countries start banding together, putting on some of these retaliatory tariffs and sort of daring Trump to, you know, back down.
Your calendar must look like a riot. So we've got, what is it now? August 1 is the next deadline for reciprocal tariffs. We just dropped a 50-day waiting period on Russia sanctions, he said. I don't know why 50. We seem to be in 2-week increments. And didn't we already have something else we were waiting 2 weeks on here? What else is... What's the other deadline on your calendar right now?
We've got a lot of different things percolating between all the copper tariffs and all these sectoral tariffs. Those are all due at various points in the fall. One nice thing about that 50-day deadline for the Ukraine tariffs, that gets us past Labor Day. So people can enjoy their Labor Day vacations and then come back to Washington and deal with the next turn of the screw.
So, all right, I waited till the end to ask you this. I don't want to put you in an awkward situation, but I have to ask you about this Jeffrey Epstein story. The president talked about it last week. He called out the reporter for asking about it. You've got the deputy director of the FBI not showing up for work now, calling out the attorney general. Is this real, this MAGA split? Does it spill over into anything policy related that a Bloomberg audience should care about, or is this a tabloid story?
This certainly could mean, you know, shakeups at the FBI and the Justice Department at the highest levels if, you know, some of what we're seeing comes to fruition. And this is really sort of a cautionary tale of when you make promises, when you are not in government, to then you are suddenly in control of things, you control all the levers of power. If you get your side really amped up that something's happening, you have to be able to then, you know, show something on the back end. So this is really sort of the insider-outsider dichotomy of, you know, all these people from the outside were railing against government are now in key positions and you have to deliver.
There's a lot of tape on Kash Patel, Bongino, J.D. Vance talking about this list and how they're going to expose it. And those things don't go away automatically. I'll be very curious to see how they manage to do this. CC, I think you might be onto something there. Laura, it's great to have you back. Laura Davison helps to run our coverage here in Washington, our deputy bureau chief at Bloomberg, and always great to spend some time when we can pull her away from the desk. Producer James is back today. Did I tell you that? America's producer is back with us. And we'll have much more straight ahead as we consider the impact of these Russia sanctions if they were in fact implemented. Not just sanctions, but secondary sanctions that could ricochet around the world. Our conversation ahead with Max Berg at CSIS coming up on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average lower, little change right now, looking at a drop of just under 2 points, swinging between gains and losses, actually back in the green right now on the Dow, up 3 points. Little change, though. The key takeaway at the SAR. S&P up 2 points, also little change. NASDAQ up now by about 0.2%. 10-year at 4.43%, with a 2-year that's currently yielding 3.89%. Gold is down $8 the ounce, 33.46, drop there of 0.3%. West Texas Intermediate crude down 1.5%, 67.41 a barrel. And Bitcoin now up by 0.2% at 119,403 on Bitcoin. A new destination for Southwest Airlines. Early next year, Southwest will be adding flights to St. Thomas, with service expected to begin in early 2026. And as we have been reporting, President Trump says the U.S. will be sending more weapons to Ukraine, describing them as top-of-the-line weapons and replacements. The president also says the U.S. will impose 100% secondary tariffs on Russia if there's no deal in 50 days. Our coverage continues on Balance of Power. Back we go to Washington. Once again, your host here is Joe Matthew.
Okay, Charlie, thank you so much. From world headquarters in New York, the voice of Wall Street and the New York subway. Looking sharp in pink today, Charlie. Happy Monday and welcome to Balance of Power, the fastest show in politics, with big thanks to Cece Cherendoff, Justin Miller, and Elizabeth Sedrin for helping us out last week while producer James was off golfing. He's back with us today here in the nation's capital, and we were raring to go with news coming from the White House. We started early today. Secretary General at NATO in the Oval Office. President Trump talking about Ukraine as promised. This is going to carry us largely through the day here in the news flow as lawmakers in the Senate, Lindsey Graham and John Thune, for that matter, craft a sanctions package against Russia. The president's tapping the brakes on this. He says 50 days. Give Vladimir Putin 50 days to cut a deal, and then we'll talk about sanctions. That, of course, has been on the table for weeks now. The president even altering the language in that sanctions legislation before it ever sees the light of day. But it looks like the news today is about weapons specifically. That's why the NATO boss was in the Oval Office, Mark Rutte, sitting next to Donald Trump as he announced this plan, something we touched on last week. If you listen to this program, you might have seen this coming. A deal in which American weapons get to Ukraine, but we don't go to Capitol Hill and spend a bunch of money to do it. They'll be bought by NATO from the U.S., from U.S. contractors. In some cases, European countries will send their own weapons and we'll backfill them. But in the end, our NATO allies will pay for this. Here's Donald Trump speaking earlier about the Patriot missile batteries that are on the way to Ukraine.
It's everything. It's Patriots. It's all of them. It's a full complement with the batteries.
And when do you expect them to arrive in Ukraine, sir?
Well, we're going to have some come very soon, within days, actually, because a couple of the countries that have Patriots are going to swap over and will replace the Patriots with the ones they have, and Matt will coordinate with NATO. But so it's going to be, they're going to start arriving very soon.
This was just last hour at the White House as we bring the voice of Max Bergman to this story, who is director of the Europe, Russia, and Eurasia program at CSIS, the Center for Strategic and International Studies. Max, it's great to have you, and I'm curious to hear more about your research into the impact of sanctions and secondary sanctions on Russia and other countries around the world. I wonder your thoughts initially, though, on this deal to continue providing weapons without going back to Congress with an ask. Is this a smart angle for the White House to get NATO involved financially, as we heard today?
Well, I think it's good news, especially for Ukraine. I think we should be clear about what the baseline here was. You know, the administration a week or so ago announced that it was going to suspend deliveries of Patriot missile systems to Ukraine. Now, these are vital to protecting Ukrainian civilians. And right now, it just looks like the White House is sort of turning that back on, and that future deliveries then are going to be paid for by the Europeans. But really, a lot of this money had already been paid for by the Biden administration. What we're looking at are just sort of the deliveries of future systems. But I think what it does represent is kind of a real shift in the burden of supporting Ukraine from the United States to Europe, where the Europeans effectively pay us to provide weapons that we were previously providing. At the very least, it is a good thing for Ukraine. Someone is going to pay for this. It looks like Europe. and that the supply of very precious Patriot missile systems will continue to flow to Ukraine, which is really vital for their security.
I'm glad you mentioned these Patriot missile systems. You used the word precious. How many of these do we have? Because when weapons to Ukraine were halted by the defense secretary and another official in the Pentagon a couple of weeks ago, that was the justification, that we've run out of stuff like this.
Yeah, and part of it is connected to events in the Middle East, where the U.S. has used a lot of Patriot missiles, interceptors, to shoot down Iranian drones and other missiles. And every winter, it has been a big test for the United States about whether it could supply Ukraine with enough air defense to get through, because Russia started targeting Ukrainian power plants and other facilities. And there are some reports that the U.S. is really low in stockpiles, perhaps down well below 50%. And this is a big problem, and it's a big problem for our defense industrial sector that really can't produce enough. And there's just been big orders by the U.S. Army to try to ramp up production of these missile interceptors used by the Patriot system. So this is a problem. It has been a problem throughout this war, that not only does Ukraine need a lot, but that our defense industrial base and Europe's defense industrial base can't really meet the mark in terms of production.
Really makes you wonder, Max, how many years we are going to have this conversation for. It's just endless. And everyone seems to know that it's something that's badly needed, yet we never get down to actually increasing the capacity of the DIB, as they call it. I know that your expertise, though, is in the sanctions package that we're talking about. Your economic acumen here and the research that you've done is something that I'd like to ask you about, because sanctions are one thing, and that's another bit. Secondary sanctions, something else we talk about a lot, but we never quite get to. This was on the table for the balance of the Biden administration, but we're looking at some pretty hefty numbers here, whether it's 100% or 500%, Max. What would this mean for the likes of India or other countries doing business with Russia?
Well, it could be really significant. And, the president is going about secondary sanctions in sort of a different way by using tariffs as opposed to sanctioning the companies or countries that are then are acting as workarounds for the main sanctions target. What's happened for Russia is that the Russian oil sector has been diverted to India and China in particular. And the United States has been very reticent, in particular, to sanction India. We are trying to develop close ties with India. We see India as a strong potential partner vis-a-vis China. And we've also been reticent in some ways to go after a number of Chinese banks and other Chinese entities. So I think, with this tariff play, we'll see. It could have real ramifications, I think, for Russia's oil sector. But it would also have real implications for the United States bilateral relations. And the thing we have to remember is part of what the Biden administration was trying to do was to keep Russian oil on the global market. We wanted Russia to take a haircut in terms of how much profit it was getting in terms of sales, but we didn't really have a problem with Russia selling oil. We just wanted it to sell it at a haircut because we wanted Russian oil on the market to keep global prices low. The Trump administration, I think, is taking a bit more of a blunt approach, and so we'll see if this begins to really lead to a spike in oil prices.
What would this mean for China as well, Max?
Well, I think what we've seen is that China has means of retaliating. So it could lead to an escalation of the U.S.-China trade war, which has sort of already been rekindled. China has demonstrated its willingness to use rare earths and other things to hit back at the United States. So China does recognize that its oil dependence, its dependence on Russia as well as the Middle East, represents a real strategic vulnerability. It's part of the reason why they are going whole hog into renewables and clean technology. But for China, I think this could be really significant if the U.S. does impose this. And I think we would see China try to retaliate against us. So I don't think it would just be we set these, China stops buying Russian oil and moves on. I think it would try to find other ways of responding.
Well, so I guess what comes out the other end of the pipe here, if this is in place for some time, Max, are we on the phone with OPEC about how this is going to work, and what would it mean for crude oil prices?
Yeah, I think there's some real potential that we get on the phone with the Saudis and others in the Gulf states and say, hey, we want you to offset some of the shock that this could cause. We want you to open up the taps, put more oil on the market. We shall see if they do that. The Biden administration, I think, didn't feel that it had the political relationship to actually do that, and the Saudis, I don't think were willing to. But with Trump, maybe it's different. I think the bigger, broader question here, though, is that Trump has not shown a lot of interest in trying to really stick it to the Russians, economically or militarily. He has not demonstrated in the past a lot of support for Ukraine. If that is shifting, the question is, how far does that shift? I think what we've seen is a partial shift. The U.S. is now, looks like it's going to continue military supplies, but there's no indication Trump is going to go to Congress, try to ramp up our production for Ukraine. And then the economic question is, how much of an economic hit is the president willing to absorb to stick it to the Russians in support of Ukraine? There's limits to what the Biden administration would do. So I do have some doubts about how far we are willing to go. And I think Russia may just try to call our bluff here. And it'll be really interesting when the 50 or 60 days expire, whether that prompts sort of a strong U.S. reaction. But there could be a good outcome if we just simply get India to lower lower the amount it's buying, and maybe there's some way to negotiate something with the Indians to reduce the amount of Russian oil and other Russian military goods and things that it's purchasing.
That'd be very Trumpy, wouldn't it? You put 500% tariffs on the line or sanctions on the line, and in the meantime, you just crank back India a little bit to try to increase the pain, knowing that those sanctions were never going to take effect. Max, what happens over the next 50 days?
Well, I think what happens over the next 50 days is Russia keeps pummeling Ukraine. What I think we're seeing with the statement on especially the arms deliveries is simply the preservation of the status quo in terms of the West is going to keep supporting Ukraine and supplying Ukraine with supplies. Now, that's not quite enough, and Russia thinks it can win this war now and is going on another military offensive and has been going on a military offensive because it sees a light at the end of the tunnel of the U.S. sort of drawing back support. Now, what I hope happens over the next 50 days is that there's a ramp up on European efforts to support Ukraine militarily. I think that's happening. But then also that the U.S. begins to negotiate with India and perhaps even with China to reduce oil flows from Russia into India, and that maybe there's talks with the Saudis about offsetting any cuts to Russian supplies on the global market. I would hope to see that. I'm not sure we're going to see all of that, but I think we may see some progress perhaps with India. That's at least my hope.
There you have it. Remember this conversation in 50 days when this comes around. Max, it's great to see you. Thank you for the insights today. Max Bergman, CSIS. He's director of the Europe, Russia, and Eurasia program at the Center for Strategic and International Studies. Just a stable of smart people at CSIS who we tap on a regular basis here. Clarifying the remarks on tariffs versus sanctions here, Howard Lutnick, the Commerce Secretary, saying that it's economic sanctions. You can also make an economic penalty. If I catch you doing it, then you have to pay. You can do tariffs, you can do sanctions. Those are both tools in the toolbox. So I guess those are interchangeable now. You learn something every day on this program. We'll assemble our panel coming up next year on the fastest show in politics. I'm Joe Matthew. This is Bloomberg.
All right, guys. I caught that long on this candle. Kind of ran right into the 20, and I caught that long. Got out at about 29. So I paid for the loser I had this morning, and I'm up 967. I'm waiting for my trade box to turn back on because the volume's too low. When the volume is this low, it can get blown around by one big order, and the indicators and the strategy doesn't really read as well, and anything can happen. So I'm just holding on here. I really like it for it to go. I think this is another bull flag, but I need on the NQ we need a 1100 3-bar average of 1100 contracts minimum for the trade box to be on. So I'm just gonna hold on. I mean, I only need another. I'm at 5,206. I'm at 52,600. So I only need 400 more to qualify this into a paid account. So I'm just gonna kind of hold on. You see where the 20 is acting as resistance right now. So maybe we are gonna finish rolling down, but if we confirm above and the trade box turns on, then that might be another long. So I'm just waiting.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are meandering ahead of big bank earnings tomorrow morning. Traders parsing Donald Trump's latest tariff threats send stocks wavering ahead of results from the banks. Also, inflation data tomorrow morning. The S&P right now unchanged at 62.59. The Dow little change, down 24 points, a drop of less than 0.1%. The Nasdaq Composite Index up 43, up by about 0.2%. 10-year at 4.42% with a 2-year 3.89%. Gold down 0.2%, 33.48 the ounce, and West Texas Intermediate crude down 1.6%, 67.37 for a barrel of WTI. Bitcoin now up 0.6%, 119,885 on Bitcoin. A downgrade this morning for JP Morgan Chase, Goldman Sachs, and Bank of America from HSBC analyst Saul Martinez. He says valuations are increasingly stretched after a rally in the bank stocks. Martinez spoke this morning with Bloomberg Surveillance.
Valuations are not attractive given still elevated macro concerns, and that is obviously one of them. I can't predict what tariff policies is going to be, but I do think the macro dynamics there is more risk than there typically is.
Among some of those bank names, JP Morgan Chase up 0.4%. JPM reports tomorrow morning. Goldman up 0.9%. Bank of America up by 0.3%. As you heard on Bloomberg Radio, President Trump says the U.S. will send more weapons to Ukraine, describing them as, quote, top-of-the-line weapons and replacements. President also says the U.S. will impose 100% secondary tariffs on Russia if there is no deal in 50 days. Recapping, the Dow lower, little changed. S&P higher, little changed. Nasdaq up by 0.3%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. The voice of Wall Street and the New York subway every day here covering the markets for us on Balance of Power. That's Charlie Pellet in New York. You can always find us, of course, on YouTube. You'd know Charlie when you saw him by going to Bloomberg Business News Live. Guidance pretty light for the president today. He took the meeting with NATO Secretary General this morning, and you saw and heard that live here on Bloomberg. He is now participating in a White House Faith Office luncheon with a very different conversation underway than the one he was having before. That might be all we see of the president on this Monday, knowing that there's a big conversation going on behind the scenes right now about not just Ukraine. That's the one that's happening out in the open. The conversation about Jeffrey Epstein is hanging over this White House following a series of events that included maybe the longest Truth Social post I have ever seen that came out on Saturday night. The president referring to his guys and gals, asking them to calm down over all of this. And it goes, of course, back to last week. There's the Truth post. What's going on with my boys? And in some cases, gals, he wrote. They're all going after Attorney General Pam Bondi, who is doing a fantastic job, he says. We're one team, MAGA, and I don't like what's happening. Well, what's happening here is the administration's decision, and the DOJ more specifically, to not release paperwork on Jeffrey Epstein, what people thought would be a client list that was discussed openly by now many members of the administration. Prior to that, on the campaign trail, Kash Patel, right? Dan Bongino, the FBI guys, J.D. Vance, the vice president, they all said that list has got to come out. Well, it's not coming out. And so fire has been trained on Pam Bondi, the attorney general, who Laura Loomer likes to call Blondie. And reportedly, Mr. Bongino stormed out of a meeting with on Friday and hasn't been back to work since. Now, this all goes back to an interview, or much of it, in this most recent chapter, to an interview that Bondi did on Fox News. Remember when she suggested that she had the list sitting on her desk? This was February 21. Listen.
The DOJ may be releasing the list of Jeffrey Epstein's clients? Will that really happen?
It's sitting on my desk right now to review. That's been a directive by President Trump. I'm reviewing that. I'm reviewing JFK files, MLK files. That's all in the process of being reviewed because that was done at the directive of the president.
Shortly after that, the binders went out. Remember the so-called MAGA influencers? They stood in front of the White House, in front of the West Wing, on White House grounds, holding up the binders, which ended up containing nothing new. And so there's a big question right now about what's going on, if the list even exists, whether this leads to resignations or firings, as we discussed earlier this hour with Laura Davison. Otherwise, this is a tabloid story, and there are a lot of networks to do that. We're curious if this impacts the lineup in this administration and therefore policy in the end. And so we assemble our political panel for their take on it. Jeannie's with us. Jeannie Sheehan Zaino, Bloomberg Politics contributor, senior democracy fellow with the Center for the Study of the Presidency and Congress. And with me here in Washington, Brittany Martinez, Espina & Company founder, executive director, Principles First, our Republican strategist. Ladies, thank you so much for being here and welcome. Brittany, I don't know what you're thinking about this because it seemed inevitable if these folks were elected that this would come out. Is this a case of knowing too much when you realize what's really in there, or does this list not exist?
I love to be conspiratorial and say maybe. Who knows what that list looks like, but you can't make an absolute spectacle, bring influencers to the White House, which why do we even have political influencers in the first
I don't know.
place? It shouldn't be a thing. When did being a practitioner become bad? And someone who's an expert in the field. So they bring all these weird political MAGA influencers. They do a spectacle with the binders, and now they're like, oh, just kidding, nothing. I mean, this is embarrassing. This is something that the president ran on, and they shouldn't, if they didn't know for sure whether they would have something or not, which I think we all speculated they probably have a little bit of something, he shouldn't have been out there like that on it. It's bad.
Well, the president went out of his way to shame the reporter who asked him about this in the cabinet meeting last week. Jeannie, what's your thought on this? Does somebody lose a job here? Bongino walked out of work. You're the deputy FBI director. You don't go to work on Friday. I don't believe he's been seen today. Or are we just talking about the wrong story? I'm trying to, and I'm asking you openly and honestly, our listeners and viewers can weigh in here too. Is this a story or not?
It is a story. And there are so many facets to it. But one facet is that this is sort of like Donald Trump's Frankenstein. He and the people he has worked with for years have inflamed these conspiracy theories. That's how he rose to prominence from many perspectives. And what did he do? He promised that once he was in office, he was going to unveil and make sense of what was happening behind the scenes with all these wealthy elites running these big swampy institutions. And guess what? Right. He gets in there and he says, oh, look the other way. Don't look here. Nothing to talk about. You mentioned, it's sort of disregarding the question by the supporter. This means something to these people. And this is the question I'm asked all the time. Why do these folks care? These people believed Donald Trump when he said there is an order to what is going on. There is an order to this world. Put me in charge and I will tell you all about it. I will let you in on the inside. And you know what? None of that is happening. And he's going to pay the price. Again, this is Donald Trump's Frankenstein. It does come back to bite you, and it's biting him hard at this moment. And I think this story is going to get bigger.
Well, there's a question about what comes next here, and Democrats might have the answer. You both probably saw this. Mark Veazey, a Democrat from Texas, introducing legislation now. It calls for the release of the Epstein files, saying that he will tie the corruption and cronyism of the handling of the Epstein case into a broader picture of Donald Trump's agenda here. Brittany, you worked in the House of Representatives. You worked for a former speaker. Does a bill like this ever see the light of day? I'm guessing no.
I probably not, since Republicans are in the majority, though it's going to get attention. I think that, like, to Jeannie's point, I think that this bill, or excuse me, the story is going to continue to grow if we have Democrats who are the opposition in this moment being able to push that narrative. It's weird. It's weird that they ran on something and now all of a sudden, very conveniently, there's nothing to share. And as to the point of, is there too much information? Listen, I'm not going to, speculate and be sued. However, as an American, when you've been telling me, Mr. President, that we're releasing the files, all your people are telling us their files are going to be out there, and all of a sudden you're giving us nothing, I mean, that's bad politics.
Well, you wonder if there is also, an instance or many instances where people, victims of assault, of abuse, may need to be protected, which is why you shouldn't promise to release a lot of things before you see them, right? Yeah. Jeannie, I'm going to come back around on you here because Joe Biden is in the news as well. We're doing all the dirty laundry in this segment here. Did you see he sat for an interview for the first time since winning the White House with the New York Times? Donald Trump calls the fake news New York Times, although he liked this story. It came up in the Oval earlier today, the question of the auto pen. So, Jeannie, Joe Biden in a phone call, and this was, I think, only a 10-minute phone call, pushing back on this idea that he had no idea what was being signed with the auto pen, and specifically with the pardons. Remembering there were like 4,000 pardons in one batch toward the end of his administration. He said he made every single one of the clemency decisions. The auto pen was used, quote, because there were a lot of them. But, Jeannie, he also did not, as it turns out, individually approve each name. These were categorical pardons that applied to large numbers of people. So he set the parameters, and then certain people fell within them. Rather than ask Mr. Biden to keep signing revised versions, I read in the Times, his staff waited and then ran the final version through the auto pen, which they saw as a routine procedure. Donald Trump calls this the biggest political scandal in the last 100 years. Jeannie, how do you react to this?
I think so many Democrats right now are shaking their head. This is very reminiscent of Joe Biden's tendency during the CARES campaign to come out at the most inopportune times. I mean, Donald Trump is having a bad few hours and few days. And what does Joe Biden do? Decides to give his first New York Times interview since he was elected to office. It's stunning. So it's not what any Democrat wants to see. And certainly it's the best news Donald Trump has had in about 48 hours. That said, I do think this is a potential problem for Joe Biden. We don't know how many former presidents have done this categorical approach to doing this, but that is not likely the way this is supposed to happen. People are tried in this country individually. They should, I believe, be pardoned individually and not categorically by staff members. So whether, I don't believe it's the biggest scandal in 100 years by any estimation, but I do think this is something that we deserve clarity on. Has it been done in the past? And going forward, how should it be done? Because categorical pardons seem to me to be a violation of a power given by the framers that's critically important and should be exercised judiciously and properly.
The idea of a categorical pardon, I'm guessing, would rub a lot of people the wrong way, although we did see, I don't know, was it not a categorical pardon when President Trump went after the January 6 rioters? That was kind of an en masse because he said it would take too long to go through each individual case. But let's stay with Joe Biden right now in this case. Brittany, does he have a problem here? And what is with Joe Biden's timing? Constantly ready to light himself on fire when Democrats think they're ahead.
Just go enjoy your ice cream in Delaware, please. I'm not really sure why he thought this was an opportune time to come forward. I think there are a few concerns here. So one is that, first of all, auto pens exist. Presidents have used them,
Sure
members of Congress have used them, but the way in which it's being used for these categorical pardons, that's the issue number one. The second issue is that because we are concerned about his potential mental decline. So that's issue number two. Ultimately, though, yes, to your point about the pardons in January 6th, we're not talking about that, but why was it okay in the case with President Trump and not with Biden? I'm not saying that I agree with what happened with Biden, and I certainly didn't agree with Trump on this one, but I think that Trump is known to be deflector in chief. So he doesn't want us to talk about tariffs. He doesn't want us to talk about the Epstein files. And so what does he choose to talk about? These auto pen things with
And Joe Biden showed up just in time to give it to him.
Perfect. Thank you. Yeah.
I mean, you couldn't write this stuff in advance.
No, literally, it's like an episode of Veep. Yeah.
It's an episode of Veep, which is a problem, Jeannie, if you're Joe Biden here. What has to happen with the auto pen? Does Joe Biden need to have Anita Dunn do an interview, or who was around him at the time that the president's talking about? Shouldn't they set the record straight?
I do think that this is something, if you look at it, Article 1, Congress has oversight. They are looking into this. I don't think many Democrats or the people from the Biden administration feel comfortable with the way that is going. But that is really where the power rests of oversight. And I think we need clarity on this, not for the past necessarily for Biden's administration, but going forward, because there's one thing to use the auto pen to sign letters to school children or something along those lines. But when you're using it specifically in the pardons and they're categorical, that does raise questions. Again, this gets back to our judicial process, rather. What is justice? We are tried individually, convicted individually. You presumably are pardoned individually, not as a group. And Donald Trump should answer the same questions about January 6th.
I'm guessing James Comer isn't going to get Joe Biden up before the
I don't think so.
Oversight Committee anytime soon. We've got a great panel here. Brittany Martinez and Jeannie Shanzano. They'll be back in our second hour as we welcome our global television audience to the conversation. We're going to talk about rescissions, which may be morphing before our eyes. This effort to claw back already approved funding, that's coming up next, right here on Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump clears more weapons for Ukraine, but the U.S. will not pay for them. Welcome to the Monday edition of Balance of Power. As President Trump makes the announcement alongside the Secretary General of NATO today, while also delaying possible sanctions against Russia for some 50 days. I'm Joe Matthew alongside Kaylee Lines in Washington, where Ukraine is our top story today. Kaylee, the president leaning into this story in a way that we haven't heard him yet.
Well, absolutely, as he continually is expressing frustration with Russian President Vladimir Putin. Yeah. Not only is the U.S. now sending more weapons to Ukraine via NATO, which will actually distribute them and pay for them, according to President Trump, but ramping up potentially the economic pressure as well. That is, if a deal can't be reached in this 50-day window. If no such deal is reached, that's when 100% secondary tariffs kick in. Specifically, secondary tariffs, not secondary sanctions, were the words of the president.
Although it appears the administration might be using those words interchangeably, as we heard from Howard Lutnick, and a chance to clarify that. It kind of sounds like the same thing. He might have meant tariff when he said sanctions, and then maybe there's no difference in their eyes. Either way, it's not a 2-week delay this time. It's a 50-day delay. And those weapons that we're sending in some cases will come from our European allies and will backfill their supplies. So there are a couple of layers here and the complexities to this deal. It kind of reminds us of we'll build a wall and have Mexico pay for it.
Well, yeah, that's a very good point. There's also the question of what this does to the congressional effort to enact more sanctions on Russia. That bill being spearheaded by Senator Lindsey Graham that would have 500% secondary tariffs on countries that are helping Russia. President Trump seemed to suggest that 500, 100, there's no real difference. They'll have the same effect.
Hard to tell how that all comes together here, but we're going to explore this coming up with some smart folks, including retired Rear Admiral Mark Montgomery. I'm looking forward to this conversation, Kaylee, not only about the weapons, the equipment, as President Trump likes to call it, used here, but exactly how this arrangement's going to work.
Yeah, so that conversation is coming up in just a few moments, but we begin, as always, with a check on financial markets. And for a look at that, we turn to Charlie Pellet up in New York. Hey, Charlie.
And a good day from New York. Trade, tariffs, sanctions, certainly very much in focus, helping drive today's sentiment. But right now, we're looking at the S&P very close to session highs as President Trump says he is open to trade talks. The S&P right now pushing higher by 6 points, 62.66 where we stand. That is a gain of 0.1%. The Dow also higher by 24 points now, up by 0.1%. NASDAQ up 66, up by about 0.3%. Our Mag 7 index up 0.2%. The 10-year ahead of bank earnings 4.42%. The 2-year 3.89%. Gold lower little change, down 0.2%, 33.48. And West Texas Intermediate crude down 1.7%, 67.29 for a barrel of WTI. Bitcoin now higher by 1% at 120,260. Have been closing in on 122,000 earlier in the session, but right now Bitcoin showing a gain of 1%. Sources tell Bloomberg Autodesk is no longer pursuing an acquisition of PTC, which would have ranked as one of this year's largest deals. Shares of Autodesk, they are gaining on that word, up by 5.6%. PTC is lower by 1.7%. Recapping, stocks higher across the board. The Dow, the S&P, NASDAQ all advancing as we continue to monitor any and all tariff or sanction developments. S&P up 7, up 0.1%. Back we go to Washington. Balance of Power continues now. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet, I think the answer is both and. It's both sanctions developments and tariff developments potentially as we consider, obviously, the tariffs that the president is now threatening will take effect August 1st against various trading partners, including 30% for Mexico and Canada, but also the tariffs that the president is now threatening against countries that help Russia. Secondary tariffs is how he was phrasing this as he sat down in the Oval Office earlier today with the Secretary General of NATO, Mark Rutte.
But we're very, very unhappy with them, and we're going to be doing very severe tariffs if we don't have a deal in 50 days. Tariffs at about 100%. I'm disappointed in President Putin because I thought we would have had a deal 2 months ago, but it doesn't seem to get there. So based on that, we're going to be doing secondary tariffs if we don't have a deal in 50 days. It's very simple. And they'll be at 100%. And that's the way it is.
Indeed, when you look at the definitions for tariff and sanction They are sort of different, but they are both, I guess, financial penalties. We can agree on that.
Economic leverage.
Economic leverage. He's pulling economic levers. Let's see if Kate Sullivan knows about this. She actually covers the White House for Bloomberg. Kate, we're just using these interchangeably here. We know, I think, what he's talking about. Kayleigh brings up a great point. We've got the weapons component here. That's a big deal. Because it would go beyond the drawdown that the president currently has. It would go beyond the summer. NATO pays for it. And we can certainly talk more about that. We will with the Rear Admiral in terms of what it is that they'll be buying. Right. But when it comes to sanctions, as Kayleigh asked, what does this mean for the effort that's underway on Capitol Hill? Lindsey Graham's got a bill that the president seemed to like last week. Does he still?
You know, it's really interesting. So one thing we heard Trump just say was, you know, I don't know if we're really going to need that, which I think is really interesting because he's not shooting it down. He's still open to it. But I think you heard him say, you know, if we do it this way with the tariffs or sanctions, you know, I know Lutnick was talking about how he's got these different economic tools in his toolbox. You know, these things in his toolbox, he would not need congressional approval for. So I think we're still waiting to see whether, you know, he's going to go that route, or it seems like he's still trying to keep all the options on the table. But it was interesting that he said, you know, we might not need that when it comes to what's going on Capitol Hill.
Well, and he's essentially said once you get to 500, that incrementally doesn't make a difference. That 100 is still going to have potentially a similar effect in terms of the tariff rate. When we consider the countries that this is likely to affect, Kate, is the end target here China? Is it India, who of course is still trying to work separately on trade with the United States? Because he didn't necessarily get specific, but I'm assuming he's talking about purchasers of oil and gas from Russia.
Right, I think so. I mean, we still don't know, and so I wouldn't want to get ahead of that. I think we're still trying to press the White House to find out more details on, but I think that definitely could be part of this. I mean, I think there are a bunch of different angles here, and when it comes to just, you know, putting this pressure on Russia to end the war, because this is something that Trump promised over and over again on the campaign trail was something that he could do in 24 hours. And, you know, I think we've seen the frustration about how Putin has been handling this just really bubbling up over the last few months. And so I think definitely that could be part of this here.
You wonder how this potentially colors any trade deal that could be in the works with India right now, knowing that India would suffer greatly from secondary sanctions if, in fact, they were put in place. You've got an August 1 deadline, though, on India for reciprocal tariffs. I suppose that could move again. 50 days for Russia, so maybe they don't bump into each other. Is that something the White House is cognizant of?
You know, I mean, the short answer is I'm not sure. I think, you know, we're still trying to see how this is all going to play out and how this is going to affect. I mean, there's so many different deals that they're working on, as you mentioned. There are things that, you know, are threatened and then pulled back. There are moving deadlines. And so I think there's a lot up in the air right now. But what we did hear today from Trump, I think, was just a very, you know, clear message when it comes to increasing frustration with Vladimir Putin. A huge reversal. I mean, this weapons package to the deal, I mean, I think was just, it's so stunning to think that, you know, even just a few months ago to think that the U.S. would be providing more weapons to Ukraine, although, of course, that's not how they're framing it. It's that NATO is going to buy the weapons. And then so I think the framing of it as a business deal is really important here because, you know, his base doesn't want to be sending weapons to Ukraine. And this is something that he talked about on the campaign trail so much. And to have it kind of structured as, you know, this is a business deal. We're going to make money off of this. And then this is really kind of NATO's problem now is just, I thought was really interesting and gave him a lot of political cover.
Yeah, I mean, he was very clear that the U.S. is not paying for these, that they are being paid for. Does that signal that as much as he may be growing increasingly frustrated with Vladimir Putin and with the fact that this war is still ongoing, that he does not yet find himself ready to be pushing Congress, say, for more actual assistance to Ukraine to be passed?
That's right. And I think, you know, up until now, all of the weapons and assistance that was being sent to Ukraine had been, you know, authorized under the Biden administration. And so there were no new weapons packages that Trump had approved that were going over there. So this is extremely significant because I think, you know, even though, you know, he's not ready to really own this. And I think the language that he was using today, you know, he was saying this is Biden's war, this is the Democrats' war, this is not a Trump war, is very important because I think he's very aware of the perception that if the U.S. starts sending weapons directly to Ukraine, that he's, you know, gonna be hurt by that politically. He doesn't want to do that. He doesn't want to push Congress to do that. But this is, you know, a thing that, you know, we heard him talk about this last week, and it's been happening over the past few days with this rollout of this announcement. But It's just a really interesting and very Trump way to kind of handle this foreign policy, and I think is really colored by his also personal relationships with foreign leaders, with Rutte and with Vladimir Putin. His personal feelings when it comes to these people, I think, is playing a big role here too.
Never forget when he screenshotted the text from Mark Rutte before the NATO summit.
Yes, he
when
did.
Rutte was praising him. Just posted it right on True Social.
Daddy's
Kate
home.
Sullivan, who covers the White House for us here at Bloomberg, thank you so much. Shedding some light on the thinking, perhaps, from this administration around the weapons package that was announced today that NATO, of course, will be handling. Here's how the president phrased it in the Oval Office earlier.
It's everything. It's Patriots. It's all of them. It's a full complement with the batteries.
And when do you expect them to arrive in Ukraine, sir?
Well, we're going to have some come very soon, within days, actually, because a couple of the countries that have Patriots are going to swap over and will replace the Patriots with the ones they have, and Matt will coordinate with NATO. But so it's going to be, they're going to start arriving very soon.
And we want to get more on these weapon systems that are going to be heading Ukraine's way, whatever the route is. Of course, this route through NATO, and turn to retired Rear Admiral Mark Montgomery, who's joining us now here on Bloomberg TV and radio. He's a former destroyer squadron commander, now senior fellow at the Foundation for Defense of Democracies. Admiral, thank you for being here on Balance of Power. When we consider these Patriot missile systems themselves, the idea that the U.S. will be backfilling countries that send these systems to Ukraine, how quickly can we actually do so? What kind of capacity exists in this regard right now?
Well, thanks for having me. You know, this is the real challenge. That the president's language was a little non-specific, as was Rutte's, and conflicting. But I will tell you, we can get them there quickly through either of the two routes that were mentioned. The one route of the Europeans transfer their PAC-2, that's a lower level type of Patriot missile, to the Ukrainians, what the Ukrainians could use very easily, and then backfill and order them from the United States to refill the European armory, or the United States could transfer them, and then NATO pays, the European countries pay the United States for the United States to replenish itself. Either of those methods gets them there much quicker than a Ukrainian order from from a defense industrial base country, which would be years. Either of these cases, he says, could be weeks to months to have missiles and batteries transferring to Ukraine.
Admiral, we're really glad to have you with us today, because before you were on the USS Nimitz, the USS McCampbell, the USS Elliott, the USS Bainbridge, and I can keep going, the Teddy Roosevelt, you were on the National Security Council at the White House, late 90s. And when we look back a couple of years here, how do we rationalize the fact that we've been having this conversation about our defense industrial base for decades, and we really don't have a greater capacity to show for it? Was this not something that you were talking about that many years ago inside the White House?
No, you're exactly right. I think we've got about a 20-year deficit, particularly in our munitions, and that's what we're talking about here, whether it's Patriot missiles here, the Standard missiles the Navy was using to shoot down Houthi rebel cruise missiles, or the offensive weapons that we were using against the Houthis or have used in other locales. We were running at about 25% of the proper level of munitions order. In other words, when we needed 4, we ordered 1. When you do that over 20 years, you really create a deficit. And worse, you tell the defense industrial base companies, I'm not going to do major orders. And they reduce their ability to produce. So what you've seen over the last 3 years are pretty consistent from the supplemental, the Ukraine supplemental, Taiwan supplemental a couple years ago, this year's budget and next year's budget, actual investments in the defense industrial base, where the United States is contributing to defense industrial base companies like Lockheed and Raytheon and Northrop Grumman to expand their ability, their capacity to produce. They obviously contribute. And so we are beginning to grow our capacity. But this is a 20-year deficit. The only deficit that's worse is the European one, which almost went to 0.
Well, and now, of course, Europeans are trying to step up in their own defense spending category, which is one of the main aims of this administration. That was a point emphasized by Secretary General Rutte in the Oval Office with the president earlier. As we consider the kind of allied capacity, if you will, I also would like to ask you, Admiral, about Russia's capacity, and specifically the supply of weapons that Russia is still getting from countries like North Korea. How should we be considering Russia's ability to continue to replenish its own stocks, continue striking Ukraine, often civilian targets, and how it's matched against the assistance Ukraine is now getting in terms of air defenses?
Well, that's a great question, Kelly, because you're exactly right. Ukraine is fighting 4 countries: Russia, North Korea, Iran, and China. And in fact, Russia today is firing more artillery from North Korea than their own. In other words, the majority of the artillery being used by Russia is North Korean. North Korea gave about 6 million rounds, which is 20 years of U.S. production, to the Russians. Iran has built a Shahed drone factory in Russia. After giving them thousands of their own Shahed drones or selling them, they now have a factory there producing it. That's what's hammering the Ukrainian cities every night. And the third thing is China has been backstopping the economy with increases in imports and exports, but equally importantly, providing the microelectronics that are used in Russian cruise and ballistic missiles. So all 3 of these countries, as axis of authoritarians, are supporting the 4th, Russia, in this fight. And that's who Ukraine's been going against. So that's probably why it's appropriate for the United States and Europe to assist with at least with equipment, but not forces.
It's incredible to consider 4 countries. You know, Bloomberg interviewed the head of Ukrainian military intelligence admiral who said North Korea is now supplying as much as 40% of Russia's ammunition in this war. You mentioned the shells that we're having trouble manufacturing as quickly, but they're prepared at least to send a lot of other stuff: ballistic missiles, artillery systems. Russia, of course, providing money and technology to North Korea in return. What's the weapon system you're most worried about, and could we see them include nukes coming from Pyongyang?
So, well, certainly not nukes, because not that Russia would use them, but they have their own tactical nukes already. But I'm glad you mentioned that, because that's something we should always be sensitive to. But the North Korean thing, that the North Korean weapons that bother me the most are, in fact, the artillery rounds. You're exactly right. But what bothers me even more than those are those Shahed drones. Shahed drones from Iran and the factory that was built in Russia are really putting pressure on the Ukrainian air defense system, and they're causing civilian casualties and damage to critical infrastructure. Energy, water, the financial systems of Ukraine are hit every night. And so, to me, that Iranian drone and that North Korean artillery are really making a difference in hurting the Ukrainians.
Well, and as you point to the targets that Russia is taking aim at in Ukraine, obviously part of the objective here, Admiral, is to wear on Ukrainian morale. Do you sense that we reach a point where that is effective, where Ukraine's kind of desire to keep prosecuting or defending itself in this war is going to diminish? Is Russia being effective in that regard?
So I don't think so. And here's why I say that. I go to Ukraine every quarter for a couple of weeks to do training with their military and their general staff. And I am convinced the Ukrainians won't lose. That doesn't mean they can push Russia out. It doesn't mean they can recapture Crimea, but they won't lose. They're losing incrementally, a kilometer here, a kilometer there of land, but they have the societal resilience to stay in this fight and win. They just need access to weapons, and that's what President Trump gave them today. He gave them access to weapon systems that they need. The one thing I wish he had gone one step further and given them access to some of our offensive weapons again, the ATACMS, long-range artillery. That would have been great, because then they could break up Russian formations when they're coming together in Russia by waiting till they're very close to the Ukrainian lines.
Yeah.
We want to stay in touch with you, Admiral. Let us know when you're going back to Ukraine. Retired Rear Admiral Mark Montgomery, Senior Fellow, the Foundation for Defense of Democracies. We thank you for the insights, only here on Bloomberg.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at the best level of the day right now on the S&P 500 index. Right to the numbers. We're up 10 now on the S&P at 6270. That is a gain of just about 0.2%. The Dow up 44, higher by 0.1%, while the Nasdaq Composite Index is up 81. For Nasdaq, a gain of 0.4%. Our Mag 7 Index up 0.3%. The 10-year 4.42%. The 2-year 3.89% ahead of bank earnings tomorrow morning. Spot gold down $6 the ounce, $33.49. Drop there of 0.2%. A retreat for crude. West Texas Intermediate now slumping by 2%, $62.12 a barrel. And Bitcoin up 0.9% at 120,139 on Bitcoin. Tesla facing a federal jury today. Tesla's on trial in Florida over claims that the company is partly to blame for a fatal 2019 crash that occurred when the autopilot system in a Model S allegedly failed to detect a parked SUV. Tesla shares, they're up 0.7%. And again, Bitcoin has breached $120,000 for the first time. Investor enthusiasm showing few signs of dimming as the House of Representatives prepares to consider key industry legislation. Again, bears repeating, we did see Bitcoin closing in on 122,000. Right now, Bitcoin 120,196. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Checking on all asset classes for us. But yes, noting those incredible moves in crypto with Bitcoin north of 120,000 just in time for Crypto Week in the House of Representatives. Or maybe it's because it's Crypto Week in the House of Representatives, Joe, is that those lawmakers are gearing up to vote on 3 separate pieces of legislation pertaining to the industry this week. They'll, of course, be voting to pass the Genius Act, which passed the United States Senate earlier, that will regulate stablecoins, specifically looking to pass the Clarity Act, which is a market structure bill, divvy up jurisdiction between the SEC and CFTC, and pass some anti-CBDC legislation as well. Crypto Week.
Yes. Don't you miss when she was hosting the crypto show? This is like the old Kaylee coming out. But I have to admit, you're the first person I asked when I walked in today, what the heck is going on? $120,000 is a really big deal. Wouldn't it be like us in Washington to really take credit for that? But there could be something to this here. The fact that it's being institutionalized on this level, you see Congressman French Hill doing Sunday morning TV talking about crypto. We're in a different world than we would have been a year ago.
Yeah, well, the whole idea is that especially if you get the regulatory clarity the industry has been pushing for years, that could open up all sorts of doors in terms of institutional appetite for cryptocurrencies if there's a greater clarity on the regulatory front. This is what they've been lobbying for.
That's for sure. You certainly hear a lot about that. We heard a lot of $1 million price targets floating around over the weekend, too. And this is the type of thing that gets that talk started. So let's get our panel together here today. We're going to get into the crypto week and also the rescissions package that's looming on Capitol Hill, whether it ever sees the light of day. We're going to ask Jeannie Sheehan Zaino about this, Bloomberg Politics contributor and senior democracy fellow with the Center for the Study of the Presidency and Congress. Great to have Jeannie with us alongside Brittany Martinez, Republican strategist, founder, executive director, Espina & Company, runs Principles First. And it's great to have you with us as well, Brittany. Jeannie, is this real? Is Washington really deserving of the credit for $120,000 on Bitcoin?
Well, you know, I think what's deserving of the credit is the enormous amount of lobbying that went into this bill. And you were just talking about this with Kaylee. I was looking back at the contributions that stablecoin and Bitcoin made in the last election to both sides of the aisle. It was one of the largest groups donating in 2024, and this has been the case for many cycles. And so I think what it reinforces is you give money to representatives and senators, you will get bipartisan support for legislation that you like. And that's what we saw in the Senate, and that's what we suspect we're going to see in the House. I don't know what it says about Washington, D.C., whether they should be trumpeting credit, but they took in a lot of money and they're delivering on those promises.
Well, and we should point out that this also was an objective for President Trump. He wants to see this legislation passing. He wants to be the most pro-crypto president in history. Brittany, when we consider, though, that this is not budget reconciliation, it's going to require Democrats to get this across the finish line. Certainly, in the Senate. What incentive do Democrats have, even though
we're in DC? I think we know that it kind of affects the way that you legislate a little bit, and I think that crypto's here to stay. And so, if Democrats, I think the one thing that might be able to sort of get them across this finish line is: do you want to help usher in this new age? Do you want to be innovative and part of this? And I think that might be able to sway some hearts and minds.
You wonder if it's important enough for Republicans to entertain this Democratic idea of kind of writing Donald Trump out of the industry, that there would be some sort of curbs put on his involvement, but that's not ever going to happen, is it?
I mean, I think, listen, this is the most Bloomberg-y topic I think I've ever talked about here when it comes to crypto.
Yeah.
But, Bitcoin and all of those like fancy money terms with this virtual money and currency, we saw what I think are some very clear ethical issues when it comes to the Trump coin and all of those sort of things like that. And I think it would be smart for Republicans to say this is bigger than all of us, and maybe have him take a back seat on this. But no, I mean, this is a Trump show, and so I'm sure he'll be very much out in the front of this.
Yeah, well, we should point out that at the same time, it's crypto week for House Republicans. For Maxine Waters, the ranking member of the House Financial Services Committee, I believe she's calling this anti-crypto corruption week as she pushes this narrative, Jeannie, that this is an ethical problem, that President Trump stands to benefit potentially from this legislation financially. And I wonder if you expect that to be too big of a hurdle for many Democrats to get over, to get to yes on these bills.
I think it is the one thing that is putting pressure the other way on this bill: world, liberty, financial, everything else. By the way, I love Brittany's word, Bloomberg topic. I can't even say it, but it's a great word, great term. The reality is, though, they planned for this. They saw this coming. And that's why, again, look at the money, look at the contributions that went just in 2024. They'll go again in 2026. This has been ratcheting up for a long time across the aisle. And I think in the end, that will keep enough Democrats on board, despite concerns about ethics, which are incredibly real. I think that'll keep enough Democrats on board that this thing will get passed into the president's desk. I think it's an old story in Washington, and it is particularly troubling. I mean, one of the ironies here is, for such a new way of doing business and a new introduction into the financial world, something that only, my kids told me about and said, you should have invested in 2010 or whenever it started, which I never did. All of a sudden, they have made inroads into the oldest establishment in Congress, and they've done it the old-fashioned way. I mean, it's pretty telling, and it will probably be successful.
Wow, that's pretty good, Jeannie. Well, we talked about a bunch of deadlines earlier in the broadcast. We've got the 1st of August when it comes to reciprocal tariffs. Now, Donald Trump has a 50-day pause or waiting period on Russia sanctions. There's another big one, Kaylee, July 18.
Friday.
That's when the rescissions package expires, Friday. So they have the rest of this week to claw back $9.5 billion that we've been talking about. And it's just not as easy as it is said, as it turns out here. Brittany, the idea of clawing back congressionally approved funding, whether it's NPR or USAID, PEPFAR funding, this is very controversial. Forget the $2 trillion that the DOJ was going to cut. It looks like this actually might not pass in its current form and will have to be revamped. Is that how it ends?
I think there's a good chance here. I mean, this Congress has been nothing but surprising. So it wouldn't surprise me if it passed. It wouldn't surprise me if it didn't pass.
Yeah.
But what I will say is that, once again, we find the Senate, especially Republicans in the Senate, pushing back. And they're sort of the ones who are going to be the deciders here. I know that Collins has some concerns. And the broadcast, I think that is going to be a big issue. USAID, I think those are going to be the top things that Republicans are looking at, especially senators who are representing rural areas where broadcasting is important. Right. And we need to make sure that Americans know what's going on. And the last thing I'll say on this is that, I have the privilege to come and share my opinions sometimes and commentate on things, but I'm not a reporter. I'm not a journalist. And when I see Trump saying NPR and PBS and they're worse than the mainstream media, whatever, it just feels like not only is it a hit on freedom of speech, but free press. And so I think that's going to be a big concern for the constitutional Republicans that are in office.
Well, so Jeannie, knowing that those Republicans who may have those concerns are also being faced with the threat from the president directly to lose his support and endorsement if they don't get behind this, how do you think ultimately they all will come down?
I think it's going to be close. I think we will see, if this has a chance of passing, I do think we're going to see some changes on the public broadcasting because they can only afford to lose 3. And you have a number of rural Republican senators right in the wake, let's not forget, of the devastation in Texas when communication was such an important issue. How can they look at their constituents and justify cutting funds? And it's not a lot of funds, but cutting what little funds go to public broadcasting in those areas, which are for many people in those areas, their only lines of communication. I think USAID, we may see some changes. And then to your and Joe's earlier point, can they do this all and jam the House and get it passed into the president's desk by the 18th? It's going to be short. So I think the president is threatening. They want to get this through. Russ Vought is working as hard as he can. But this one, I think, is going to be close. My guess is we see changes out of the Senate. They try to jam the House. And we'll see if Mike Johnson has the magic touch once again.
No, the parliamentarian might have to have a say in this by the time they're done, which is something we're familiar with at the moment. Brittany, do you buy the conventional wisdom that if Republicans pass the rescissions package, a deal with Democrats on a budget is dead in the water because you've just eliminated whatever trust there was, and there isn't a lot right now?
I don't think there's a lot right now. You're right. I mean, it's Congress. I think that we're always speculating, whose side people are on and if they're going to be able to come across. But when it comes to that, I kind of, but I'm sorry. I feel like when it comes to this issue right now and what we saw, especially with the One Big Beautiful Bill, there's not a lot of goodwill at the moment. Right. And so I think Democrats are just going to vote party line as much as they can. And I don't think this is any different.
Mm-hmm.
Well, I wonder how the pressure of the government shutting down potentially changes the calculus there. Jeannie, before we let you go, as well, as Brittany just mentioned, the One Big Beautiful Bill, of course, a round of budget reconciliation. Our colleague David Gura caught up with the budget chair in the House, Jody Arrington, in New York earlier today, who suggested he's going to try to do a second budget bill by the end of the year, a follow-up with some new reductions in Medicare, fix any errors from the first one. We know how hard the first one was. Do you really see the odds of a second being able to pass in 2025?
I don't know, Kaylee, strap in. We're going to do it all over again. I can't see them being able to do this all over again, but I think these were promises made to people uncomfortable with the bill. So I think they're going to give it a shot. I'm not confident it gets over the line, but we heard the same from Vought as well about the rescissions, where this is the first of what's going to be many. So I think these are promises. I'm not sure they're going to be able to keep them.
Well, we'll all find out together. Jeannie Sheehan Zaino and Brittany Martinez, our political panel, as we kick things off the week in Washington on this Monday. Thank you both so much for joining us. And of course, Joe, we've heard the speaker float that as well, that we could get more reconciliation packages.
That's
the question is just how hard fought those battles would be.
Ask Joe Biden how easy it is to get 2 swings at reconciliation in the same Congress. We'll talk more about this, of course, as we make our way through the day. And this idea that the walls are closing in on Jay Powell, it's intensifying. What we're hearing from the White House. We'll have more on that next on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. NASDAQ at a record. S&P 500 index holding close to session highs. Stocks solidly in the green. Stocks bounced higher as President Trump indicated he is open to trade negotiations, including with the European Union. S&P right now up 10. That is a gain of 0.1%. The S&P at 62.69 again, close to session highs on the Monday session. The Dow up 64, up 0.1%. NASDAQ at a record 20,661 now, up by 0.4%. 10-year at 4.42%, with the 2-year currently yielding 3.89%. Gold, little change, down 0.1%, $33.50 the ounce. West Texas Intermediate crude down 1.9%, $67.14 a barrel. And Bitcoin at 119,978 on Bitcoin, trading at a record, up 0.7%. America's biggest banks heading into earnings season with tailwinds from trading and lending as they benefit from market volatility and steady borrowing costs. Tomorrow morning, we hear from J.P. Morgan Chase, Citigroup, and Wells Fargo. All three higher right now. J.P. Morgan Chase up 0.8%. Citigroup is advancing 0.7, and Wells Fargo up by 1.1%. Again, recapping, stocks higher, NASDAQ at a record. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Okay, Charlie, thank you so much. Live from World Headquarters in New York, Charlie Pellet on the markets for us as we consider what's happening inside the headquarters of the Federal Reserve. This is not a market mover, at least not yet. But when you drive by the Fed building on Constitution and 20th Street, you see a bunch of orange cones and barrels out there. Kaylee, there's a barrier up because they're working on the building. They're rehabbing the building. And this has become the cause du jour at the White House. If you have a problem with Jay Powell, you have a problem with the renovations. This is something we heard about from the likes of Russ Vought and others. And now it's become a full-blown scandal here. I don't know if they want Jay Powell to be using IKEA or what's going to happen, but the idea is Russ Vought referring to it as Versailles, the millions of dollars that are going into the headquarters. They're calling for an audit against the backdrop of continued complaints about Jay Powell and his approach to interest rates. You certainly have heard enough about this from President Trump, who calls him too late Powell. He's called him stupid and other things in front of cameras and microphones. We spent some time with Peter Navarro, the president's trade advisor, who also thinks it's lights out for Jay Powell. Here's what he said.
I think the bond market, frankly, thinks Jerome Powell's a clown at this point because of what he did. And I can go over the three major mistakes he makes, but the bond market will do what the bond market does, seeing the data. And when you see 10-year yields going down significantly like they have been doing, that should tell Jerome Powell that the short-run rates should be coming down significantly. And that's not happening.
It's not happening, and it's not clear if it will happen and what the consequence would be for the Fed chairman himself as the White House is pushing this cut narrative, but also now apparently creating some concerns as to whether or not the Fed chair actually misled Congress about the cost and the scale of these renovations or rehabilitations, whatever you want to call them. So we wanted to get into this more with Amara Omokwe, who's joining us in studio here in D.C. She's Bloomberg Federal Reserve reporter. So Amara, as we know, there's kind of this legal question that we've been grappling with for months as to whether or not the president can actually fire a Fed chair. We know a governor can be removed for cause. Is this whole business with the building potentially a way to drum up cause?
It certainly seems like people in Trump's orbit are trying to lay the groundwork to argue that there is cause to remove Chair Powell from the Board of Governors. The question of whether a president can remove the chair is a little ambiguous, but the question of whether the president can remove a governor on the board is more clear in the law. If there's cause like malfeasance or neglect of duty, then that gives the president more standing. And you hear, you've heard one administration official, Bill Pulte, say that what Chair Powell said to Congress about these renovations when he testified before the Senate last month, that he lied, basically. That's the allegation. And he's saying that would amount to cause. You hear Russ Vought saying that Powell has grossly mismanaged the Fed on social media when he was discussing these renovations. So the use of that language definitely suggests like people in Trump's world are trying to build this case for cause.
His term doesn't even go on for that much longer. I mean, by the time they got the paperwork to fire him, wouldn't he be leaving the building anyway?
His term doesn't go on for that much longer, and Trump has said that he doesn't want to fire Chair Powell. But the context that you all were talking about is very relevant here. This is a president and this is an administration that doesn't like Jerome Powell. They don't like him.
They nominated him in the first place.
Yes, Trump appointed him to chair in the first place, but the relationship now is in a very bad place, right? Powell and fellow policymakers have not delivered the rate cuts that Trump wants this year so far. They don't look like they're going to lower rates at their meeting later this month. Trump is angry. And so you can't separate where we are on this construction project from that anger and this full-scale pressure campaign that the administration has been waging on the Fed to lower rates.
Well, and the Fed is the point here, or more specifically, the FOMC. While Powell obviously has been the person targeted by the administration, he, while the chair, is only one member of that committee. These decisions are made in a group setting. So even if he does successfully get rid of him, that doesn't necessarily mean it's going to change the course of monetary policy.
That is true, but Powell has been he said recently that the Fed would probably be cutting by now, if not for tariffs and the potential for tariffs to drive up inflation. And so Powell has really been the face of this sort of on-hold stance, this face of let's be patient here on rate cuts. And so that's why Trump is so angry. And Powell is known to be someone who does have a lot of influence over the committee, who has been known to kind of be able to move the committee to kind of where he thinks they should be going. And so all of that plays into Trump's ire at Powell because policymakers have not adjusted rates so far this year.
Just to clarify before you leave us, in testimony, Jay Powell refuted what had been reported. He said there are no VIP lounges, there are no water features, there's nothing exotic that's going into the Federal Reserve building. Do we have any idea what they are building in there that's costing so much?
Yeah, the last sort of like big publicly available review of what they are building came out in 2021 from this National Planning Capital Commission. They reviewed the project and signed off on it. And a lot of this seems to be like a disagreement over how you want to label things, right? So like he was asked about rooftop terrace gardens. And the Fed has said, actually, those are like vegetated gardens on the roof, which are good for like sustainability and like they're environmentally friendly. So like a lot of it seems like how angry are you at Powell and do you want to like sort of cast some of these things that's overly extravagant.
In the eyes of the beholder,
exactly.
Wow, fascinating.
Yes,
Amara, thank you so much. Amara Mokwe, Bloomberg News Federal Reserve reporter. As we try to get to the bottom of this one, maybe we can get a tour, Kaylee. I kind of want to see what's going on in there. You mentioned tariffs, though, Kaylee, and indeed, Jay Powell has indicated that if it were not for the tariffs that the president has on again, off again, recently adding to over the weekend, that maybe things would be in a different position when it comes to moving rates. And we want to explore this a bit more with Jacob Funk Kierkegaard, non-resident senior fellow with the Peterson Institute for International Economics. Jacob, welcome back to Bloomberg TV and radio. Do you suspect that that is true, that if the tariff policy were at least more predictable or not there to begin with, that Jay Powell would have much more flexibility to start lowering rates now?
Oh, yeah, I would certainly say that the inflationary, the sort of projected path for inflation in the United States would be significantly lower. And that would quite naturally correspond into more freedom for the Fed to cut rates. No doubt about that in my mind. It is possible that, firms front-loaded a lot of stuff ahead of the early April deadline. They may even be eating it initially through their margins, but none of that is sustainable. So I think, I'm on the team that thinks inflation is coming unless.
Well, and I guess we'll get a sense when we get U.S. CPI data tomorrow as to whether or not it is starting to feed through into inflation, knowing that higher tariffs still could be coming just weeks from now, Jacob, as August 1st, of course, is the new deadline we're working with. And the European Union specifically is now being threatened with a 30% tariff on that date. The EU's trade chief, Maros Sefcovic, says that effectively would prohibit trade between the U.S. and EU. Do you view that the same way?
Yeah, I think that's true. I think that, even if the 30% do not necessarily include the categories that are already affected by sectorals, that will be autos and steel and aluminum, there'll be a very, very large amount of trade that simply won't be profitable at a 30% tariff. So what this will do is that it will greatly diminish the overall amount of trade that is done. And I think importantly also what that means is that Trump's threat to match any possible EU retaliation to those 30% probably is not very influential for the EU because the initial hit to trade has already been so large. And therefore, it's not a particularly effective deterrent, in the eyes of the EU from its retaliation.
So should we start stockpiling wine and cheese now?
Well, I think yes is the short answer. If you believe that the prospects for a deal are much lower today than they were last week, I am certainly in that category. I think the EU quite clearly have interpreted the 30%, which is obviously much higher than the initial April 2nd 20%, as kind of a slap in the face. And basically, using the EU's, and I think honest attempt to get a deal as a sign of weakness and as therefore an opportunity to squeeze the EU even more. Once the prospects of some framework of a deal agreed between the EU Trade Commissioner, USTR, and the Department of Commerce reached the White House. So yes, I think the probability, unfortunately, of a no-deal scenario today is higher than last week. And yes, that probably means that you should at least think about stockpiling stuff you'd like from Europe.
Well, it also raises the question of where Europe would turn if trade was effectively cut off in at least large part with the United States. As European officials, Jacob, are now talking about this idea that it will increase engagement with other countries that have been affected by U.S. tariffs. Could the end result of this actually just be a reorientation of the global trading system away from the United States and actually more toward countries like China?
I don't know if more towards China, given that trading with China, certainly from the EU's perspective, today is a very unbalanced, endeavor as well. But no doubt that the EU is very strongly pursuing, deeper trade ties with quote unquote third countries. This weekend, we had the political conclusion of an EU-Indonesia free trade agreement. The EU is also plowing ahead with the potential free trade agreement with India, as well as other members of ASEAN, Thailand, Malaysia, and others. They have obviously recently struck deals with Mercosur in the better part of the South American economy. So absolutely, I think what you are seeing is that countries that still believe in the benefits of free trade, they're going to trade more with each other and less with the United States. Maybe also less with China because of the risk of Chinese overcapacity and sort of excess export growth. But among themselves, absolutely, that's what we will see, which ironically is something that, maybe the Trump administration actually wants at some level by levying so high tariffs on so many U.S. trading partners.
What do you make, Jacob, of the decision to not retaliate? Ursula von der Leyen says there won't be any retaliation ahead of the deadline on August 1st. Is it smart not to escalate?
I think if you're the European Commission, it's a smart move. Because remember, if there is retaliation, this would be by far the largest trade retaliation in European history. The cost of that will be borne by the member states. So if there was any doubt about who wanted that trade escalation, if the Commission could in any sense or shape be accused of being escalatory or hawkish in these negotiations, there'll be a lot of incoming fire headed to the European Commission and Ursula von der Leyen from member state governments. So she's basically insulating herself from doing that by saying, look, we want to make sure that if this comes to a trade war, it's Donald Trump that fires the first shot, not us. So yes, I think it is smart. And obviously from a European point of view, because, Europeans view tariffs as a bad idea. And if you do that, of course, you should use any possible option to avoid it. So absolutely, yes. Keep negotiating until, 11:55 p.m. on August 31st.
All right, Jacob, we appreciate you joining us. Jacob Funk Kierkegaard, non-resident senior fellow with the Peterson Institute for International Economics, joining us here on Balance of Power. And we're out of time, Joe. Otherwise, I would have asked Jacob what the difference is between secondary sanctions
and tariffs?
And secondary tariffs. We're going to have to explore that more, I guess, in the late edition.
Kaylee's asking this because they appear to be interchangeable today at the White House, even though they are kind of very different. We'll explore this more, by the way, with Libby Cantrell is going to be on the late edition of Balance of Power. That starts at 5 p.m. Eastern Time. We'll meet you back here with much more from Washington, only on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone, live from the Bloomberg Business Week studio in New York. We're on Bloomberg TV, radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily. I'm Tim Stenivek. That is Nora Melinda. She's Bloomberg News equities reporter. She is in for Carol Massar. On this day, Nora, where we're seeing a little bit of a, I guess you could say, relief rally in equities.
Yeah, I mean, we're seeing some of these indexes up a touch. We have communication services, the best performing sector. Energy, the worst performing sector right now in the S&P 500.
Charlie Pellet's going to have a deep dive in just a minute. In the meantime, we've got our eyes on pretty much everything that's moving markets this afternoon. We're going to start talking about trade because the president indicated he's open to trade negotiations, including with the European Union. Also, it is a busy week. We've got results from the big banks. We're going to get inflation data. And then there's everything happening when it comes to geopolitics, Nora. And that's where we're going to begin with the latest when it comes to Russia's invasion of Ukraine.
Yeah, lots to really focus on here, lots to parse that I'm really keeping an eye on, and we can definitely tell that Wall Street is doing the same here.
The president threatened to impose stiff financial penalties on Russia if it does not end hostilities with Ukraine. Angela Stent is going to be joining us in just a few minutes. She's of the Brookings Institute, and she's standing by right now.
And speaking of financial penalties, what investors need to know about the latest tariff announcements against Mexico and the EU.
Also on those tariffs, how one S&P 500 company is navigating them. We've got the CEO of Fastenal joining us in just a few minutes. All that and more coming up this hour on Bloomberg Business Week Daily. First up, a check of the day's trade and top business stories. Here he is. Hey, Charlie Pellet.
Hi, thank you very much, Tim and Nora. We have got the Dow, the S&P, NASDAQ, all advancing. S&P 500 index holding close to the best level of the session, up 9 right now, up 0.1%. But NASDAQ trading at a record right now. The NASDAQ Composite Index up 64. Right now, NASDAQ 20,649, up by about 0.3%. The Dow up 53, up by about 0.1%. 10-year 4.42% for the 2-year ahead of bank earnings, 3.89%. Gold little changed and lower, down 0.1%, 33.50 the ounce. West Texas Intermediate crude down 2.2%, 66.97 a barrel on WTI. Bitcoin back above 120,000 right now, trading at a record today, reaching that level for the first time. Bitcoin up by 0.7%. Meta Platforms CEO Mark Zuckerberg says the company is building several massive data centers to power its AI efforts, with the first one expected to come online next year. Right now, Meta up by about 0.8%. As we have been reporting, President Trump says the U.S. will send more weapons to Ukraine, describing them as top-of-the-line weapons. And according to the New York Times, Andrew Cuomo will stay in the race for New York City mayor to challenge Mamdani. Recapping, S&P up 8, up 0.1%. NASDAQ at a record. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Certainly do appreciate it. President Trump threatened to impose stiff financial penalties on Russia if it does not end hostilities with Ukraine. That's within 50 days, while pledging fresh weapon supplies for Kyiv. Trump said the levies would come in the form of secondary tariffs without providing details. The president has used the term in the past to describe duties imposed on countries for trading with American adversaries. Angela Stent is senior fellow at the Brookings Institution. She's also the author of Putin's World, Russia Against the West and with the Rest. She's a former national intelligence officer for Russia and Eurasia at the National Intelligence Council. Also served in the Office of Policy Planning at the U.S. Department of State. Angela, good to have you with us this afternoon. Secretary Lutnick followed up afterward. He said it would be a secondary sanction, or secondary sanctions, I should say. What exactly does that mean for a country that has had sanctions on it for years?
So the actual tariffs or sanctions on Russia wouldn't mean very much, tariffs, because we barely trade with Russia. I think $5 billion last year. But what that would mean is sanctions on China, sanctions on India. They're the two largest purchasers of Russian oil. Probably a country like Turkey as well, which purchases a lot of Russian oil. So they are threatening those countries. I believe that President Trump said 100% tariffs. There's a Senate bill which would impose 500% tariffs, secondary tariffs on these countries that purchase Russian hydrocarbons. So that's the real threat, not so much to Russia.
Angela, how meaningful would it be for these countries?
So, it would be meaningful because they are the largest purchasers of Russian oil. But then we don't know how they might retaliate. India, of course, is a country that's been drawing closer to the United States. So to have that kind of tariff on India would also, I think, affect other aspects of the U.S.-Indian relationship. So I think they're kind of all waiting. I should say that, saying that Russia has 50 days to end the war, you have to realize that Russia is now in the middle of a very brutal summer offensive. And if you give them 50 days, the summer will be over by then. So Russia can still do an enormous amount of damage to Ukraine in those 50 days.
Well, in terms of moving the needle on actually ending this conflict, Dr. Sten, is this enough in your view to actually push Russia to stop its bombardment of Ukraine?
Well, the most important thing at the moment are the weapons supplies. I mean, the Ukrainians desperately need air defenses. They need those Patriot batteries. And today, President Trump said that there's 17 of them available. So what's going to happen is European allies are going to purchase American Patriot missiles and other weapons. They are then going to give them to Ukraine. So that enables President Trump to say to his base, well, we're not spending any more money on Ukraine. Whether that's enough to help Ukraine really give the message to Putin that he cannot win this war, I think that's doubtful. I mean, Putin's not going to stop until he really believes that he's not going to win this. And for that, the Ukrainians need an enormous amount of weapons, including, in the end, weapons that could strike Moscow. But we haven't said that we're going to provide those yet.
Well, let's listen to exactly what the president said earlier. Here he is in the Oval Office with NATO Secretary General Mark Rutte.
Where we're going to be sending them weapons and they're going to be paying for them. The United States will not be having any payment made. We're not buying it, but we will manufacture it and they're going to be paying for it. This is a very big deal we've made. This is billions of dollars worth of military equipment is going to be purchased from the United States, going to NATO, etc. And that's going to be quickly distributed to the battlefield. Ukraine will take it up. And, say what you want about Ukraine. When the war started, they had no chance. And they still would have had no chance if the equipment, they had the best equipment, because we do make the best planes and missiles, and we make the best military equipment in the world by far.
That was President Trump. Earlier today, he was in the Oval Office with NATO Secretary General Mark Rutte. Dr. Sten, I want to talk about the weapons portion of this and the significance that you see in an environment where many in the Republican Party were happy not to provide Ukraine with any aid. How do you view this politically for President Trump, and also whether or not you think this is enough of a move by the United States? And again, the president saying the United States is going to provide them, NATO member states are going to pay for them. If that's enough to give Ukraine the edge against Russia?
Well, so first of all, this certainly has split the MAGA base, because there's still significant numbers of people, beginning with Vice President Vance, who think that we shouldn't be supplying Ukraine. And then you had the Undersecretary in the Defense Department, Elbridge Colby, apparently order the end of supplying Ukraine with weapons because he thinks only the Europeans should do this. President Trump reversed that order that apparently he hadn't heard about before. So yes, I think this is still a contentious issue within his base. Is that enough to help Ukraine? I mean, Ukraine just needs an enormous amount of these Patriot batteries. If it gets 17 extra ones, that's terrific. The Ukrainians themselves are manufacturing their own drones now. They're also making deals with European countries to co-produce them. But we really don't know whether that is enough, because the Russians are also stepping up their production of weapons. And they're also using their drones in very creative ways to try and get round some of the barriers that the Ukrainians have put in their way. So at the moment, things are very difficult for Ukraine. And I think only very significant numbers of weapons can help them push this back. And they also do have a mobilization problem. Russia has many more people it can mobilize. It's got North Koreans fighting for the Russians. The Ukrainians do face this shortage. They are so far refusing to draft 18 to 25-year-olds, but they are under pressure from some of the Western countries to do so.
Angela, we saw a report last week that North Korea is supplying as much as 40% of Russia's ammunition. Mm-hmm. Just how much of an asset is this for Russia?
Oh, North Korea is an enormous asset for Russia now. We now hear they may send as many as 30,000 more Korean troops to Russia to help, and with the ammunition. So without North Korea, it would be very difficult for Russia to do what it's doing. Iran is less important now, by the way, because the Russians are producing their own drones. But I would say the single most important country in terms of weapon supplies right now is North Korea.
Dr. Angela Sten, we always appreciate you taking the time and joining us on Bloomberg Business Week Daily. Dr. Angela Sten is Senior Fellow at the Brookings Institution, also the author of Putin's World, Russia Against the West and With the Rest. So that's the latest out of Washington when it comes to Russia and Ukraine. Now let's get to trade, because President Trump indicated that he's open to more trade negotiations, including with the European Union, even as he insisted that his letters threatening new tariff rates are, quote, the deals for U.S. trading partners. Josh Wingrove is a Bloomberg News senior White House correspondent. He joins us from our bureau in Washington, D.C. Josh, I want to start with Europe, because I think the big news over the weekend was the idea that the European Union would see a 30% tax or 30% tariff on goods from the country. Obviously, a big deal for a very big trading partner. The president somewhat walking those comments back a little bit, or at least saying he was open to negotiations. What's your read?
Yeah, these letters have been a bargaining tactic, and that one landing in particular in the middle of what have been negotiations between the U.S. and the EU. And that's important because other letters to smaller economies have not really, been that circumstance. They've been maybe token negotiations at most, and the letters seem to be, the last word, or at least one of the last words. So Trump is in some ways trying to set a number, but also invite these negotiations. He's also using these letters, of course, to invite direct investment. Of course, that's going to be not particularly compelling for countries to try to facilitate if they feel like there's a gun being held to their head. So, the EU is, of course, one of the major U.S. trading partners, a lot riding on this one. And the question is, of course, will they land somewhere, or will Trump look at wherever they are in a week or two and think that that's either not enough and stick with the 30%, or it is enough and go to a lower number? Remember, of course, the baseline number right now is 10%. He initially announced 20% on Europe in those initial Liberation Day tariffs. He's threatened as high as 50% on Europe, and is always, that's been kind of one of the top of the list places that he's complained about when he talks about unfair trade relationships. I should note, of course, he posted in the last day or so a complaint that he continues to think the U.S. is being taken advantage of militarily as well as economically. That's a comment to be read in the lens of the EU talks, the Canadian talks, the Japanese talks, the South Korean talks. Trump sees all these things kind of commingled, and some of them they've been publicly resistant to talk about touching, like those sectoral tariffs. So, he's trying to get deals. He doesn't want to really negotiate on some of the things that these other places negotiate. It's tough sledding ahead.
Josh, the EU is definitely a big major trade partner indeed here, but who's really making the most progress here? Is President Trump pulling ahead? Who seems to be budging, if at all, in this tariff war between the two countries?
We don't know, because the EU has been leading the way in terms of countries that have not retaliated, but can. I mean, there's a lot of U.S. goods sold to Europe that could face tariffs. Trump is mad about the trade deficit, but of course that is a two-way street that he's talking about. And I think the question here, and we have some reporting from some of our colleagues in Europe, that there are at least some voices wondering whether there should be increased collaboration between some of the Western economies that are all facing similar U.S. threats, is do they ultimately all get to a deal, or do they ultimately all decide to push back more than they have already? And right now, that is just such an open question. Remember, early on, particularly with China, you saw like tit-for-tat responses from some places that really sort of sent things escalating to effectively trade embargo level tariffs. We haven't really seen that yet, but that doesn't mean that we won't get there. And remember, Trump's threats are so angering people and voters in these other economies and countries and blocs that the political will to bend the knee versus to fight back might become a big factor here at some point. So we just don't know yet where it's going to land with the EU. Remember, some of these tariffs are coming on August 1st. That includes the EU, that includes Canada and Mexico from their letters, even though they weren't facing the same timeline. China remains a big outstanding question. They're not facing that same deadline, but are facing a different, softer one later in August.
Josh, are these tariffs legal? And I ask that in the context of Brazil, for example, because you mentioned the president is and he's made his disdain for trade deficits known, but we have a trade surplus with Brazil. And ostensibly, a lot of these tariffs fall under IEEPA and the Emergency Act that, that gives him. And I'm wondering if these will hold water in the court of law.
The Brazil one, of all of them, is the biggest stretch, I think. I mean, I'm not a lawyer, but Trump's position is that the United States Emergency Economic Powers Act allows him to tariff 50%, to tariff Brazil 50% because of a prosecution going there on one of his allies. I mean, it is just such a stretch, so much a stretch that the bottom of that letter includes Trump saying he's going to launch a 301 investigation, which, even if that investigation proves to be a fig leaf, does give him stronger legal authority to impose Brazilian tariffs. In other words, he's giving himself a second option, which is, of course, a tacit acknowledgement that the first option isn't all that much of a guarantee. Now, the trade-off there with 301s is they take time, months, several months usually, to enact. So August 1st, he might try to impose those on Brazil, but that is definitely the one that's a stretch. The legal battle over the more broader use of IEEPA, remains. He does have other avenues. Section 338 jumps to mind. He is, of course, continuing to pursue Section 232 powers. The administration has basically said tariffs are going to come one way or another if they don't get their way in court, and that they'll fight this all the way to the Supreme Court if they have to. So we'll see where that goes, but you're absolutely right that there is certainly an open legal question here, or at least that is what every analyst is telling us. But in particular on that Brazil one, that's why I think you might see them pursue that 301 path to give himself a fallback.
Just quickly here, Josh, can we talk a little bit about Mexico? How key is Mexico in terms of the U.S. trade ecosystem?
Huge. And I think some of the news on the weekend that I want to make sure people caught was that our reporting is that the USMCA exemption for trade from Mexico will continue, even if Trump proceeds with that 30% rate. Same deal for Canada. So that is a bit of a change of tune. Trump was interested in really broad tariffs on both those countries in the first hours, if not weeks, of his administration. Now they're saying, look, we're going to have a higher top rate on both Canada and Mexico, 35 and 30% respectively. But they're going to continue that exemption for USMCA compliant goods. Remember, that's the new NAFTA that Trump renegotiated in his first term. These are huge, huge, huge trading partners, not just sources of imports, but huge buyers of U.S. goods. So continuing that USMCA carve-out, Trump's aides always say he hates the word exemption. I bet you they're not trying to use that word around him when it comes to USMCA. But using that carve-out, or whatever you want to call it, extending that really narrows and constrains the impact of his tariffs on Mexico and Canada, his threatened ones at least. But when I mentioned countries that had not yet retaliated, Mexico and Canada are among those. And I think that if Trump is unable to reach a deal and does ratchet up some of those tariffs on those, even in a constrained way, those countries will face questions internally about whether they should respond or not.
Mexico, Canada, the European Union, Brazil. We did it all with Josh Wingrove. We went around the world with Josh Wingrove. He's Bloomberg News senior White House correspondent, joining us from our Washington, D.C. bureau. Thanks, Josh. Coming up, it's a new record today for Fastenal after the company reported earnings. We got the CEO next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ at a record. The S&P 500 index holding close to a record right now. The Dow, the S&P, NASDAQ all trading higher. S&P up 10 to 6270. That is a gain of 0.2%. The Dow up 59, up 0.1%. NASDAQ, as I mentioned, at a record right now at 20,653, up by about 0.3%. Traders sending stocks higher after parsing President Trump's latest tariff remarks. The 10-year ahead of bank earnings 4.42%, the 2-year 3.89%. Gold down $5 the ounce at $33.50, drop there of 0.1%. A retreat for crude oil. West Texas Intermediate crude down 2%, $67.09 a barrel. But Bitcoin, big story there, was trading above $120,000 right now, very close to that level, up by about 0.7%. Best Buy shares lower, down now by 2.2% after earnings, or actually after a downgrade. Best Buy downgraded to neutral at Piper Jaffray, which cites a lack of catalysts and competition. Bank earnings bright and early tomorrow morning. We'll be hearing from JP Morgan Chase, Citigroup, and Wells Fargo. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Fastenal shares rising as much as 6.4% earlier in the session. They're up right now 3.4%. It's a new all-time high for the company after they reported net sales for the second quarter that came in line with estimates from analysts, up 8.6% over the same period last year. This is a $52 billion market cap company. They distribute construction and industrial supplies, think nuts, bolts, screws, anchors, rivets, and other fasteners, as well as industrial, janitorial, and safety supplies, cutting tools as well. The company sells to builders, manufacturers, governments, and more. So really, it's a great read on the entire industrial and manufacturing economy, specifically here in the U.S. We've got with us the CEO of Fastenal, Daniel Florness. He joins us from Winona, Minnesota. Dan, welcome to Bloomberg Business Week Daily. Shares up today. Shares up more than 25% so far this year. New all-time high. In the earnings release, though, you said that, quote, the market conditions remain sluggish. What conditions specifically?
You know, we sell to a wide range of customers and industries, as you mentioned, across North America and in 26 countries in total, but mostly in North America. Our customer base has been relatively subdued for the last several years. In the fall of 2022, we saw some indicators saying it was going to slide, and we felt that as we moved into the second and third quarters of 2023. And it's been really weak since then. About 30% of our business is very production-centered business within manufacturing.
So are there any signs that that part of the business is improving, that those customers are seeing sentiment improve? Are you hearing anything from them?
I think the biggest sign that we're seeing is the knife has stopped dropping. You know, we were trying to catch that falling knife for a 2-year period. When I talk to our district and regional leadership throughout the world, the feedback I hear is, you know, they're not talking about this $200,000 a month customer whose business is off 60, 70%. You have a much more stability. Now, it might be stable at a lower level than it would have been 2 years ago, but it's much more stable, and so it allows our inherent growth to shine through.
So we've really been in this prolonged downturn, especially in the industrial economy. Are you seeing any particular green shoots or signs of inflection? And if so, which markets are you most optimistic about?
Yeah, so we're seeing some green shoots. For us, we are seeing some impact in energy. However, I would say that's probably more us taking market share than it is a lift in the tide. About 25% of our business is outside of the industrial, and within there, we're doing quite well. I hear a lot of commentary from our folks with data center builds, with even warehousing customers, and we've made really good inroads over the last 3 years into the government sector, and that primarily was an offshoot of COVID. During COVID, when supply chains blew apart, we stepped in to serve a lot of that market when they were not being served. And those folks have remembered that, and we've grown our business there.
So we need to, of course, talk about tariffs. How have tariffs really changed your thinking about product sourcing, particularly for fasteners, which we know, of course, are primarily sourced in China, Asia? What other options are you evaluating to mitigate the tariff impact here?
So back in 2018, we did some short-term moves of our supply chain, but it was fairly limited because you just can't change. There's so much QC involved with vetting out suppliers that you couldn't move it fast enough. What we had done quietly over the last 5-6 years is continue in that progress, because the tariffs that were put in place in 2018 were sticking, and we expected more of it to happen, and we wanted to better diversify the supply chain for our customer. We did look at a lot of options. There aren't a lot of options within North America. We looked at some options of doing some manufacturing ourselves. The problem is the economics still didn't work. So it was really for us more about diversifying supplier base in general.
Are the economics of that going to work now in this new tariff regime? I think during the first Trump administration, the goal was to move things out of China. But as many companies are learning right now, it doesn't matter if it's China, Vietnam, or India. If it's not in the United States, there is going to be a tariff on it. At least that's what it seems like is going to be the case.
Yeah, the economics still do not work. And part of the challenge there isn't just the economics, it's the amount of time. When we were researching it very in depth 2.5 years ago, one of the challenges is it's easy to find a site. It's relatively easy to get a building up and get a supply chain set up. When I say relatively easy, I mean time frame of what it takes to do it. The most challenging aspect was the production equipment, of how many months it would take to get that. And so that aspect really pushed us to look more at geographic dispersion of supply chain sourcing, because the economics are still very challenging.
So how much of what you sell right now is actually made in the U.S.?
If I look across what we're sourcing, what our branded suppliers are sourcing, we've always estimated less than 50% is coming from the U.S.
And is that going to stay stable in this new tariff regime?
I suspect it will.
Okay.
So I know Fastenal raised prices back in April, especially as a result of tariffs. Historically, I mean, the company has been able to pass on pricing costs. What's really been the feedback here from customers? Has there been much pushback in terms of the ability and appetite for customers, frankly, to take on additional pricing, especially as we head into the second half of the year?
First off, we sell into a very competitive market. There is always pushback. The real challenge in the equation is communication. And one thing that helps in our supply chain, we're directly sourcing from the manufacturer that's producing the product, more so than most of our competitors in the marketplace, just because of our scale. And so we have the ability to see into the future farther than a lot of our competitors. And it puts us in a position to communicate very well. It puts us in a position to take steps as the inventory is turning. The one unfortunate part of that, it also can create fatigue for your customer. And I would say our customer is at the fatigue point right now, of where it's become challenging, but it always is. And it's all about communication and trust.
We're speaking with Fastenal CEO Dan Florness. The company reported earnings earlier. Shares are higher, reached a new record today. Shares up right now by about 3.7%. I want to talk a little bit about the One Big Beautiful Bill Act that became law on the 4th of July this year. In the press release for your earnings, you did mention it, but big picture, what does it mean for your customers and for your business?
Big picture, what it means for our customers is, if you look at some of the depreciation rules and the timing, it makes it very advantageous to make capital investment. And so that's the biggest piece that we see impacting our customers, because our customers have, especially on the manufacturing side, an incredible amount of infrastructure that they're investing in. And so anything that allows them to depreciate faster and to improve their return profile is advantageous for our marketplace. And that's a key element that we talked about in the release.
I know that you talked a little bit about, to us, manufacturing your own products in the U.S. and your suppliers doing it, but I'm wondering about your customers and the way that these so-called America First policies might help them reshore manufacturing back to the U.S. Are you seeing any evidence or hearing discussion of your customers beginning to move manufacturing back to the U.S.?
You know, I would say it's fairly limited, but again, that's not something that happens in 6 months that you set up. We've had some customers set up assembly operations, which you can do in a much shorter time frame as opposed to pure production where you're manufacturing components yourself, or you're changing your supply chain to more domestic type supply. But what we've seen is a lot more willingness of making investment even beyond the manufacturing capacity in the short term.
Fastenal has refocused on growing with larger customers. What are the key drivers there, and what additional investments do you need to make to enable growth with those customers?
Yeah, so a position we've put ourselves in for a number of years is we have very aggressively made investments, and this was starting back 15 plus years ago, of slowly building an infrastructure to move the supply chain closer and closer to the point of use. And what that involved for us is investing in a tremendous amount of vending infrastructure, and in more recent years, a lot more RFID type infrastructure to measure product movement within a facility so that you don't have to with human capital, physically observe product being diminished. You can monitor it electronically and remotely. And so we've made extremely large investments over the last 10 plus years in vending technology. And I'm pleased to say that vending technology is all manufactured in the United States.
Yeah, I was surprised when I went to your website earlier today as I was preparing for this to see those vending machines. It's not something that I've run into certainly in my life, but it's pretty cool to see that.
Yeah,
not just soda.
It's a snack machine.
Yeah,
essentially.
That's what I was thinking. It's like it's a snack machine, but you can't eat what's in there. So.
Exactly.
Right? Okay. Hey, we just got about a minute left, and I just want to talk numbers real quick. Gross profit up 45.3%, up from 45.1% over the second quarter of last year. You said it was partially offset by higher import duty costs and higher fleet and transport costs. Are those costs, in your view, going to stabilize?
They're going to continue to rise because of the way our supply chain works. We carry a fair amount of inventory because we have such dispersion in our locations. So we carry quite a few months of inventory. So that's going to keep ratcheting up as we're on a FIFO basis inventory. So as that inventory continues to turn, that will continue to ratchet up a little bit as we move into the third and fourth quarters and into 2026. What really helped us during the quarter and what drove the improvement in our gross margin, set aside the tariffs for a second.
Right.
We put in place a faster expansion starting last summer to widen our inventory. And that's really what drove our margin this quarter.
Dan Florness, CEO of Fastenal. Really appreciate you joining us. Shares up today. New all-time highs, 3.8% right now.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ trading at a record. The S&P and the Dow both higher. S&P 500 index close to a record right now, 62.71, up by 11 points, up 0.2%. The Dow up 65, up 0.1%. NASDAQ up 68 now, up 0.3%. 10-year 4.42% with a 2-year 3.89%. Gold down $5 the ounce, $33.50. A drop there of 0.2%. And West Texas Intermediate crude down 2.2%, 67 even a barrel on WTI. Bitcoin, major story there, moving through $120,000 for the first time today. Right now, just below that number at 119,917 on Bitcoin, representing a gain right now of 0.7%. GM and LG Energy Solution plan to add more battery production lines at their joint venture plant in Tennessee to make lower cost cells starting in late 2027. The amount of the investment not disclosed. GM right now up by almost 0.3%. Recapping, Bitcoin right around $120,000. NASDAQ at a record. S&P up by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. Well, President Trump and his allies have seized upon a new way to criticize Fed Chair Jay Powell, his handling of an expensive renovation of the Federal Reserve's headquarters.
I think if Jerome Powell stepped down, it would be a great thing. I don't know that he's going to, but he should. Jerome Powell's been very bad for our country. We should have the lowest interest rate on earth, and we don't. He just refuses to do it, and yet he's spending $2.5 billion rebuilding the Fed.
That was President Trump just yesterday in Maryland. This construction project offers the clearest example yet of how Trump and those in his orbit are looking for every opportunity to scrutinize Jerome Powell's leadership at the central bank, even beyond his economic stewardship. Bloomberg News Federal Reserve reporter Amara Omokwe joins us now from our Washington, D.C. bureau. A $2.5 billion renovation, the topic of the renovation coming up when Jay Powell defended the renovations as necessary during his testimony to the Senate Banking Committee late last month.
Some of those are just flatly misleading. The idea of elevators, it's the same elevator. It's been there since the building was built. So that's a mischaracterization. And some of those are no longer in the plans. That's earlier. The plans have continued to evolve.
I do want to bring in Amara Omokwe. She's been writing about this. She's Bloomberg News Federal Reserve reporter. She joins us from Washington, D.C. $2.5 billion is what is at issue here. What exactly is the Federal Reserve renovation happening right now? And who started planning this? Like give us the details here.
Yeah, so the Fed is currently renovating 2 historic buildings here in Washington, D.C., and they've said those renovations are basically meant to consolidate all their operations in one place and really restore these 2 historic buildings that are very old and that the Fed says haven't been comprehensively restored in quite some time. And so that's kind of the Fed's rationale for these renovations. They were approved by the Fed's board several years ago. So this project is not a new project. The Trump administration scrutiny of it is new, but this project has been going on for quite a while. And so what we're seeing here is President Trump and those in his administration now taking issue with the overall price tag of the project, which has increased in recent years, and then also taking issue with what Fed Chair Jerome Powell said about some of the design features in the renovation when he was on the Hill last month talking about these renovations. And some of the administration officials are basically alleging that Powell was not truthful in that testimony, and that seems to be what they're using to kind of lay the groundwork to say that perhaps President Trump has cause to remove Chair Powell from his position on the Fed's Board of Governors, because of course to remove someone from the Fed's Board of Governors, you have to meet a very high legal standard, which is cause, something like malfeasance or neglect of duty. And so some administration officials seem to be trying to use this renovation issue to try and establish that cause.
Amara, as you mentioned, this is not new. This renovation has been going on for quite some time now, but is this the first time that the magnitude of the renovation is really being questioned?
Yeah, I would say so. And what kind of set this off was media reports about some of the features in the renovation. Basically, there was a media report that sort of characterized some of the features in the renovation as very lavish, very extravagant. And so that led to Republican senators, when Chair Powell was on the Hill last month, that led them to sort of question him over why there are some of these features, why the costs for the project have increased over the years. And so that is what kind of sort of brought this issue into the forefront recently. And then we've really seen the administration kind of seize upon it and use it as part of their overall sort of criticism of Chair Powell's stewardship of the Fed, both, you know, when they're talking about his interest rate, his stance on interest rates, and then also when they're talking about how he has managed this construction project.
What are observers of the Federal Reserve saying about this, and to what extent this could be, you know, this is not part of the Fed's dual mandate by any means, right? Stable prices, maximum employment. The Fed chair has laser focused on that mandate that comes from Congress. He tells us that when we hear from him every few weeks. What are observers saying about this sort of, I'm not going to call it a sideshow because that's, you know, that's editorializing a little bit, but it's not core to the Fed's mission by any means, and it's very political.
It is very political, and I think what Fed observers are saying is that this is just a part of this pressure campaign that President Trump and many in his administration are putting on Chair Powell and Fed policymakers to lower interest rates. Like, Fed observers don't see these things as separate issues. They see it as part of the same pressure campaign. And it also really matters because, of course, we know that Chair Powell's term is up next year, next May, and the search, President Trump's search for the next Fed chair, is also on. And so it really does raise questions about what that search will look like and who President Trump will ultimately pick. Is he going to pick someone who is going to be more receptive to his views and the pressure that he puts on them when it comes to monetary policy and some of these other issues about the institutional management of the Fed? And so I think even beyond Chair Powell, it really does raise these questions about what the Fed looks like when the next chair takes over.
Mm-hmm. Amara, in regards to this renovation, what can really be done at this point? I mean, the builders are building. This has been going on for some time. Does the president then have the authority to come in and just cancel the entire thing, scale it back? How does that look?
I mean, I think the Fed has said that a lot of different input went into getting approved for this project, including the National Capital Planning Commission. Like, there are a lot of different bodies that sort of weighed in on this project, and I don't think it's within the president's purview to sort of stop the project. Like, in the law, the Fed has authority over its own buildings because the Fed in so many ways is an independent agency. But I think what the administration and what President Trump are really trying to do, they're trying to sort of question the optics around this, right? Bill Pulte, one of the administration officials who has really focused in on this renovation, will say things like, you know, Jerome Powell is keeping interest rates high and making affordability difficult for Americans while he builds himself a $2.5 billion palace, right? Essentially, I'm paraphrasing, but that's essentially like some of the lines of criticism. And so what you really see administration officials doing is really calling into question the credibility of Chair Powell. And again, you can't separate those efforts from the efforts that the administration is putting forward to try and make the Fed follow their lead on interest rates.
Amara, what happens to the Federal Reserve if Fed Chair Powell is forced out in some way? There's a Deutsche Bank analyst who essentially says that we could see a drop of at least 3 to 4% in the trade-weighted dollar. This is George Saravelos of Deutsche Bank. There would be 30 to 40 basis point sell-off in fixed income. He essentially argues that all this is underpriced.
Yeah, I mean, I think any economist you talk to, any investor who you talk to will say, look, if Fed Chair Jerome Powell is pushed out, or if there's any sort of inkling that the Fed is bowing to President Trump's pressure and any questions start to arise about whether the Fed is continuing its independence, like that is not good for the economy, one, and then that is not good for sort of the Buy America trade, right? We could see pressure on the dollar, we could see pressure on treasuries. And so, to be clear, President Trump has continued to say that he's not going to fire Chair Powell, but I think these sorts of questions, again, sort of raise the stakes when it comes to what's going to happen with Chair Powell's replacement, because any feeling that the Fed's independence is being compromised or that we have a person who's more likely to listen to Trump could be bad for sort of the Buy America trade.
Amara Omokwe, Bloomberg News Federal Reserve reporter, joining us from Washington, D.C. Up next, stocks on the move. This is Bloomberg Business Week Daily.
You're listening to Bloomberg Business Week Daily with Carol Massar.
That's Nora Melinda. She is in for Carol Massar. We're seeing stocks higher across the board today. The S&P 500 up 0.2%. The NASDAQ Composite up 0.4%. The Dow up close to 0.2% as we speak. Nora, we went into today's session. I think investors were really concerned about trade tension, especially given what happened over the weekend with the president mentioning a 30% tariff on goods coming from the European Union. But he did say he was open to talking a little earlier, and that seemed to quell at least some near-term investor concerns.
Yeah, clearly. And we're seeing that reflected in the trade today as we're seeing all these indexes rallying higher. It's interesting as we're getting all these headlines, all these things coming in the mix. It seems as though the market is still buying.
We got a big week of earnings. We're going to hear from some of the big banks this week. We're also going to hear from some of the airlines this week. So plus inflation data that's happening as well.
Lots to cover.
Lots to cover. I'm Tim Stanovic along with Nora Melinda. Let's take a look at some stocks on the move today. With us is Bloomberg News cross-asset reporter Emily Grafeo. It's Monday, Emily, but you're thinking about
the weekend?
Drinks in the weekend? I don't know. What's going on here?
I mean, I guess, you know, it's
not too early for a drink.
Yeah. People can have beer and wine during the week.
People still do
Absolutely.
that?
Yeah,
They still do that?
people
Okay.
do that. Maybe not Gen Z as much.
Yeah.
Because Gen Z is very focused on wellness. And maybe that's what's reflected
Allegedly.
in Constellation Brands stock. The ticker is STZ. It's down about 4% today. Again, maybe it could be related to that declining demand from Gen Z. But we also got news on the Trump tariffs. So President Trump declared a 30% tariff rate for Mexico and the EU. There wasn't anything specific about alcohol, but these are key markets for drinks makers. So not only Constellation Brands is down, but we're also seeing Brown-Forman, Boston Beer, Molson Coors down. Constellation makes Modelo and Corona. And Citi noted that 100% of their beer profile is brewed in Mexico. Of course, this all hinges on, is that the tariff rate that will actually stick?
Yeah, and I'm looking at shares year to date, down 25% for this company. So it seems as though people are a little bit here on the stock here.
Right, and you hear a lot about like drinks makers and beverage companies trying to pivot away from alcohol. And I feel like every other day someone is introducing a non-alcoholic option.
Right.
I think it's a general cultural shift away from drinking a lot. That's weighing on these companies as well.
Yeah, low calorie options. People like an alternative these days.
Hey, speaking of a cultural shift, it seems to be that we're seeing a cultural shift when it comes to Wall Street and it comes to crypto, with Bitcoin reaching a new all-time high. I know you're watching a crypto company.
Yeah, this is a big milestone. Bitcoin topping 120K. It felt like just a year ago we were talking about how it was at like 60K. But I'm looking at Coinbase specifically because this is kind of a company that embodies that idea of digital asset DeFi becoming more mainstream. Coinbase, of course, is a crypto exchange. They're in the US. They joined the S&P 500 a couple months ago. And so that stock is higher today. We tend to see whenever there's like Bitcoin reaching a new high, Coinbase does well. And then also just watching the space for this week because the White House is calling this Crypto Week. There's going to be some bills that Congress is voting on this week that would clarify the structure of the crypto sector and regulations around it. So all around, it's like a very bullish day for crypto. And Coinbase, the ticker there is coin.
How fitting. You're also looking at Rocket Lab, right?
Yes. So Rocket Lab, ticker RKLB, is at a record high right now. It's up about 7%. Citi raised their price target on this stock. They said that the price target comes as they shift their valuation methodology to the company's revenue potential, which, if that sounds a bit boring, there's also some actually space related news in here. This is a rocket satellite company. They said they expect revenue to grow roughly $2.6 billion, driven by 20 Neutron launches per year, further satellite construction wins, particularly for U.S. government programs. So I don't know. I always think space is interesting, and certainly investors like to bet on it.
Yeah,
as well.
this is interesting. It's a $22 billion market cap as of now. It's tiny compared to in terms of launches, in terms of capabilities versus SpaceX. But Emily, it's always interesting to see what this company does.
Yeah.
In the wake of any tension that we see between President Trump and Elon Musk. And we've seen it move quite a bit over the last 6 weeks or so, as the president has threatened to pull SpaceX contracts. To what extent Rocket Lab could actually fulfill what SpaceX does, that it can't do that at this point. There aren't that many competitors. There aren't really, that can actually do that. But,
it's up 640%.
It's
over
insane.
the last 12 months.
It's insane looking at all these aerospace or these space stocks here. I'm looking at an ETF. It's ticker UFO, Procure Space ETF, up about 30% this year. But if you really dig into some of the names there, lots of activity to watch.
Imagine if SpaceX was a public company, how much higher that ETF would be. There are certainly some ETFs that hold, bits of it, but it's obviously private.
Bloomberg News cross-asset reporter Emily Grafeo. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcast. If you're sticking around on TV, The Close is up next. If you're going to join us on Bloomberg Radio, YouTube, or Bloomberg Originals, Emily Grafeo is sticking around. And so is Nora Melinda. That's next.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Christopher Cruz in Washington. President Trump is threatening to double tariffs on Russia's trading partners if Moscow doesn't agree to a ceasefire in Ukraine within 50 days. He spoke to reporters in the Oval Office.
I'm disappointed in President Putin because I thought we would have had a deal 2 months ago, but it doesn't seem to get there.
The president also announced the U.S. will be providing Patriot missiles to Ukraine. At the Pentagon, CBS's Charlie D'Agata says Russian President Vladimir Putin will likely respond to the threat by ratcheting up his attacks on Ukraine.
The mood music has changed in the past few weeks, and it shows a frustration. Now, whether you can strong-arm President Putin to the negotiating table, that hasn't been a tactic that has worked in the past. So I think we can expect an escalation in the next few weeks.
People in Fall River, Massachusetts are still processing the news that 9 residents of an assisted living facility died in a fire.
Firefighters arrived at the Gabriel house just before 10 last night and found a chaotic scene. Fire Chief Jeffrey Bacon.
We had an unspeakable tragedy here in Fall River last night. Our thoughts and prayers are with the families of the victims.
About 50 firefighters responded to the facility. The police department says officers carried out about a dozen residents who couldn't walk. Some of those who died were in the building, others at the hospital. Wendy Gillette, CBS News.
And we've just learned that the firefighters union is now saying that understaffing hampered rescue efforts and cost lives there. In Central Texas, volunteer searchers have been told to stop searching for many of the more than 160 people still missing in flash flooding because of today's threatening weather. CBS's Jason Allen is in Kerrville.
We had to move up from the banks of the river this morning where we were because the forecast is for it to come up another 6 feet or so. Officials here have started using the word recovery now for their efforts along the river, which means the eventual death toll from this storm could get close to 300 people.
A Kerr County commissioner said during a meeting this morning that he has received death threats. President Trump is threatening 2 of America's largest trading partners, the EU and Mexico, with 30% tariffs starting in August if they don't reach a deal with the U.S. CBS News Money Watch correspondent Kelly O'Grady says the tariffs could hurt American consumers.
Some of the products that you might see from the EU, right? Pharmaceuticals, cars, wine and spirits. Now, when you might see these price increases, think 3 to 6 months.
More than 20 states have now sued the Trump administration in an attempt to unfreeze billions of dollars in funding for after-school and summer programs. Less than an hour before the close of trading, the Dow is up fractionally. This is CBS News.
Hey Snooze, how you doing? Yeah, I think I just qualified this account with Lilu. I took some heat though. I took a little bit of heat, but the call ended up being right. Yeah. Yeah, my first trade was a loser. And then I waited for another rotation, took the same trade, and I went more contracts. And then I was up like $1,000. And then this last trade, I took some heat and it ended up coming back. I took the trade like right in here. And then it went against me and I fought it this whole way. And then I got out with enough to qualify. So, I mean, the trades were right. I just got in a little early. I gotta try and wait for that extra rotation. But I'm looking at Rhythmic. Rhythmic says I have $53,035. So they usually calculate it after commissions. So I should be okay.
And someone posted racist and anti-Semitic messages. Instead of its usual uplifting posts, the account shared offensive content, including a reference to the Jeffrey Epstein investigation. The posts were quickly deleted.
The directions are right. It's just taking the heat kind of sucks, but.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders
top one? What's top one?
People, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim.
I haven't heard of them.
Live on Bloomberg Radio, television, YouTube.
I just qualified the Lilu account. I'll have the funded account tomorrow, or I should.
We are just an hour away from the close of trading here.
See if I can keep it more in 3 days.
Today, the S&P 500 up 0.2%, the Nasdaq up 0.3%, the Dow up 0.2%.
Like what's?
I'm Tim Stenovec along with Nora Melinda.
Well, that's about average for an activation
A
fee.
little bit of optimism in the trade.
We are.
Yeah.
A little better than what we saw earlier today.
Like, what's their deal?
Like higher communication services.
Yeah, that's right. Yeah.
The best performing sectors right now in the
Yeah, that's top step. I mean, the one I'm paying tomorrow is going to be like 120.
Energy stocks not doing too hot.
Hey, speaking of stocks that are doing hot,
I mean, that's right.
YOLO chanting retail traders are demanding risky.
Like, is that for like a 50K or what is it?
And Elon Musk is turning to Tesla and SpaceX to fuel his AI ambitions.
Also, the Shark Tank.
Hey, is that Star Trek thing annoying as shit? Do you want me to take that down? I was just playing around with that for fun.
Right here on Bloomberg Business Week Daily. Before we get to those
25K
chanting retail traders,
like what do you got to make 2,500?
Charlie Pellet and the day's trade, the top business stories. Charlie's over it all. Hey, Charlie.
Thank you very much. And here's what's going on. We've got just about 54 minutes to go ahead of the closing bell. NASDAQ.
Oh, shit. That's nothing, dude.
Close to a record.
Like, how much drawdown do you get?
Solidly in the green right now. Traders
Same.
Sending stocks higher after parsing President Trump's latest tariff remarks. Right now, the S&P 500 index higher by 11 at 6270, a gain of
1K.
0.2%. NASDAQ up.
That's not a lot. You gotta be careful. You gonna stay on micros?
While the Dow is up 82, Dow Industrial is up by about 0.2%. The Mag 7 index up 0.1%. Your 10-year 4.42%.
You gonna try it today or tomorrow? Or you gonna try it?
Gold, retreating by 0.2%, 33.49.
Yeah. Well, the thing is you were good at making $50, $100 a day, and you could do that every single day.
Just about 2.1%. Bitcoin.
That's how you made it.
0.8%. Just above a record $120,000 on Bitcoin. So it is an update for the Dow, the S&P, and NASDAQ. As for the overall market outlook,
I think the short is finally here. I think the short's actually going to happen now. Well, I'm done for the day.
I've been saying all year the purple haze of fiscal policy uncertainty is really the only thing that
do they work on Rhythmic or is it a cloud-based one?
with August 1st.
Yeah, might be able to.
What the second half of the year is really going to look like. So I think we'll get a little bit more intel. Things haven't been quite
Oh shit, dude. What are you betting on tonight? You betting on basketball? Like women's basketball?
And you can hear more of the conversation
Or baseball?
with Amanda Agati of
Oh, okay, cool.
PNC on the Surveillance Podcast. Download it wherever you get your podcast.
WNBA, yeah.
Bank stocks higher.
I like
ahead
taking a
earnings
lot of
tomorrow
people for
morning
10
from
points and
JP
stuff,
Morgan
you know,
Chase,
stuff they
Citigroup,
should
and
do.
Wells Fargo.
But make it,
JP
like, you know,
Morgan up now
15
by
or 20
5
legs.
1%. Citigroup up by 7
And then I
tenths of
usually
1%.
put one wild
Wells
card in
Fargo
there
up
to
by
get the
9
odds, but
tenths of
good.
1%. And of course, count on Bloomberg for the first word on those bank earnings tomorrow morning. For
I haven't made a bet in a
on-demand
while,
news
though.
24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts.
I just got back
Pellet.
from
That
Vegas.
is a Bloomberg
I didn't even really
Business
gamble a
Flash.
lot in
Hey,
Vegas.
thanks for that update, Charlie Pellet. I'm going to set the scene.
3 people,
a little
10
bit
points,
here.
and 1 for
At a home
rebound.
office in Greenwich, Connecticut, you'll find an unorthodox 56-year-old money manager who oversees
Links are good.
$4.5 billion.
Who are the
to a
links
team
playing?
working entirely from home. We're talking about Matthew Tuttle, whom Emily Griffeo and Vildana
You
Hyrick
play
write
poker? Do you got
is
poker
one
rooms
of
where
the
you're at?
leading architects of leveraged
Yeah,
single
Snooze. Do you
stock
got poker where
ETFs.
you're at in Estonia?
Pick an ETF that provides twice the
Ah, they're
daily
gonna,
return
they'll
of
crush this
Michael
guy.
Saylor's
This
Bitcoin
guy's
holding
not very
company
good.
Strategy. Emily Griffeo and Vildana Hyrick are Bloomberg News cross-asset reporters. They join us here in the Bloomberg Interactive Brokers studio.
Thanks for having us.
Good to have you guys here.
Yeah,
Congratulations on this story. I know there was a bit of time.
I
in the
used to
making,
play a
so
lot
I'm
of
glad to have
poker
both
when I
of
was
you in the
younger,
studio.
but when my daughter
Vildana,
came
can you
along,
explain exactly how these things work? This is
I
kind of
couldn't
blowing
spend my
mind
time
here.
like that
Yeah,
anymore.
these are basically ETFs, so it's prepackaged for you. It's very easily
No.
accessible. It trades on an exchange, obviously.
Oh,
They
okay,
tend
yeah.
to be really cheap, although some of them
They've practically institutionalized gambling in the United States at this
They
point.
make these complex trades available to the retail masses, for example. So
Yeah.
they offer 2x.
Are they legal games or are they just like
MicroStrategy, for example, or Strategy as it's now known, or
Like,
any number of very
organized.
popular companies, Nvidia, Tesla.
You're a
but also you can
semi-farmer?
buy the inverse of
Boy,
those, so
what's
you
that
can do
mean?
2x
What's a
inverse
semi-farmer?
strategy. So, for instance, if you
Fuck,
bought
boy.
Tesla, you can buy minus 2x Tesla. So these are really booming.
So,
in
oh, rule.
popularity. They're
Okay, yeah.
garnering billions of
Yeah,
dollars.
I'm from a
it's one
place
way
that's
for
like
these,
that. Like Northern New York is like that.
ETF
Like
issuers to really
once you
stand
get
out
north of
in this
Albany, it is like
market, in this
backcountry
ETF
rule, man.
industry that
It's
that,
rule.
there's more than 4,000 ETFs. So one way for them to stand out.
I started
is
playing
with some
poker
of
since I
these
was
more
5, but
interesting
without
products.
money.
So, Emily, who are
OFC.
the issuers here? What kind
Online,
of
you
stocks
mean?
are they putting into these funds?
SM?
So, like Vildana said, the issuers are mainly
But
not
without money.
the asset managers that maybe you've heard
Oh
of.
shit, I gotta make a phone
So
call, guys.
it's
I'm a
not
little
gonna be
behind.
BlackRock,
All right, I'll talk
Vanguard,
to you in a
or
little
State
bit.
Street launching a single stock leveraged ETF, as we call them. Matthew Tuttle, he has his namesake ETF.
There's
firm,
no poker
Tuttle
rooms in
Capital
Chicago?
Management.
Don't they
He
have a
also
casino there
profiled,
now?
Sylvia Jablonski of Defiance ETFs and Will Rind of Granite Shares. So these are
Yeah.
ETF companies. They've been around for
Stay
like
off the
5 to
table
10
games.
years,
Only
but
play
they're still
poker. Don't play anywhere
relatively
else.
Newer and relatively smaller than the bigger players in the ETF
Don't drink.
space, but they're really crafting
All right, I'll be back.
this niche.
I got my
because
call.
They have products that it's almost like BlackRock is never going to launch, almost like from a reputational.
And if you
risk
go in the casino, my dad
BlackRock is
said
not
my
gonna
the
go
first
out
time I ever went in a casino, my father told me, you want to make sure your gas tank is full before you go in. So
one of these other startup
so make
issuers.
sure your car is full of gas before you walk in the doors.
For those products. So that's kind of where the startups come in. They are kind of filling that demand.
Right, and I know, Vildana, a minute ago, you just mentioned how popular this really is. So what's really propelled the growth of leverage ETFs specifically?
I think especially over the last couple of years, a lot of retail investors, as we know, have turned to trading, to daily trading, to managing their own portfolios. If you are a big believer in some of these names that tend to have a following, like Strategy, for example, Michael Saylor, he has a fan base. So it makes sense that that would be an ETF, a 2X Strategy ETF would be one of the more popular ones. Or even with Tesla, obviously we know Elon Musk has a big fan base. So for people who really want to double down, these might be attractive to them, although obviously it goes without saying even maybe that they are risky. So people are drawn to them. You're really supposed to only hold it for a day or a couple of days at most. And a lot of people do. They do hold it for just a couple of days, just because the way that they are composed, the way that they're made up, they reset on a daily basis, so you can have sort of like a drag it's called a volatility drag, but it sort of hits your performance. It can hit your performance a little bit to the point where you are maybe underperforming the underlying stock. It depends. It varies what the market's doing, what the underlying stocks are doing. But
yeah, it could get ugly quickly.
It can. If the underlying stock is down 20%, then what's a 2x going to do, for example? So
I didn't know there would be math.
There's a lot of math involved. Yeah.
This is a
Numbers to crunch.
No, we're not going to do a quiz. Emily, I want to talk to you about sort of the pushback that these are getting from the typical, quote, Wall Street guys. I mean, Bill Ackman had this tweet back in April. How have 3x leveraged ETFs and zero-day expiration options advanced society or contributed to our economy? Cliff Asness of AQR Capital Management, he tweeted out your story earlier today with some commentary. People don't love this.
Yeah, I mean, this goes beyond just single stock leveraged ETFs. A lot of these hedge funds have kind of pitched themselves as being able to offer a trade that you can only get if you invest in a hedge fund. ETFs, not only with single stock leverage ETFs, but also there are more and more ETFs known as buffer ETFs that kind of look like structured products, ETFs that invest in multiple asset classes all at once, are kind of starting to look more and more like what some may argue you could get in a hedge fund. So I think there is this general, we could call it maybe feeling of nervousness, that this is more and more looking like a trade that maybe is disrupting hedge fund investing. That's what I've heard before. I've written before about like pension funds, endowments. The Yukon Endowment famously shifted. They sold out of all their hedge funds and bought buffer ETFs. So there is this general nervousness, I would say, but that's not to say that the critiques aren't without some merit. As Vildana mentioned, these are risky products. Often they are marketed towards retail. And so not just the hedge fund people on Wall Street, but also regulators have raised some concerns about, okay, how are these marketed? Do retail investors really know how quickly you can lose your money? Are the names of the funds clear enough to kind of describe what you're actually getting into? So yeah, that's something that we looked into as well.
And let's not forget that some of these hedge fund managers are actually using some of these ETFs for their trades. So I think David Einhorn at the start of the year, it was revealed that he was I believe shorting one or multiple of the MicroStrategy levered ETFs. So a bunch of them are also utilizing them in their own trades and their own portfolios.
How difficult is it for startups to compete in the ETF world?
It's really difficult because, like we mentioned, there's more than 4,000 ETFs. You're not going to launch an S&P 500 ETF. There's so many of those options, and the established players for those index tracking funds, they're already doing really well. They've been around for a while, so you have to almost sort of find the so-called white space and see where you can fit yourself in. That's why we are seeing more innovative fund ideas coming about. And I mean, I think one of the takeaways of this story is that they are proving really popular with retail investors, and the issuers who are putting them out are issuers who are sort of running these really efficient operations, but they're gathering billions of dollars and they're seeing success with a lot of products. Not every product that these issuers put out is going to be a success, and not every has been a success, but you never know. The MicroStrategy levered funds, when they first came out, I think within a couple weeks or maybe 2 months, they gathered billions of dollars. So you almost never know, and it's almost worth a try in their eyes to give some of these ideas a try.
Well, check out this story. Vildana Hajric and Emily Grafeo co-wrote it. Spent a lot of time reporting it out. It's really worth checking out, and they got to go all the way to Connecticut and hang out in Greenwich.
Great state of Connecticut.
It wasn't too far.
It wasn't too far. Okay, good. It is Bloomberg Business Week. Check out their story on the Bloomberg Terminal and at Bloomberg.com. Coming up next, Elon Musk needs money to fuel his AI ambitions. Where he's turning. That's next.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got NASDAQ at a record, 39 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ all advancing. S&P up 7 right now, 62.67, up by about 0.1%. Traders sending stocks higher after parsing President Trump's latest tariff remarks. We've got the S&P close to a record. The Dow up 38, up by about 0.1%. NASDAQ up 57 for the NASDAQ Composite Index, up by about 0.3%. 10-year 4.42%. The 2-year 3.89%. Gold is down $6 the ounce, 33.49 on the precious metal, down 0.2%. West Texas Intermediate crude down 1.9%, 67.12 a barrel on WTI, and Bitcoin at a record at 119,756 on Bitcoin, was trading above $121,000. Federal Reserve Bank of Cleveland President Beth Hammack says she wants to see inflation lowered further before she would support a cut in interest rates.
I do think we're pretty close to where the neutral rate is. And so I see an economy that's resilient. I see one that's working really well. And I don't see a need to really reduce unless we see material weakening on the labor side.
Cleveland Fed President Beth Hammack speaking with Fox Business News. General Motors and LG Energy Solution plan to add more battery production lines at their joint venture plant in Tennessee to make lower cost cells beginning in late 2027. GM up by about 0.1%. And this headline from the Bloomberg Professional Service: the U.S. Supreme Court will let President Trump continue his Education Department purge. Recapping, stocks higher. S&P right now up by about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. Once again, repeating that headline that we just heard from Charlie Pellet. The Supreme Court has let the Trump administration, President Trump, continue its Education Department purge. For more details on that story, check it out on the Bloomberg Terminal and at Bloomberg.com. Let's talk about the world of Elon Inc. The money behind Elon Musk's trillion-dollar empire is increasingly flowing in one direction, and that's toward AI. Musk said on Sunday that he plans to hold a vote by Tesla shareholders on whether the company should invest in xAI, the cash-burning AI startup that he founded 2 years ago. It comes shortly after SpaceX, his mammoth rocket launch company, agreed to invest about $2 billion into the AI firm. This according to people familiar with the matter. Dana Hull and Ed Ludlow write about Elon turning to Tesla and SpaceX to fuel his AI ambitions. Dana Hull is Bloomberg News senior technology reporter. She's also contributor to the Elon Inc. podcast. You can catch new episodes of that every single week, wherever you get your podcasts. She joins us from our San Francisco bureau. Dana, Tesla is, I know it's not a car company because we're told it's not a car company. I heard you chuckle there. We're told it's not a car company. They do Optimus, they do the self-driving stuff. But listen, what moves the company's stock? How many cars they delivered? Do they have any business, according to the folks you talk to, making an investment in this money-losing AI company?
Yeah, so the money needs of xAI are enormous. I mean, billions of dollars are pouring into artificial intelligence. There's huge need for compute and data centers. And, you know, xAI is building out this big data center in Memphis called Colossus. And as we've seen so often with Elon Musk, you know, he doesn't, I mean, he runs 5 companies, but they're not really separate. They have overlapping investors, engineers, management, sometimes boards, and Musk, like, often, I don't want to say robs Peter to pay Paul, but like he will you know, commingle his companies in a way that is very unlike any other corporate CEO that we've seen. And I think in his mind, AI is the future. Tesla is also an AI company. If they can invest in xAI, they maybe get preferential access to Grok. We're already seeing that Tesla is now integrating Grok, the chatbot, into its cars. We know that Tesla has sold Megapacks to xAI for that Memphis data center. So they already are working together quite a bit. And I think, you know, a lot of investors, particularly the retail investors, see this as a way to get in on xAI. I mean, so there probably is a fair amount of shareholder support for this idea, at least from the retail side.
Yeah, and speaking of support, so of course Musk is planning to hold a vote by Tesla shareholders on whether or not the EV maker should invest in xAI. Does Elon usually let other people, including his shareholders and supporters, weigh in on his decision making?
Yeah, I mean, something like so Tesla is a publicly traded company, and so this would be a management proposal that would likely be spelled out in the proxy. We know that Tesla is having its shareholder meeting on November 6th. We have not seen a proxy yet, but this idea is something that Musk has floated for over a year now. I mean, I think he first polled people on X, like, should Tesla invest $5 billion in XAI like a year ago? And so it sounds like now it's likely to be in the proxy. So, I mean, because it is a publicly traded company, yeah, shareholders have to weigh in. It would be a sizable investment for Tesla.
I want to read a post that you linked to in the piece that you and Ed wrote. It's from Grok on X. First off, we deeply apologize for the horrific behavior that many experienced. We have removed that deprecated code and refactored the entire system to prevent further abuse. This was on Friday, Dana, and it was about the horrific behavior. It was referred to itself as Mecha Hitler, and it had posts that praised Adolf Hitler and appeared to call the Holocaust, quote, effective. This is the chatbot for XAI. Is this thing ready? Like if you're a Tesla investor, do you have pause about sending money from Tesla to a company that has made a mistake such as this in the AI race?
I know, right? That is a very good question. Well, I think like when you say Tesla investor, you know, there's sort of two camps of investors. There are institutional investors, a lot of index funds.
All right, guys, we're coming on 3:30.
Tesla obviously joined the S&P 500.
If you don't have your trade in already, I think we're just about done for the day.
Retail shareholder base that is wildly.
Unless you're going to play the MOC game. Which way are we going on MOC? We going higher to the highs or lower back to the VWAP?
If the future is not car sales, it's got to be something. And so I see that this is all
Market's
part
been
of Elon's
strong.
big plan to really position himself as a leader in AI. Remember that XAI was founded after OpenAI by his rival Sam Altman came out with ChatGPT, and so you're seeing Grok try to be a big player in this field. Yes, they have absolutely made mistakes. The whole Hitler thing from last week was horrible. I think it's notable that Grok apologized, or XAI apologized, and like they seem to be sorting it out. But yeah, I mean, the other question I have is like, do Tesla owners want Grok in their cars? I mean, I'm assuming there's a way to opt out or not enable that if you want. But I don't think that when people buy a Tesla, they necessarily signed up for Grok.
So Musk has, of course, really stepped away from that whole political sphere that he was in for a little while, but...
Except when he tweets.
I was going to say, is it fair to say that that's the case? He's trying to step away, we'll say.
I don't really buy that, to be honest. I mean, he had to step away from Doge because his time as a special government employee had like a limit. Like you can only serve X number of days per year as an SGE. And so like that came to an end, but he just can't help himself. Like if he feels strongly about something, like
you looking for a drop, SM?
So we saw him tweeting.
Yeah,
over
it's
the weekend
50-50 for me, but
files.
I think we're due for a drop.
And he is still talking about creating a third party. He has, for all intents and purposes, quote unquote, stepped away from Doge.
VWAP's long ways
think
down.
He still has ambitions to be a player
65,
in the midterms to potentially really start this third party. And he has poured so much money into American politics already. I don't see him going quietly into the night on that.
As
you
we
think
think
we're
about
gonna blow through the
XAI,
VWAP?
I mean, is there still a conversation about his
That'd be
head
pretty
being in
strong
too
if
many
we did.
places right now with too many business ventures?
I mean, that's an ongoing perennial criticism of Elon, that he's spread too thin, that he's distracted, that he's got too many things on his plate. But like, that's the way he's operated for years. I mean, he simultaneously ran Tesla and SpaceX for decades, and SpaceX is the most valuable company in the world right now, and Tesla still has a $1 trillion market cap. So I feel like a lot of long-term investors see past that, and they think that Elon is a genius who can hyper-focus where he needs to and when he needs to, and that criticism hasn't like really held up. Like he is able to execute when he's hyper-focused, and he hyper-focuses a lot, like every day.
How can we look to Tesla's acquisition of Solar City close to a decade ago as sort of a blueprint for a private investment or an investment in a private company such as XAI?
Well, it was the same kind of deal, right? Where Solar City was struggling and really needed a bailout. And so Tesla bought Solar City, which was rife with all of these conflicts of interests because Elon was the chair of the board, was the largest investor. So it was like, you know, some people forget, like Tesla acquired Solar City. I mean, Solar City was a company that Elon founded with his cousins. So this was, and you know, and now, I mean, Tesla still has a solar roof division somewhat, but it's the same thing. Like Tesla has money, XAI needs money. Tesla, you know, Elon's going to go to his board and say, we should invest. They're going to bring it to the shareholders. I'm sure there'll be a campaign around it. Like, I would imagine that it could pass, like, unless there's really strong institutional opposition. And, you know, the Solar City deal was rife with all these conflicts and it went to court, but like, ultimately Tesla prevailed and it ended up being okay for shareholders. I mean, they took a bath initially, but like the company has still achieved great heights.
Chief Investment Officer Nancy Tengler said that an investment into XAI will further dilute the declining EV business. Is this something that you're hearing from sources as well?
I mean, absolutely. Like Tesla, you know, Tesla used to be all about selling cars. The company used to say that it was going to make 20 million cars a year by 2030. They've completely abandoned that. You know, Elon now tweets things about how like,
hey, Henrik, how you doing?
Owning a horse, like the future is all about shared mobility.
How'd you do today?
Sharing and AI and Optimus, and you know we haven't heard anything about the Mexico plant in months. I mean, I think that plant is basically dead for all intents and purposes. So, yeah, I mean, you know, Tesla has got to find a way to make money, and if they can catch the AI wave and get a return on their investment in XAI, ultimately that's seen as a good thing.
Mm-hmm. In about 30 seconds or less, how's SpaceX doing in regards to...
That's all right, SM. Red Day.
The space race
Red Day and bank rejection.
SpaceX is the dominant launch provider in the
Well,
United States.
it's not the end of the world.
I mean, there's no other way to
We'll
get
have
to
another
the
day
nation's
tomorrow.
space station.
Do you put more resumes out, SM?
United States. So I think that they have Starlink. So I mean, even though they've had some setbacks.
Yeah, you never know. You know, the thing is you can't think about it too much because you don't know if there was another manager that had a kid who was applying for that role, and they got to interview a certain amount of people for everything because it's an HR thing. So you can't get your head wrapped up in that stuff. You just got to mass supply to everywhere, and then somebody, you know, somebody will like give you a chance. You know what I mean?
Dana Hull,
Yeah.
Bloomberg News senior technology reporter.
Yeah,
also
that's what you gotta do.
contributor
You
to the
gotta
Elon Age podcast. Catch
You should
new
be doing
episodes
5 to 10 a
of the
day
podcast
until you get something.
Meantime, back to this redhead that crossed the Bloomberg terminal just minutes ago.
You know, talk
US
to
Supreme
everyone.
Court let President Trump resume dismantling the Department of Education.
You never know where the weirdest
listing a lower
opportunities
court
will
order
come
that
from.
required the reinstatement of as many as 1,400 workers. Granting an emergency request from the administration over 3 dissents, the justices put on hold a federal district court ruling that said that Trump purge could leave the department unable to perform duties required under U.S. law.
Maybe later
This
tonight I'll
order
play
will
this
apply
game
while the case continues on
after I
appeal.
eat and stuff.
Stocks still in the green, but off their best levels of the day. When we come back, we're driving to the close. Mike Regan will be here. That's next on Business Week Daily.
I don't know how to. I've been paying people to do my code for the strategy. Oh, I think I funded the Lilu account, and so I got over 53,000. So hopefully, Rhythmic says I got 53 and 35. That's minus the commissions from today. So hopefully I'll have a funded account tomorrow, and we can see how many days I can go before we blow that up. No, I never made it to the payout. No, I sure didn't. It's okay anyway, because if they're not going to support NinjaTrader, I really don't want to be over there. Because long term, I want to be able to offer my strategy as a subscription. And if I'm with a prop firm that doesn't even use that platform, that's not really good. So it's okay, whatever. See if I can get this one. This one I got to go 10 days. I got to go 10 days at $200 profit per day. Well, it doesn't have to, you can have a loser day, but a total of 10 winning days at 200 profit or better. And then I can take, after I get to the 10 days, every Saturday I could take 1,200. And then after 4 or 5 payments, I can take more, something like that. But I'm just going to focus on getting to the 10 days. 10 days 10 days without blowing up the account. All right, 11 minutes to MOC. If you're going to play the MOC game, you better start getting your bets in.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks pushing higher. NASDAQ at a record. Let's head right over to the first word breaking news desk for today's afternoon call. Here she is, Jordan Fitzgerald.
Thanks, Charlie. The main U.S. averages are in the green after Trump says he's open to trade talks. The S&P cash is up 0.1% with the NASDAQ up 0.3%. Taking a look at the Dow, Boeing, Walmart, and 3M lead, with Chevron, Procter & Gamble, and UNH under pressure. The energy sector is slumping after Trump threatened 100% tariffs on Russia. In tech, Meta will invest tens of billions of dollars to build gigawatt-level data centers. And in New York City politics, Andrew Cuomo said he will be staying in the mayoral race. Wrapping things up, gold and oil are sliding, and bank earnings kick off tomorrow. My name is Jordan Fitzgerald from the First Word Breaking News Desk. All yours, Charlie.
All right. I thank you very much, Jordan. And for on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
The funky music will drive us till the dawn.
On Bloomberg Radio.
Well, look at that. 18 minutes to go until the close of trading. The Dow up more than 0.1%, as is the S&P 500. The NASDAQ up 0.2%. So we're off the best levels of the day, but also off the worst levels of the day. Let's bring in Mike Regan. He's Bloomberg News managing editor for equities in the U.S. and Canada. I don't think I've ever read that title before.
New title, yeah.
Congratulations.
Thank you. Thanks.
You know what? I'm still going to ask you about crypto.
Of course.
Let's start there, actually. I want to mix it up a little bit. I want to throw something at you because you've spent the last couple of years in the crypto trenches.
Yeah.
$120,000, Mike Regan. Why?
Can you believe it? Well,
I can't.
It is Crypto Week in Washington, D.C., of course. Congress looking at some sort of next bills that they want to get out the door this year, sort of put some regulations on the structure of the crypto market. So, a lot of optimism about that. It doesn't take a lot of news to sort of keep this optimism going in crypto world. Obviously, a very narrative driven market. So the fact that they're all talking about it this week in DC is enough to get you past that 120 level. I think it has come back down a little bit below that, but
I get off work at 5:30 Eastern. I'm gonna eat and stuff first, and then I'll probably download the game. So it'd be like later.
This new
It'll be like later. I'll get it set up, and then maybe tomorrow night I'll do it like at 4 o'clock or something. But I'll go live, but it'll be later by the time I get it downloaded and figure out how it works.
Yeah, well, I think
I had an Star Trek Fleet Command. They gave me an offer to advertise it. I was just playing around in my messages. So I thought I'm a sci-fi guy. I like Star Trek and Star Wars and Stargate and all that kind of stuff. So I thought that'd be cool. I'll try and learn how to do it by. I'll do their little advertisement thing or whatever they call it. What do they call it?
Why hasn't it gone up more?
Campaign. And stream elements,
but I think the
Star Trek Fleet Command campaign.
There are plenty of old school hodlers, as they
so
say, who have
I just clicked that I would do it on Friday, and then I got busy over the weekend, and I didn't really set it up right. But I got the chatbot working, and then the little image thing is showing up on the stream. I'm trying to, for some reason, the panel, like it won't download the picture into the panel. So I think I've got to,
because Nora Melinda is Bloomberg.
I've got to reduce the pixels or something.
Fitting. Well, when we're looking at the market,
so I can get the panel up and running, and then I think there's a couple other small things to do, and then I can download the game, and I'll stream the game while I'm playing it, like way later tonight. It'll be later tonight, and then maybe tomorrow. I'll do it after work tomorrow.
Not care about this news?
So that's
what's going
yeah.
on?
Do you see the thing in the? It's like half over the forecast block. They're reading the forecast.
Really haven't seen too much damage.
I didn't really expect anybody to sign up, but I thought I'd just try it because it looked cool.
Is not sort of super bright. In fact, Bloomberg Intelligence is estimating about 2.5% year-over-year growth in earnings for S&P 500 companies. Now, these companies have a long storied tradition of beating.
Bugging me.
So,
this panel thing.
You look at a
bugging
typical beat. You're probably talking about more like 5 or 6%. Earnings growth. So, in a way that kind of
because it gives you the image to download to put it in the panel.
The growth is expected to pick up a little bit in the second half of the year. Now, that said,
all right, if you want to,
term event risk really comes to
if you want to watch me play it first and see if you like it, I'll have it up and running by tomorrow night. Or maybe if it's slow during the day, I'll play a little bit.
Don't forget we have
if I don't have any leads,
which is CPI.
Yeah,
right.
And both the core CPI rate on both a
but don't spend your
to tick up a little bit to 0.3.
Don't spend your eval money on it or anything like that.
2.9 to me is pretty intriguing number because as long as you have a 2 handle, as they say on CPI, I think everyone can kind of sort of keep their calm. But should it surprise a little bit and you get to sort of a 3% year-over-year CPI, that core CPI, that is I think a bit of an eye popper and really as much as President Trump wants the Fed to cut rates and is really screaming
survival fountain of youth at the moment. Survival fountain of youth
for the Fed with inflation sort of going the wrong direction. So that combined with,
What's that
maybe
about?
the earnings don't surprise as much as they could. I do think, it's there's a lot of good news priced in, and I think the S&P 500 companies really need to deliver and outperform the expectations to keep this going.
You mentioned President Trump, of course, is really anxious. He really wants rates to be brought down. He's made that abundantly clear. But when we look at the market, we spent a lot of time talking about the Fed, but it feels as though now everyone's focused on tariffs. Do you feel like this is a market that cares as much about these Fed meetings, or do you think it's, we're focused more so on the impact of tariffs right now?
I think it's a little of both. Obviously they sort of play off of each other. If the tariffs are going to keep that inflation sticky, then that's going to push out the possibility for a rate cut further down the line. And but right now, we are sort of front and center on tariffs again. I mean, I think the market has come to grips with the fact that
something went wrong. Please try again.
Trump,
it won't let me download the image.
Whether you call it the taco trade or just consider it a negotiating tactic, maybe a more polite way to say it, that nothing he says about tariffs is written in ink.
You start on a beach stranded.
Something to be erased and rewritten.
Oh, it's survival.
Okay,
cool.
To Truth Social.
Yeah, right.
As we saw last week.
Was it like a shipwreck and you land on the beach?
Yeah, I think these comments today.
And you make a fire, and you got to make
a very light green, I guess I would call it.
You got to make somewhere to stay, and then you got to start hunting.
And I think
fishing.
People did take some solace from these remarks that he is willing to negotiate. I think Europe's the big focus now.
Yeah.
How they react and the interplay between Trump and Europe, I think is a main sort of source of concern right now. But
that's cool.
The market is pretty comfortable with the idea that these worst case scenario tariffs.
I was reading about the Star Trek game. I guess you you try and build your fleet
today.
So you do things to make your fleet bigger, and you recruit
in the S&P 500
people.
to report. We're going to hear from JP Morgan Chase tomorrow. We'll also hear from Wells Fargo this week, Citi, BlackRock, BNY Mellon. Wednesday will be Bank of America, Morgan Stanley, M&T Bank. Thursday we'll get Netflix, Pepsi, GE Aerospace, Schwab on Friday. I mean, I could keep going on. It's a big week.
Yeah.
The point is it's a big week, Mike. 3 months ago, we'd be sitting here talking about, what are they going to say about tariffs? What are they going to say about tariffs?
Yeah.
I got to make sure I download it to my
Turns
trading
out
computer,
that wasn't a big issue.
Yeah.
And for these companies, and any of the companies that we heard from, the investors have really not seen. We haven't seen the worst fear materialize.
Right.
Folks are saying, okay, just wait until August, wait until September after these tariffs kick in and after the inventory is kind of gone through here in the U.S. Is that fair to say, or is the
hey MOC? What are we doing?
I wouldn't call it a nothing burger. I would say it's an uncooked burger at this point. We don't know how big it's going to be till we flip it off the grill. I mean, I think, obviously the banks being first, not a huge direct impact from tariffs on them. They're sort of set up to report a really, really strong quarter for the banks that have big trading and market making arms because of all that volatility, both in the fixed income and the stock market. After the Liberation Day, quote unquote, in April, just great for a bank's trading books. And it's, oddly, the deal making is picked up at the same time too, in the back half of the quarter, especially. IPOs and M&As are back. So both of those engines in the sort of capital markets parts of the banks are going to be firing pretty well. I think what a lot of people will be scrutinizing closely with the banks is, are there signs of tariff problems that we haven't quite picked up on yet? Are there sort of credit issues bubbling up among corporate customers or consumers? Are they bracing for even more problems? Are they putting aside more money for loan losses, that type of thing? So that'll certainly be a big point of focus in this early batch of bank earnings. And then the rest, I think, the margins is the big question. How much has the tariff pain not really surfaced because companies are sort of eating the cost of them to some extent on their margins. So we are expected to see a drop in margins. I think to Bloomberg Intelligence has it. I think it's like the lowest margins expected in about a year. So a little downside surprise on margins, I think, would also a bit of an event risk out there for people to absorb.
Mike Regan, Bloomberg News, a managing editor for equities in the U.S. and
I got
Canada.
like
Still
11
dabbles
games.
a little bit when it comes to crypto. So, Mike, thanks for joining us. Do appreciate it. Switching gears, back to a headline that crossed just a half hour ago. A divided U.S. Supreme Court let President Donald Trump resume dismantling the Department of Education. It lifts a lower court order that required the reinstatement of as many as 1,400 workers. Greg Storr is a Bloomberg News Supreme Court reporter. He joins us from Washington, D.C. He's got the byline on the story as well. Greg, they granted an emergency request from the administration. The justices put on hold a federal district court ruling that said the Trump purge would leave the department unable to perform duties required under U.S. law. The Supreme Court order, though, will apply while the case continues on appeal. I'm reading right from your story here because the ink is essentially still wet on this one. Does this mean that the Trump administration can purge other agencies as well?
Not necessarily, but it certainly helps them, at least their legal.
There's a lot to this.
As you said, the big
stream
argument
elements
against the administration was, hey, you don't have the authority to do this. Only Congress does. And you're by firing this many people, you're leaving the department unable to do things
Loyalty
that Congress
settings,
said it's supposed to do. And that's an argument that has been cropping up in other cases, and will, this decision will probably, boost the administration on those actions.
So I'm also wondering about what this means just for the Department of Education and what it means for those workers. There's a lot of workers who've been left in limbo. Is that exactly what happens to these workers? They're sort of waiting?
Well, they're sort of waiting, but they will be, allowed to be put out of a job for the at least.
You just got to play with it a little bit every day, I think, and you figure it all out. That's what I did.
I don't
with
know the
Twitch
answer to
as a
that.
whole.
I apologize.
That's okay.
I don't want to speak without knowledge here. But given the way the court has been handling these things, this is supposed to just be a temporary order, but. The cases where the Supreme Court has issued a temporary order and then later on reversed itself once it actually took up the legal issues on the merits, that's a pretty rare occurrence. So this certainly puts the win.
All right, that's about it. 6 more minutes to the close.
In terms of actually being able to.
When are we going to finally get our drop? Are we just going to keep grinding up for the next 4 years?
Correct me if I'm wrong, Greg, but this is the world that you live in. Isn't this a time where the justices are not doing this stuff? They're like out from June or early July all the way until October?
It depends on what you mean by this stuff. This is part of the so-called shadow docket or emergency docket. It is the administration coming to the Supreme Court, and this is actually a fairly old request filed a number of weeks ago. And the administration is saying, "Hey, we can't wait. We need you to lift this lower court ruling, to stay this lower court ruling, to set the rules of the road while the case is being litigated." And that's the sort of thing that the Supreme Court will act on at any time. It doesn't just, do that in its 9-month calendar for the cases that are considered on the merits.
When it comes to this case, the 3 liberals on the court dissented. What was their message?
Yeah, really, really strong words from Justice Sonia Sotomayor, who wrote the opinion for the 3 of them. She said that the court had handed the executive the power to repeal statutes by firing all those necessary to carry them out. And this is a theme we've been hearing from the court's liberals. They're saying that the conservative majority on this court is letting the president ignore the law, just do whatever he wants.
What do we expect to hear from the Supreme Court when it comes to this so-called shadow docket before October or in the meantime?
We're going to have more of these cases. Right now, there's one other significant one involving another one of these cases where the president is trying to remove the heads of these independent agencies. It was one involving the Consumer Product Safety Commission. He's trying to fire the Democratic appointed members there. We'll probably get more cases. Really good chance we'll get birthright citizenship again in some form. Not inconceivable we'll get tariffs in some form. They're not there yet, but there's so much lower court litigation going on that undoubtedly there will be more very big cases at the Supreme Court this summer.
And they really seem, because of not just because of the makeup, but it really seems like the president is having a series of wins when it comes to the shadow docket.
Yeah, he's very much been on a roll. We saw a couple cases earlier on involving very fast deportations under this couple century old law known as the Alien Enemies Act. That's the cases where the administration was sending people to the prison in El Salvador, and the Supreme Court said, whoa, hold on, you at least have to give them a chance to make their case for why they can't be sent there. Beyond that, however, they've pretty much given the administration a free hand, whether it be other immigration-related matters or, in this case, the structure of the government and firing people, both mass firings like this one and firing top officials of agencies.
Hey, Greg Stohr, thanks for joining us. I know you just wrote this story. You have been super busy, so we really appreciate it this afternoon. That's Greg Stohr. He's a Bloomberg News Supreme Court reporter. Check out his reporting and the entire team's reporting. It's on the Bloomberg terminal and at Bloomberg.com. Just a couple of minutes away from the close of trading, the S&P 500, in the words of Mike Regan, light green, up 0.1%. The NASDAQ, up 0.2%, as is the Dow. This is Bloomberg Business Week Daily. The closing bell starts now.
Breakdown of all of today's market action and a look ahead to tomorrow with our global simulcast right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu, taking you through to the closing bell with a global simulcast. It starts now. Tim Stenovec joining us from the radio booth. Nora Melinda in today for Carol Massar. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube, Tim Stenovec. Green across the screen for most of the major indices, but of course, we have two big catalysts coming up on the calendar within the next 24 hours.
I think you would be referring to CPI and then the kickoff of big bank earnings tomorrow. Is that right?
That is correct.
Okay.
Sir.
Looks like we're reading the same stuff, Romaine Bostick.
Yeah.
That's always good news when we're on the same page. Hey, there's also the trade element here, and I think that's what people thought and certainly kind of did dominate today's trade, even though we didn't see a big variation between gains and losses. The comments about President Trump kind of saying, okay, maybe not 30% for Europe, we're open to negotiating, given what happened over the weekend, might have given a little bit of a relief to investors out there today.
I mean, definitely some relief that we are seeing here with all indexes ending in the green. As we were saying earlier, if you went to sleep on New Year's Day and you woke up today, lots happened in between. But if you look at the S&P 500, not much has changed.
Yeah, I go to Tim's point about, the trade tariffs and the threatened tariffs not showing up in the price action, but showing up in activity, because volume is certainly down compared to the 30-day average.
Yeah, and we should point out, of course, I think the earnings picture is really going to be one that drives this market, not so much for the second quarter results, but obviously the commentary that a lot of CEOs and CFOs were unwilling to give the last go round. This time around, they might not have as much coverage. Green across the screen here on this Monday afternoon for most of the major indices. The Dow Jones Industrial Average looking like it's going to close out the day higher by more than 80 points, or about 0.2%. The S&P up just about 10 points on the day. We'll call it about 0.1% as we wait for these numbers to settle. The NASDAQ Composite adding about 0.3%, and the Russell 2000, that's your outperformer on the day, again, up 15 points, or about 0.7%.
All right, taking a look at how things split up in terms of gainers and decliners today. We did see more stocks move higher in the S&P, 286 to the upside, Scarlett 213 to the downside.
And that's reflected in the IMAP as well. So take a look at the 11 sectors in the S&P 500. That big red slice that you see there is tech, but it's only down by 0.2%. The leading decliners here are energy stocks as oil prices sink, and material stocks also lower by 0.4%. Best performers, communication services, financials before the banks report earnings tomorrow, and real estate investment trust.
All right, on the gainers side, a new all-time high for Fastenal. The company reported earnings earlier today. Shares 4% higher at the close. The company reported net sales for the second quarter that were up 8.6% over the same period last year. It did meet the average analyst estimate. We had Dan Florness on the show, the company's CEO. He said that his industrial customers are starting to see business turn around. Here's what he said, quote, "The knife has stopped dropping." What he was referring to is the trying to catch a falling knife over the last few years that really in the U.S. has been industrial production. I did ask him, and Nora asked him too, about the impact of tariffs. And he said they tried to move their supply chain back in 2018 during this first round, and they were able to make some changes, not necessarily bringing anything back to the U.S., just not possible right now. Too early to say for his customers, though, whether this new tariff regime will prompt them to move manufacturing back to the U.S.
It's just a reminder of how long it takes to actually move your supply chain back to the U.S. If they were talking about this back in 2017 and weren't able to get very far.
Yeah, I mean, do you remember the move back in 2017 and 2018 was to move everything out of China and like go to Vietnam or Indonesia or India? Well, now it kind of doesn't matter where you are if you're not in the United States, because all of those countries are getting tariffed as well. Hey, did any of you guys see Superman over the weekend?
No. Was it good?
I didn't see it either. A lot of people did see it,
We
though.
look at you when we see Superman.
I was going to say.
Wow. Oh, you guys are the best. Warner Brothers Discovery shares up more than 2%. This after the company did say that they brought in at least $115 million domestically. It did take in $220 million worldwide. This according to a statement from Warner Brothers. Excuse me, $125 million in ticket sales in the U.S. So that did beat expectations of $115 million. This is just the opening chapter in a 10-year plan to interweave movies and TV shows based on DC comic book characters such as Batman and Wonder Woman. Haven't they done this before?
Yeah.
Okay. All right. I'm just
They've done this. And so, I mean, I don't know. Do you think DC is going to get it right this time? I mean, everyone's saying, okay, you had a decent box office domestically, though don't look at the international numbers, Tim. It was not as good. But this idea that maybe they could finally build off this and actually truly build up something that's comparable to the Marvel universe?
Look, I don't know what it takes to have a successful franchise. No
I don't
question.
either, but I like your opinion.
But we can look and see what the Marvel universe has done, right?
The peanut gallery speaks.
Yeah, exactly. I think James Gunn knows a little more than we do when it comes to what makes a successful movie. And finally, I do want to talk about shares of Kenvue real quick. They finished the day higher today by more than 2%. It's the company behind Tylenol, Neutrogena, Listerine, formerly the consumer healthcare division of J&J. The company said that CEO Thibaut Mongon is going to leave the company as it continues to revamp. The board director, Kirk Perry, will take over as interim CEO effective immediately. They faced push from activist investors for changes on how the company is structured and run ever since it was spun off from J&J just a couple of years ago. Once again, Kenvue shares up by more than 2.2%, Nora.
Well, a couple decliners that I'm keeping an eye on right now. We had Waters, that is a life sciences company, about $18 billion in market cap. It fell for double-digit losses when we ended at the close today after saying that it'll merge with Becton Dickinson's biosciences and diagnostic solutions business in a reverse Morris Trust transaction. That's valued at about $17.5 billion. We had Jefferies analysts saying that they expect the stock to trade down due to the deal size and variables added to a clean replacement cycle story. But if you look at the stock on a year-to-date basis, down about 18%. I know it's Monday, but I did want to talk about an alcohol company. I'm looking at Constellation Brands, and we're seeing shares that also fell at the close today after President Trump declared a 30% tariff for Mexico and the EU, which of course we know these are key markets for those drink makers. So tariffs are really the story here. But this is a $28 billion company. They own Modelo, Corona, a lot of the names that we know here. But shares are down about 26% this year. So not great news here for the brand. Maybe people are going to healthier alternatives. We'll see.
I like the fact you picked an alcohol company because you really, truly are filling Carol Masters.
Have to live up to it the best I can. Also, Fluence Energy, that's an energy this is an energy company, and we saw energy is the worst performing sector in the S&P 500 today, and this was one of the names that was in the red. Mizuho cut the stock to neutral from outperform. They're also pointing toward this tariff impact, and additionally, the Republican tax and spending bills effects on the clean energy sector. The company is about $1.4 billion in market cap, but I'm looking at the year-to-date as well, down 50%. Not looking good.
All right, let's get a quick check on yields. Continue to see a steepening of the curve. Treasuries overall falling for a third straight day. That's pushing yields higher. But two interesting dynamics are playing out. One is obviously that you're seeing much greater moves in yields on the longer end of the curve to the upside. But on the short end of the curve, take a look at that. A 1 basis point move, 1.5 if you want to be particular, on that 2-year yield. And that has been the narrow range that we've actually seen on the shorter end of the curve now for quite some time. In fact, the past 3 sessions, we basically had 1 basis point point, 1 basis point, and then 3 basis points. And then if you keep going out, it really doesn't get much wider than that. And I think it is kind of telling, Tim and Nora, this idea that maybe you have a market, at least in the Treasury market, with a lot of folks right now on the sidelines.
Okay, well, we'll see what happens when it comes to CPI. We'll see what happens when it comes to the big banks reporting earnings. In the meantime, I want to talk a little bit about return to office. Yeah, we're still talking about that. It's back in the news this week because Starbucks employees who work at corporate headquarters are apparently going to be required to come in 4 days a week. This is a focus, excuse me?
Which 4?
I don't know.
Maybe they get to select the day that they stay home.
Well, I know that there are some places where they're like, okay, everybody has to come in at least on, like, you know, Monday, because that's like our in-office day. And it kind of looks like not a lot of people go to work on Friday, just anecdotally speaking, at least here in New York.
Understandably
judging by the
so.
Subway, I don't know.
Well, we're all here, right? We're in person, but I think this is really interesting for Starbucks. I mean, I was just at Starbucks yesterday and I had a nice refresher. I don't know if you guys have had the refreshers, but fantastic. And we're really seeing, you know, Starbucks really just trying to do better. They're trying to have a turnaround story here. So I guess they need people in the office to do it.
Well, it starts with the culture, according to Brian Niccol, who's the CEO of Starbucks. You know, we're keeping an eye, of course, on the tariff story. And even though there's new threats of tariffs and companies still aren't able to say very much, there is evidence that it is affecting certain industries. The world's largest swimming pool maker says it will likely hike prices for a second time this year because of Trump's proposed tariffs. This is a Spanish company, Fluidra, talking about this. And they said how much they can't say right now really depends on what gets announced about China in the coming weeks.
Yeah, and this is kind of what I'm really interested in for this particular earnings season. The idea is whether we're going to hear more companies, certainly more U.S. companies, start to talk about the potential impact. We just had Nadia Lovell on the TV program a little while ago, and she was kind of alluding to this idea that we've collected in this country more than $100 billion in tariff revenue. But of course, we know that comes out of someone's pocket. And at least for right now, we have not actually seen that show up in some of these income statements or in some of the inflation data, and I do wonder if that's about to change.
And that's why the guidance tomorrow and throughout the rest of earnings season is going to be so important, the commentary that we hear. Although, is there more clarity? That's, you know, about what the actual policies are.
At some point, company executives just need to say how they're moving forward, even if they don't have the clarity, right?
Yeah.
Absolutely.
Okay, we'll
How
wait
big
till
of
then.
a swimming pool do you have, Scarlett?
Mine is massive.
All right, party at Scarlett's this weekend. Thanks for the
Let's
invite.
do it.
Looking forward to it. That is going to do it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, and Bloomberg Originals. We will see you back tomorrow, same time, same place. Scarlett, welcome back.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Welcome back to Bloomberg Business Week Daily Radio, right? We're daily.
We're everything.
We're everything. I'm Norma Linda, filling in for Carol Masser today, sitting here with Tim Stenivek, and I'm looking at a market that ended in the green, so seems like we edged up a little bit here, but I really wanted to talk about sales, Tim. Every year, Amazon hosts an annual Prime Day sale, but this year's was different. Instead of its typical 2-day stretch, the online retailer doubled its usual duration, and results were historic. Although sales were slower during the first 2 days of the sale, demand accelerated later in the week, and that's according to data from Adobe saying that the sale boosted online spending across all U.S. retailers by 30.3% to $21.1 billion. We have Brooke May, managing partner at Evans May Wealth, joining to discuss her takeaways from this year's Amazon sale and what it tells us about the broader economy. Brooke, thanks so much for joining us today. What were your takeaways this year?
Well, Amazon Prime Day was a hit. As you mentioned, they moved it from a 2-day event to a 4-day event, and it paid off. Sales were $24.1 billion. And to put that in perspective, when we look last year at Black Friday, online sales were $10.8 billion. So it was the equivalent of 2 online shopping days for Black Friday, up 30%, as you mentioned. And it was really incredible for Amazon to see it do so well.
So what's this telling us about the economy and the way that consumers are thinking about discretionary income?
I think it's telling. When you look at the areas or the categories that people were buying in, they were looking really at all 35 categories. We saw strong demand. However, there was especially strong demand in electronics and high-end appliances. So consumers were looking to trade up, and they could afford to do so because of reduced prices. In addition to electronics and appliances, we saw strong back-to-school shopping. Everything from school supplies to lunch boxes to dorm room necessities. But really, interestingly, the highest selling items were the Fire Stick HD, the Ring doorbell, Apple's AirPod Pro 2s, and Dawn's Power Wash dish spray.
50% of those.
That would be on the list.
50%. Okay, so 25% of those everybody needs, and that's soap. Okay, 50% of the things you mentioned are actually Amazon-owned companies.
Mhm.
So that tells you, is that about okay, what the company has on sale, or is it about a commentary about Amazon getting into many different areas of our lives? What is it telling you? What was popular?
Oh, I think it's a little of both. When you look, Amazon has a tremendous number of products that are household names. In addition to that, though, there's some pricing power and being able to price those items in a way that can drive additional sales.
Mhm. So is this typically a big revenue generator for Amazon and the Prime Day sales? I mean, I know I'm always scrolling, had to check a couple things out this week, but is it usually a really big revenue driver?
It is. However, margins are thin. With deep discounting, you don't necessarily get the wide profit margins. However, the sales volumes were there. Interestingly, a lot of Amazon's competitors, Walmart, Costco, Target, had parallel events during the same time. And with competition, you'll see that you get pricing pressure. So yes, revenues were strong. However, profit margins were really squeezed.
I found it super interesting that when the Prime sale just started, everyone was really nervous that it was not going to generate much revenue. It wasn't doing too well.
Right, we were seeing those headlines. It's down X percent versus last year. But Spencer Soper, who writes about Amazon, said it's too early to tell because it's 4 days now. We have to look at it differently.
Most definitely. It makes me wonder, are people just waiting to the last minute? Are we waiting until the sales about to end?
Or did the deals get better? I mean, this stuff is dynamic.
What
it's really hard to understand.
Oh, you're asking me what changed. Sorry.
Oh, yeah. You're the one with the answers. We're the ones with the questions.
Yeah, I think there's some procrastination there. I don't really have an explanation for why momentum picked up. People could have known that they've got a little bit more time on their hands, so they don't have to jump and they can do a little bit more price shopping. We saw actually this year generative AI tools used to search. And as I mentioned before, we had competitors offering similar events during that same time. Generative AI tools or assisted shopping was up 3,300% year over year, which speaks volumes to how it's been integrated into our everyday lives. In addition to that, though, we saw social media influencers having an impact. Social media influencers sales that they were able to derive or push to Amazon Prime were 10 times what the sales were for social media overall. So it's interesting to see these trends and how people are shopping a little differently. In addition to that, when we look at how sales came in, more than half of the sales came in through mobile devices versus online shopping on desktops. So there are definitely some macro trends on how consumers are buying. And it was really interesting how that showed through with Amazon's Prime Day event.
Brooke, I always wonder, are these real deals? I miss back in the day where you would get these massive discounts when you would go shopping, or is it more or less vendors hiking up the prices right before to make it look a bit discounted later?
I think there's a little of both. Some highly purchased products, the price is known. People know what Apple's AirPod Pros cost. And so they're able to do, a price comparison, and they know when they're getting a good deal. Consumers right now are fairly savvy, due to the inflation we've experienced in the last few years. Consumers watch and monitor prices, and they use events like this to purchase items that they've been waiting to purchase. And then there's also some impulse buying. You know, I know personally, I go on and I scroll, and if I see a good deal, I'll jump on it.
Right.
And it's not because it's something that I've been shopping for, but it's something that appealed to me in the moment and felt like a good value.
Hey, Brooke, before we let you go, I want to broaden the conversation a little bit because you cover it all. We're talking about Prime, but you cover the economy at Evans May Wealth. You have to know about all this stuff, given what your clients are looking for from you. The big risk right now, do you think that the equity market is accurately pricing in the threat of tariffs?
No.
In a word, you have more time than that. Why not?
The probability of a recession, it's interesting. In April, it was 60-some%, and now it's back down to 20%. So the market isn't pricing in a recession right now. They're not pricing in, you know, tariffs. The market's trading at 22 times forward earnings. That's not cheap. And the hope is that when tariffs are imposed, they're going to be less than stated. And ideally, manufacturers, retailers, and consumers are all going to be able to share in that burden. Companies are trying to get more efficient to be able to absorb some of those additional costs. Time will tell, though. We don't know right now what the full ramification of tariffs are going to be. However, we think that they won't necessarily be as bad as stated and be completely destructive to the economy.
Super quickly, do you expect tariffs to show up in this earnings season?
Just 10 seconds.
No, I don't. I think that it takes 2 to 3 months to see once tariffs are imposed, them actually feed through. So it's probably going to be Q3 if we have some clarity.
All right, Brooke, always good to check in with you. Brooke May, managing partner over at Evans May Wealth Management. The company's got about $1.5 billion assets under management. She joins us from Carmel, Indiana. Coming up next on Bloomberg Business Week Daily, made in America, designed in America, made in China. We break it down next.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher, NASDAQ at a record, and this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses, Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at Bloomberg.com or Oracle.com/Bloomberg. S&P today did advance by 8 points, 62.68, up 0.1%. NASDAQ up 54, 20,640, up 0.3. The Dow up 88, up by 0.2%. 10-year 4.43%. The 2-year 3.89%. Gold down $10 the ounce, down 0.3%. And West Texas Intermediate crude down 2.3%, 66.89 a barrel. Bitcoin at 119,000 did climb above 120,000 earlier today. Bitcoin up by about 0.5%. Meta Platform CEO Mark Zuckerberg says the company is building several massive data centers to power its artificial intelligence efforts, with the first one expected to come online next year. Meta today up by 0.5%. Our Mag 7 index up by 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. I'm Tim Stenovec, and that is Norma Linda in for Carol Massar. We're both here in the Bloomberg Interactive Brokers studio.
Yes, with the design in America but made in China business model brewing uncertainty after President Trump's trade policies, several large company founders have explored ways to repatriate production. But the obstacles are many. Between higher costs and complex supply chains, companies are growing frustrated with the lack of clarity and notice on tariffs. Some founders are saying that a 90-day notice period could be a good remedy for small business owners to navigate the challenges. Christina Lindblad, global economics editor for Bloomberg Business Week, joins us to discuss how Shark Tank-like companies are feeling the bite of Trump's tariffs. She was the editor on this story. Christina, talk to us a little bit about how this story came about.
Well, I was actually thinking about how I had watched a clip of Shark Tank in which these founders told the judges that they had set up a production line in the United States, and one of them said, "That's crazy," and then
it is crazy.
And then I thought, how are these companies, so many of them which follow, this sort of Apple model, designed in California, made in TK somewhere else, cheaper.
Usually China, increasingly
or
sometimes
Vietnam,
India.
or
Vietnam.
And how are they faring through all of this? Because they don't have the lobbying arm and the deep pockets to have their margins be eaten away like this. So we decided to go out, and we went through we cast a whole bunch of companies, and we decided to focus on 4. And we did basically as told tos, so it's like directly from their mouths. And we asked them a bunch of questions about how, what kind of tariffs they were paying right now and what they were looking to do about this. And several of them said that, well, actually, some of them said they had started out making their products in the U.S., but pretty shortly realized that wasn't going to work out. That one of them said the product was so expensive nobody bought it, and that they were contacted by a Chinese company that was already making something like what they made. And then the other thing we heard frequently is that by going to China or going to some other countries, you get like a full operation. Like, you don't have to be, what people were saying is if you're a small company in the U.S., it's like you're having to watch out over all these different parts of production. Like you're importing this and that, and making sure it's all going to the plant. That in China, like somebody was saying, we'll take care of all of that for you. And then also we talked to a person. She makes this little contraction called a click and carry that you snap 2 bags over your shoulder.
It's kind of brilliant.
I bought one immediately after.
Do you like it? Do you like it?
Did you buy it after seeing it on Shark Tank?
I know after
you wrote the story.
Before we wrote the story,
Okay.
because I read the transcript and I thought, oh yeah, this is like your bags are always sliding off your
That's
shoulders
funny.
when you go to the green market. Anyway, and she said it would take a minimum of 8 months to bring this back to the U.S., and it would involve something like getting a mold maker in China, because there are barely any left here in the US, to design the mold and bring it back and forth, the designers would be here, the mold maker in China, back and forth, sent it back and forth for adjustments, right? And finally, once you had the mold, you still have to import the resin, the plastic resin from China. And you'd probably, she said, I'd have to find a factory that had a high degree of automation, so that kind of beats the whole idea of like job creation, for the tariffs. So yeah, it just seems like some of these, the small businesses really have a hard time right now trying to figure out what's next.
So net, would it be possible for any of these companies that you came across in the casting call to actually do this in the U.S.?
Right now, they said that at the level of tariffs they were facing, and let's be clear, 2 weeks ago when we were talking to them, no, it's not worth it for them. I mean, we could be talking to them if we were to go back to them. Who knows? After August 1st, perhaps. Although I would suspect some of them would just be out of business.
One thing that we've been talking about quite a bit over the last few months is, okay, who eats these tariffs? And the picture that we've gotten from talking to different CEOs is sort of like, well, everybody in the supply chain. So our earnings will take a hit. We'll absorb some of them. Maybe we'll raise prices. Consumers might pay a little more. That's for big companies. What about for these tiny companies that are watching every cent?
Well, I mean, there's one woman, the founder of Click and Carry, she was saying that, she actually had taken out a loan and sold out a bunch of stocks in the fall because she had been selling online, and she was actually starting to sell through retailers. And she's saying, well, I approached all these companies with a certain price. This is what I told them, like, I can provide this to you for this price. But now, with tariffs, I'm going to have to go back to them, and quote them another price. And she's scared, that some of them will drop her product because they've only started carrying it a few months ago. And some of them she hasn't even gotten in. I mean, she has enough, I think, to supply everyone, all the contracts that she has through early summer. But yeah, a lot of companies were talking about how the uncertainty towards the back end of the year when they're having to restock.
Yeah, like we spoke to Levi's on Friday and the company's CFO, and they said this in earnings too, that about roughly half of their inventory for the remainder of the year is already in the US.
Right.
So that's kind of free and clear at this point.
Oh, most definitely. But I know you mentioned earlier, you were talking about a company that you said they were wanting to pass on some of the tariff impact toward the customer, but customers are just unwilling to pay.
Yeah, I mean, I think if you're a young business and you have your foot in the door with some of these retailers, and you don't have a long relationship, you're going to be really scared to do that. So mostly we heard the story sounded like it was going to be the importers eating the tariffs. I mean, I think there's a misconception, largely because of the way the White House talks about this, that it's the exporters eating the tariffs. And, we did hear stories at the beginning of Walmart pressuring Chinese suppliers to lower their prices in order to compensate for the tariffs. But even there, we heard that many of them were saying no. I mean, a small company just does not have that kind of leverage, really. So
what are people, I mean, you cover the economy more broadly. So just outside of this story, if we were to just bring in a broader context, what are people saying about the impact of tariffs on the U.S. economy?
We haven't seen it in inflation yet, although I think we have a print this week, which
tomorrow,
which may throw some light on all of this. I think it could be, a lot of people say, because of this dynamic in which many people knew tariffs of some level were coming right after Trump was elected, right? And there was this big bump, the surge in imports. We haven't seen costs go up because of that, because people are selling down the inventory they already have. I do think there's still a lot of question marks. And also there's been, this kind of whack-a-mole effect where it's just sort of like, okay, it's going to be 145, but now we're going to suspend it. Now we're going to throw it to August. I'm personally really interested in looking at investment figures at some point. I suspect that this year may be one of the lowest, may show a big fall off of corporate investment around the world.
Which is the Not exactly, like the opposite of what Trump, the president,
Well,
wants to see.
he'd
He
like
wants
to
see
see
it
more
that
investment in the
US.
U.S., but I think the uncertainty is just leaving companies kind of probably
Scramble.
saying, I'm
So-
going to sit it out.
So that's what I wanted to talk about. You mentioned the whack-a-mole. Is it going to be 145%? Is it going to be what was on Liberation Day? Do you have to wait and see what the letter says on True Social to understand what the effect of tariffs is going to be on the country that you manufacture in? Does it mean that there's sort of a stasis here with these small companies that you talk to, or are they plowing ahead and moving forward?
One of them is fortunate and has suppliers in many different countries, and they sound like, you know, and they were lucky. I think it was, you know, Turkey was their main supplier, and that wasn't one of the countries that had a, you know, the thing is, we're going by what Liberation Day, you know, like the charts, you know, and Turkey wasn't, you know, very severely affected, you know, so, but you never know. You never know. I mean, because now we're seeing duties used for purposes other than just delivering trade deals, you know, in the case of Brazil.
Yeah.
And Bolsonaro and you know, Trump's friendship with Bolsonaro. Like, you know, so that's been an issue where, you know, we're seeing tariffs.
Yeah, just to clarify that, he basically said that this was not about the trade deficit because we have a trade surplus with Brazil.
Yeah.
Instead, this is a punishment for the way that Bolsonaro is being treated
Yeah,
and
the former
prosecuted
president.
by the current president.
So the story talks about the fact that some founders are saying that they'd like to get some sort of notice,
Yes,
even a
yes.
90-day notice. Talk to me about that. What are they thinking?
That was
and
interesting. I hadn't
what
heard that
format?
before. People were talking about getting an advance notice about when tariffs. One person said just like an advance notice and when tariffs are going to go up. Another one said can get an advance notice if like there's a group A of countries, you know, those tariffs will go up and these will go down. You can't really wage a trade war like that, though. I don't think, you know. So, well, we're certainly maybe you can, but certainly not how it's being waged now. I just think it's just like a difficult time for people to make decisions, and what came through is they wish they had more wherewithal, you know, to like adjust. And also, you know, you're talking about small businesses sometimes with like, I mean, some of the people we talked to had less than 3 people full-time staff, you know?
Yeah, they're shipping one container of something at a time.
Right, exactly.
Which is a tiny portion of what you see on a cargo ship.
Yeah, I mean, we had one person who we didn't end up, you know, choosing for the package who had to go back to her old job, you know? So, yeah.
Well, it's a great piece, Christina. I encourage everybody to check it out. It is in Bloomberg Business Week. Christina Lindblad is the editor of it. She's global economics editor for Bloomberg Business Week. She's also the brains behind the idea for it. So everything Shark Tank, address those questions to Christina Lindblad.
Okay, I got to tune in.
You got to tune in, or you just got to read everything in Bloomberg Business Week, and then you can get the update. Hey, stocks finished the day higher, but not by much. The S&P 500 up more than 0.1%. The Dow up 0.2%. The Nasdaq up 0.3%. Coming up next on Bloomberg Business Week Daily, we're talking drugs.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher. We've got NASDAQ at a record, up 54 points today, 20,640 on the NASDAQ Composite Index, up by about 0.3%. S&P higher by 8, 62.68, up by 0.1%. Closing near a record, the Dow up 88, up by about 0.2%. Traders send stocks higher after parsing President Trump's latest tariff remarks, with the market gearing up for results from big banks tomorrow morning. Also, a key report, CPI on inflation. So the 10-year yield today, 4.43%, the 2-year 3.90%, gold down $12 the ounce, down 0.4%, 33.42. West Texas Intermediate crude at 66.92 a barrel, down 2.2%, and Bitcoin up 0.9%, 120,190 on Bitcoin. As for investor sentiment, Brooke May is managing partner at Evans May Wealth, and she was a guest right here on Bloomberg Business Week Daily.
The hope is that when tariffs are imposed, they're going to be less than stated. And ideally, manufacturers, retailers, and consumers are all going to be able to share in that burden. Companies are trying to get more efficient to be able to absorb some of those additional costs. Time will tell, though. We don't know right now what the full ramification of tariffs are going to be. However, we think that they won't necessarily be as bad as stated and be completely destructive to the economy.
Brooke May of Evans May Wealth, interviewed right here on Bloomberg Business Week Daily. General Motors and LG Energy Solutions plan to add more battery production lines at their joint venture part in Tennessee to make lower cost cells starting in late 2027. GM today down 0.1%. Recapping stocks higher, NASDAQ at a record, S&P up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks, Charlie. The global biotech industry is experiencing a tectonic shift. I'm Nora Melinda, in for Carol Masser, here with Tim Stenovic. So China's drug makers have come a long way from their copycat days and are now challenging Western dominance on innovation. Bloomberg News health reporter Damien Gardet joins us in the Bloomberg Interactive Broker studio to discuss the Bloomberg Business Week story on how Chinese drug makers are disrupting the global biotech power dynamic. Damien, how much of a player has China historically been in the pharmaceutical space?
Not much, or at least not in the quest to invent new novel treatments for serious diseases. For many years in the pharma world, China, probably much like the role it played in other industries, was kind of a source of cost arbitrage. You could get cheaper labor, cheaper raw materials there, but it wasn't a place where Western countries and Western drug makers looked for innovation, as it were. And then over the past 10 years, you would read articles like, look out, China's coming, they're building this up. And like many things, I think, with respect to China, it was gradually and then all at once. And then we kind of woke up, and as a result of a series of policy changes, as you point out in this story, it's pointed out that China now accounts for the second most novel drugs in development of any region in the world, surpassing the European Union, which for many years had been second to the United States, and China is now very close behind the United States on that measure.
When you think about the countries or regions and the equivalent of the FDA approval process in Europe, the European Medicines Agency, these are two of the strictest governing bodies when it comes to approval of medicines, no? Mm-hmm. How do these regulatory agencies view drugs from China?
I would say, I mean, for one, the FDA is established as kind of the gold standard, and countries around the world seek to emulate the FDA.
Which we'll talk about a little later, because it's going through a lot of changes under RFK Jr.
Right. The gold could be arguably being varnished. But in the meantime, the FDA's approach has been that they have granted a lot of breakthrough designations or other kind of statuses upon Chinese invented drugs that suggest that they're better than what's out there. So that's kind of a laurel on Chinese science. However, the FDA has taken, I think, an understandable tack, which is that they will not approve a medicine for people in the United States if its clinical trials were done solely in China or solely in any other country, for reasons of, honestly, equity is one of them, but even just like scientific validity. People from different parts of the world have different genetics. And so if I study a cancer drug only in, for example, India, can I really say that the benefits I see in that trial will apply to everyone in the United States?
So if you're a developer in China of a medicine, wouldn't you then do a randomized clinical trial or randomized controlled trial in a way that then would get acceptance from the European Medicines Agencies and the FDA.
You would if you wanted. That would be the next step, I think, with this nascent Chinese biotech industry. Because what we've seen so far is that Chinese companies are very good at inventing these novel drugs. But when it comes time to do the kind of trials you're describing in the United States and in Europe, they will often seek to partner with a Pfizer, a Merck, a Sanofi, who will foot the cost in that and also will have the expertise of running a global clinical trial that a Chinese startup may not necessarily have. What we may see in time, and well, almost certainly we'll see in time, is one of these Chinese biotech companies growing into a Pfizer-like entity unto its own, where it would not only just compete for research spending, but compete with Merck, with Pfizer, the way that Johnson & Johnson might.
Mm-hmm. Damien, the story talks about the fact that China's biotech firms have an advantage conducting research cheaper and faster. Why is that?
I mean, for one thing, everything's just a little cheaper in China, but in terms of the speed of it, that dates back to a 2015 effort that the Chinese government instituted, where they wanted to bring about in the future the present that we see today. So they enacted regulatory reforms that made it easier to recruit clinical trials. China has a nationwide network of hospitals that makes it faster and more convenient to do this kind of thing. And then they allowed, I don't want to say cut corners, but perhaps a more streamlined approach than the FDA and the EMA have had traditionally. And as a result, Chinese companies were able to catch up far more quickly than I think a lot of people assumed.
Have you guys heard that they call Diet Coke fridge cigarettes? Have you heard this?
I don't think
I've never heard this.
Yeah, I heard this recently, but I'm kind of an old, so I don't know if the youngs are saying that. What freezer cigarettes, ice cream, at least in my house, that's kind of how it is.
Interesting.
So it's Crypto Week in Washington, but it's also Ice Cream Day in Washington today?
At least at Health and Human Services, yes. So RFK Jr., Robert F. Kennedy Jr., the head of Health and Human Services, today had an event in which they announced that a group of 40 ice cream producers in the United States have voluntarily agreed to remove a series of artificial dyes from their products, I believe by the end of 2027, in keeping with the sort of broader RFK, Make America Healthy Again effort, which has really zeroed in on certain dyes, food dyes in the United States.
You know, I have to tell you, when I think about food dye, I did not think about ice cream, Nora.
At all. I mean, I'm
eating
a
the wrong
cookies and
ice
cream
or
girl.
or is this stuff just so present in everything that we eat
that we just don't
it's
even
just
notice?
not even our radar?
I would say yes. Yeah, it is kind of like trying to teach a fish what water is.
Yeah.
Like,
Exactly.
We in the United States are kind of swimming in processed foods.
So ice cream is ice cream. So this is the many big food companies, including ConAgra, Nestle, Kraft Heinz, and General Mills, have pledged to remove synthetic dyes from large swaths of their food. This is going to take a long time. What do these commitments mean? Does it mean that we're going to start seeing different looking ice cream in the stores?
In theory, well,
Or different, not different
I
tasting.
was going to
'cause
say,
food
I guess
dyes.
a lot of ice cream is sold in clear containers at this point, so it would be visible to you. In theory, the thing that I and many others have kind of made a note of is that all of these agreements today are voluntary. Manufacturers have said they will do this, not to disparage the word of America's proud corporate entities, but they don't always follow through on things, and they think in the long term, and this administration is a temporary proposal. RFK's leadership of HHS is a temporary proposal. So I will be interested to see, let's say in 2028, how many of the great big sweeping promises from food companies and beyond that were made in the first year of RFK's HHS actually hold through in the years to come.
It's so funny because when I think about ice cream, right, I feel like you kind of already know what you're getting yourself into. I mean, I didn't know there were dyes in ice cream really until today, but it makes sense. But I just feel like you already know that's the junk food that you're going for. So curious if it's going to change the taste at all. That's my curiosity.
It shouldn't, but I think it's a good point though. Like I haven't done a Cochrane review of like safety statistics, but like, are these dyes in isolation that much more or even incrementally more unhealthy than the stuff that we all already know
Consuming.
is in ice cream and that we are deliberately consuming when we buy it?
And reaching for.
Ben and Jerry's, Haagen-Dazs. What's your flavor? What's your pick?
I like Van Leeuwen. Is that how you
Oh
pronounce it?
yeah, of course. That's very New York.
Fire.
Okay.
So good.
Okay.
I
Very
almost
bou-
never
bougie.
buy ice
Very
cream.
bougie.
Very,
just-
very bourgeois.
I would prefer a Van Leeuwen. I think Ben and Jerry's.
I know. I didn't even
things
choose
being
one of your
laden with
options.
ingredients. I always think like, what is this?
I'll go Haagen-Dazs if I had to choose between the two.
I like this.
Dolce de leche.
All right, high class ice cream taste here. Damien Gardet, Bloomberg News health reporter. Also Nora Melinda in for Carol Masser. Coming up next, stocks on the move. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. That is Nora Melinda. She is in for Carol Massar. I'm Tim Stenovec. S&P 500 up 0.1% today. The Dow up 0.2%. The NASDAQ up close to 0.3%. A lot happening this week. We're going to get a read on inflation with CPI tomorrow. And then we've got a host of companies, including
Earnings
the big banks,
galore.
reporting earnings.
It's nonstop. It's going to be like a flood, that will follow. But
It's like our quarterly Super Bowl.
exactly. I'm always looking forward to it.
Hey, I'm Tim Stenovec along with Nora Melinda in for Carol Massar. Let's take a look at some stocks on the move today. We're joined right now by Christine Aquino. What do you have on your radar?
Well, Tim, let's take a look at water, shall we? Biggest decliner on the S&P 500, ticker WAT, shares down more than 13% at the close. It's the worst performer, as mentioned, on the S&P 500, and that is because it said that it will merge with Becton Dickinson's Biosciences and Diagnostic Solutions in a reverse Morris Trust transaction. That's a mouthful,
Excuse me?
Right. That's essentially a tax optimization strategy that they often use in M&A deals, just to make it simple. But yeah, that was a deal valued at about $17.5 billion. And, Water is reporting a bunch of synergies, a bunch of cost synergies and revenue synergies because of this deal. But then the word on the street is that, investors aren't necessarily expected to view this positively in the short term, just because there's a bit of dilution. It will take time to implement these strategies. But, Waters is saying that they are expecting about $345 million in annualized EBITDA synergies by 2030. So let's see if investors is willing to give it the benefit of doubt eventually.
I had to talk about that transaction on the closing bell. Such a mouthful.
It is. So
But
many
I-
words.
So many words to put together. But I was looking at what the analysts were saying as well about the stock. Jefferies was saying that they expect the stock to trade down due to deal size and variables added to a clean replacement cycle story. Shares are down, about 18% year to date?
At one point, yeah. And 13% of that just today. So
Right.
yeah, not positively received at first blush by investors.
What else are you looking at?
Looking at Autodesk, so one of the outperformers on the S&P 500 today. So ticker ADSK, shares are up more than 5%. And so this is kind of a reverse of what we saw with Waters. So this company saying that it is no longer pursuing an acquisition of PTC. That is according to people familiar with the matter. And so that would have ranked as one of the year's largest deals so far. But investors weren't necessarily happy about this. So the shares have fallen more than 10% since the 8th of July. So that was the day before Bloomberg News reported it was considering an acquisition of PTC. And so now that they're no longer doing that, investors are taking that as a positive sign. Potentially, maybe they just didn't like the sound of this deal.
This one was interesting from last week because we saw both companies decline after the deal was announced. Typically, you don't see that when it comes to an acquisition. So there was something that investors didn't love about this.
Yeah, exactly. And so now they're happy that is no longer happening, evidently, from the share move today.
Okay, PLTR is the ticker. Palantir is what we're talking about.
Palantir.
This is a $352 billion market cap company. Absolutely unbelievable.
Yeah, and it's been on a tear today, Tim. So we did see shares hitting record highs. They're up about 5% at the close. We've seen a few positives for Palantir, right? The most recent one would be President Donald Trump apparently is set to announce a $70 billion investment in artificial intelligence and energy in Pennsylvania on Tuesday. So that's tomorrow. That's going to be part of the inaugural Pennsylvania Energy and Innovation Summit, and executives from Palantir are expected to attend. So potentially we could see some tie-ins there. And then, other things going on that are positive for Palantir. We've seen 13F filings, Gateway Investment Advisors boosting its stake in Palantir for the 30th June quarter. And Wedbush analyst Dan Ives last week raising the target to $160 from $140 and maintaining the outperform rating. So we've just seen that stock really kind of steadily tick higher over the past week.
It's interesting. I mean, for an investor that hopped in on this trade 5 years ago, stock is up 1,957%. That's insane.
I didn't even know it was public back then.
Right? It's
You
just
could have
now-
bought and held. You could have bought and held, Tim.
It's up 97%
year to date
so far this year.
It's on a tear.
It's on a
as
tear.
you said.
Yeah.
Just nonstop through the wind.
Wow, that's pretty amazing. Christina Kino with today's Stock Movers. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts. As we mentioned, it is a big week when it comes to economic data. We've got CPI before the bell tomorrow. Tune into Bloomberg Radio for the latest numbers there. CPI month over month expected to come in 0.3%. Same with the core CPI as well. Year over year, we're expecting to see 2.6%. And excluding food and energy, we're supposed to see that come up 2.9%.
And we get PPI the following day as well. I know CPI is what we really care about, but PPI is coming through as well. There's going to be a lot to follow this week. Retail sales later in the week as well. And as you mentioned, just a slew of earnings. So it's going to be a lot for Wall Street to parse as we're going through the coming days.
So there's also big bank earnings tomorrow. JP Morgan, we get Bank of America on Wednesday. We got Netflix this week as well. So yeah, no shortage of things to talk about.
No shortage at all.
Thank you so much.
Thank you
for hanging out with us again. That was
Too
a lot
much
of fun. You'll be back again this week.
I'll be here Thursday.
Okay, she'll be back on Thursday. That's Norma Melinda. She is Bloomberg News equities reporter. She's in for Carol Massar this afternoon. Check out all of her reporting and the entire equities team's reporting at Bloomberg.com and on the Bloomberg terminal. I'm Tim Stanavek for Norma Melinda.
All right, guys, I'm going to close the stream down for today. Be back tomorrow. I'm going to try and figure out, I'm going to download that game, the Star Trek, was it Fleet? What the hell is it called? Star Trek Fleet Command. I'm going to try and download it by tomorrow. Figure out, make sure everything works and figure it out. And then maybe like tomorrow, if like when we're done trading for the day, I'll play it for a while and see what we think. But I'll get all that set up. We'll be back in the morning and maybe we'll play the game tomorrow afternoon. But I appreciate you guys hanging out all day with me, and everybody have a good evening. Thanks.
You're very unhappy, I am, with Russia. We're going to be doing very severe tariffs if we don't have a deal in 50 days. This is